little bit of payback for the volunteer work that they've been doing for the site for a long time, who then decide to go ahead and drop it pretty quickly. Does that concern you?
It doesn't concern me because I think that generally, if you've kind of been on Reddit and you've been participating from last 10 or 15 years or last 2 years, whatever it is, you're probably just going to be naturally a contrarian, a little bit bearish. But I think that eventually the marketplace will win you over. So I think I think it might be a nice payday, but I don't think it'll have any effect long term on them.
Meaning that you plan to be a long-term shareholder? You're not going to sell your stock in the next few months?
Well, I can't. Anybody that participated in previous rounds,
you're locked up.
Yeah, we're locked up for at least 6 months, I believe, but I don't know at least 6 months.
Tom, Reddit has been such a fan favorite, a place that people love to go and has such huge loyalty from the people who are users. But at the same time, the company's never been able to make money. Why do you think that is?
Well, I think it's because they never really had to. I know that sounds kind of crazy, but one of the nice things about Reddit going public is it's going to force them to learn to be profitable. And remember, that's happened to a lot of companies. When you're a private company, it's easy to raise capital. You have a little bit less incentive to learn how to make money and learn how to be profitable. Once you go public, you don't have any. There's no escape. There's no other path you can take. So I think Reddit. I think it's very natural, and Reddit will learn how to monetize. Their customer base is huge, and their participation level is really steady. I think they will learn how to monetize their customers, and they probably will surprise people.
Just this week, we heard this claim from Nokia about patent infringement. Have you been able to dig into that or get any details on it?
Not dig into it at all, but I read about it just like you and everybody else. I kind of feel like it's kind of a PR play, kind of a cheap shot by Nokia because they figured they'll get some press on it. So I don't read anything into it. I kind of think it's almost like every time a company files for an IPO, somebody files a lawsuit because they think it's an easy settlement. I kind of think it's the same thing for Nokia. I don't give that any leverage whatsoever.
Okay, Tom, thank you for joining us today. Tom Sosnoff.
Thanks.
Coming up, a look at what's moving in the pre-market, the futures right now. You can see indicated down on the Dow, up on the NASDAQ. Schwarzbach will be right back.
Time now for today's Aflac trivia question. What is the fastest ocean animal? The answer when Squawk Box returns. And now the answer to today's Aflac trivia question. What is the fastest ocean animal? The answer, the sailfish. It can cruise through the water at 68 miles per hour.
Way too fast.
All right, welcome back to Squawk Box. I'm Dominic Chief. A look at this morning's movers. We'll kick things off with a check on a couple of Dow components. First, Intel. Those shares are higher by just roughly about 3.5% at this point, over 1 million shares of trading volume. The chip maker is going to be the beneficiary of the latest round of federal funding from the CHIPS Act. The Biden administration unveiled plans to award up to $8.5 billion in direct funding to Intel to help further boost chip manufacturing capacity here on U.S. shores. Intel could, by the way, get also up to another $11 billion in loans from that program as well. President Biden is slated to announce that award in Arizona later on today. We'll get more on that story for that massive funding deal when Intel CEO Pat Gelsinger joins Squawk on the Street later on in the 9 a.m. hour. A must-watch interview there to talk about the state of the computer chip business. Moving on to another Dow component in Boeing, which is down roughly 1.5% at this point, just around 75,000 shares of volume. The aerospace and defense giant's chief financial officer, Brian West, offered an update on current plans for the highly scrutinized 737 model jet production program, saying that the plan is for Boeing to keep production at less than 38 aircraft per month. It's going to impact cash flows. It's only going to accept fully conforming fuselages from supplier Spirit Aerosystems. The update is the latest development on the safety and manufacturing processes after a mid-air blowout of a door panel on an Alaska Airlines flight back in January. On the earnings front, check out shares of General Mills, which are up about roughly, Chipotle is 6.5%, but General Mills is up roughly 8.5%, or General Mills there, 1.5%. The packaged food company may be best known for brands like Cheerios and Chex cereals, also Progresso soups, Haagen-Dazs ice cream, reported earnings and revenues that both topped analyst estimates, helped along by results in North America and in its pet food business like Blue Buffalo. That helped offset some of the weaker sales in international markets. And then let's move on to what's happening with the freshly prepared stuff in Chipotle Mexican Grill. It's just about up 6.5%, setting perhaps what could be a new record high stock price. This morning, kind of thin trading market volumes here, but shares do get a boost after it announced that this 50-for-1 stock split. The shares will now be priced at roughly $56 a share based on last night's close, 50 times the number of shares outstanding. Doesn't change, of course, the market value, guys, but Chipotle could get more stock accessibility, Becky, to employees and some investors. So Chipotle up 6.5%. Breakfast burritos on my mind. I'll send things back over.
We were talking burritos earlier this morning. That is a big burrito to split, though. Amazing that they've never split the stock.
Amazing that they've never had to.
Yeah. And amazing their growth over the year. We were looking, it was up at more than 82%, I think we were looking earlier this morning. I mean, that is technology company sort of returns. You show that stock and the returns on that, it'd be hard to guess that was a burrito company.
And it's not just that. I mean, I'm not sure about yours. It's probably a lot like the one local to me. There's always a line. Always a line, almost to the door
kind of
Chipotle.
bad aspect of it. It can be a long process to even get something.
But Joe, you know what it is? I mean, you know me. I'm more of a Taco Bell guy, but you know, Chipotle, it's the young kids. It's like all the high school kids in my town that go to Chipotle.
Yeah. They like cilantro. I don't.
I don't like cilantro. So.
I don't like cilantro. And you're right. Taco Bell. Taco Bell. No, that's enough said. That just ends the debate.
There you go.
Okay.
Thanks, Tom.
You got
We'll
it.
see you later. When we come back, we debate President Biden's tax plan, and later, Bitcoin backer and co-founder of fintech firm Anchorage Digital, Diogo Monica, will join us to talk about crypto's recent moves and regulation in Washington. Squawk Box will be right back.
President Biden's budget calls for tax increases on the corporations and the wealthy. We want, got to be fair. Robert, we got to
be more.
We got to be fairer.
Restore fairness.
Get fair here. Joins us now with a look at some of those potential hikes and changes. I'm just trying to figure how's 70 sound to you? 70% for the top.
Not enough.
That's not fair enough.
It used to be like 90.
It was 90. Let's do 90. Like that.
And one person, Rockefeller, paid it, so it was supposed to pay. Anyway, for right now, President Biden saying his tax plan would shrink the deficit by $3 trillion over the next decade, but it also amounts to $5 trillion tax hikes on companies and high earners. In total, there would be over 100 tax increases and changes in this budget. The largest source of new revenue would be raising the corporate income tax rate from 21 to 28%. Treasury projecting $1.4 trillion from that over 10 years. The billionaire minimum tax, that's the tax on unrealized gains for those worth $100 million or more, projected to generate $500 billion. A hike in the net investment taxes for high earners estimated at $800 billion. Then you take the top marginal rate to 39.6. You hike the capital gains rate to over 44%. That's right, 44. That would add another $500 billion in revenue. Other big raises include eliminating trust loopholes for the estate tax, raising the tax on share buybacks, and Andrew's favorite, closing the carried interest loophole. That's never going to happen. Bottom line, earners making over $400,000 would foot most of the bill, along with companies and pass-throughs. Those making below $400,000 would presumably get a tax cut of over $2 trillion.
Thanks. You're going to be here.
I'll be here.
Because you got all these numbers.
I'm not going anywhere.
What's the top 1% paid? Is it percent again?
46% of federal income taxes are
46%.
paid
Top 10
by the
paid,
top 1%.
Top 10 pays.
Over 80%.
Over 80%?
Yeah.
90% more fair, in your view?
Depends on which side of the aisle
Let's
you
bring
sit,
in
Joe.
former Deputy Assistant for Economic Policy at the Treasury, Natasha Sarin. She's a professor at Yale Law School and a Yale School of Management professor. And Joel Griffith is a Heritage Foundation Economics Research Fellow. And Natasha, I'll start with you. These probably aren't going to survive as they are right now and become law, but what's your wish list? Is that a pretty good summary of it, what Robert just talked about, or are there some things you like, some things you probably wouldn't try for?
Well, sort of big picture, what I hope we can all agree on is that the United States faces really quite substantial revenue needs. Over the course of the next decade, debt to GDP ratios are going to rise to 119%. Social Security and Medicare trust funds are set to be extinguished. So we need to figure out how to raise revenue. And the president's budget does exactly that. It proposes $3 trillion of deficit reduction over the course of the next decade. And it does so by asking corporations and the very wealthy to pay their fair share in ways that I think make a lot of sense. The top 1% has 40% of their wealth tied up in unrealized capital gains that in all likelihood are never going to face any tax liability because upon death they're just going to be passed down to their heirs and you'll get a step up in basis. I think that's unfair. I think the American people think that's unfair, and I think that is reflected in these proposals.
There's the revenue side and there's a spending side, and whenever we, Simpson Bowls, whenever we try to address it, we try to do both. We spent a lot of money during the pandemic. The budget that was just proposed, Natasha, is almost, it's down a little bit from there, but with the economy we have right now, which is pretty strong, we aren't spending any less. We're increasing spending at the same time, and is that okay with you? That's why we're going to 109. That's one of the reasons we're going to 119% of debt to GDP. I mean, if you're going to ask for more revenue, don't you think that on the other side we ought to offset that with some spending cuts?
I think it's important to take seriously, to your point, like this is accounting, like both sides of the ledger here. But I think the point that's really important for your viewers to grasp and that you well understand is like the U.S. is a low tax country. We are like 38th in the OECD with respect to the tax revenue that we bring in. And that's because of over the course of the last decades, regular people are paying the same share of taxes. Labor income is paying an even greater share of taxes than they have historically. What's happened is because of all of these complex corporate structures like partnerships that have all these loopholes, like the one Andrew doesn't like with respect to carried interest, we've seen revenue tail off from high earners and the structures that they own and from large corporations. And I think that's why on the revenue side we need to think seriously about these raisers, while totally agree that we also need to be serious on the spending side as well. And I'll say that President Biden's proposed $3 trillion of deficit reduction. If you look to former President Trump and what his economic plans amount to, they amount to $5 trillion of deficit increases. So there's a very clear fiscal choice on the table in November.
All right, your turn, Joel.
Well, hey, thanks for having me on. Let's first get a few facts straight here. Let's keep in mind the so-called rich already pay a big disproportionate share of the total income. As you mentioned, the top 1% right now are paying close to half of all income taxes. And by the way, that proportion actually grew following the Tax Cuts and Jobs Act. 45% of the working age population is not working at all right now. And if you look at the bottom 10% of income earners, they're actually seeing a net tax credit of 5%. So fairness aside, the rich are already paying their fair share. But what I'm even more concerned about is that when we assault those who are actually creating wealth, it's not just that that is immoral, it actually harms the people that we're actually claiming to try to help. Because it's not as if the wealthy are just keeping all of their resources locked up in a vault somewhere. That money is invested. It's invested in companies, invested in productivity, enhancing features. And that's a big part of the reason why our middle class has grown so much wealthier. 25% increase in real family income in the last few decades. And that's because of the big surge in productivity that is largely due to the fact that we do have a lower tax rate on the wealthy than elsewhere in the world.
And Joel, you're right. The Trump tax cuts, they increased investment, they increased wages, and they turned out to be even more progressive. But if you extend those the way we hear the Trump administration probably would like to, that's going to be incredibly expensive. How would you pay for it, especially given the deficit?
Well, you're right. We do need dramatic reforms in government spending. We're spending $88,000 per family of four right near on federal spending, and we're borrowing $25,000 per year. But this is not a revenue problem. Revenue as a percentage of our gross economic output has been relatively stable for decades now, whether you've got a 90% tax rate on the wealthy or whether you have a 30% tax rate on the top. What we need is real reforms, and sadly, neither leading presidential candidate has really put forward a plan to address the long-term cost drivers. The so-called Social Security Trust Fund will be completely out of money in 2034, which means politicians are going to be forced to either raise taxes largely on the middle class to pay for that, or resort to the Federal Reserve printing presses to buy up government debt. Neither is a viable option. If we want to see our middle class continue to grow and to see total wealth produce increase, we have to address those long-term cost drivers. Raising taxes like the president's proposing is not going to resolve this problem. It's just going to hamper economic growth.
Natasha, it's tough, a wealth tax to do, and I don't know what kind of accountant you'd need to. There's so many problems. You know, you pay 1 year, then the assets go down the next year, or it was unrealized. It's a nightmare. But would you at least concede that W-2 earners at 50, whatever with state and local taxes, if you're at 50, 55%, something like that, of what you make, the real issue that you identified are those unrealized gains and all the money that rich people have that aren't. Would you be content to leave the people that are working through July 31st for the government, and then they get a little bit left over after that? Can we leave them alone and just try to find a way to get at...
for a friend, Joe? Is it?
I'm asking for... I live in New Jersey. I'm asking for a friend. Is there a way you can go after that huge amount of money that you're talking about without adding more burden to the W-2 types, poor W-2 schleps?
There absolutely is, and I want to make like a couple of points to what Joel was saying. The first is that to your description of unrealized capital gains, like the effective tax rate on the Forbes 400 on billionaires in this country is 8%. That is lower than the tax rate paid by middle-income
Natasha,
Americans.
that includes unrealized gains. That's
Exactly.
not income as it's defined by the current IRS.
So,
Let's be clear about that.
Well, just to be clear, I totally agree with you that it is an income definition, but just to be clear, those unrealized capital gains are the source of wealth for the very wealthiest. And if you leave them out of your tax system, you're creating a source of inequity and you're creating the revenue problem.
If they're unrealized, that's not one and the same, Natasha. If they're
Well,
unrealized, unless you're borrowing
is
against
in
them,
that
and I can
exactly.
understand
And if you're borrowing against
but
them,
if you're
as
not
billionaires
borrowing
are
against them,
doing.
but if you're not borrowing against them, they are not. I mean, this is a kind of crazy way of going about it. I can understand.
The real tax rate for
borrowing against them, you should be taxed.
and the real tax rate for the wealthiest is probably somewhere over 20-25%.
I fully agree with that. I fully agree
When
with
we're
the fact.
talking, if we're talking about a tax on unrealized capital gains, what we're talking about is in actuality a property tax. And a property tax levied by the federal government is actually unconstitutional. But beyond that, beyond the constitutionality of it, that would be a tremendous hampering of growth. We're talking about confiscating capital at that point. That just doesn't harm those that own the capital. That is going to be a direct impact on the middle class by depressing long-term productivity growth.
So I want to say a couple of things. I want to say a couple of things about the importance of revenue raising and also about this point about W-2 earners that we started with. I fully agree with the fact that thinking through how we raise revenue in the best way from the top is like an incredibly complicated question. I also agree with the fact, and I hope all of you agree with the fact, that today our tax system is a source of inequity, in part because of unrealized capital gains and our inability to think seriously about how to address them, in part, frankly, because we have a tax system that allows the very top to evade their tax obligations. The top 1% isn't paying $200 billion annually of what they owe today, as are large corporations not paying. Microsoft owes $30 billion in back taxes that they're not paying, that they owe today. So I think there's a lot of space for us to do much better than we have historically from these groups.
Joel, thank you. Natasha, I think you should be the person we have when we have these.
He was great.
I didn't get mad. I didn't say, oh my God.
And she knows her facts.
I know.
Both know their facts. We love those guys.
I know. It's International Happiness Day, and I'm still happy, even though we just had this debate. And Joel, you're always good on that side, and you are here just to
with
keep
the numbers.
to keep everybody honest.
Applying the numbers.
I know, which sometimes I don't like when you're keeping everybody honest. But yeah, you like it. Anyway, thank you, one and all. Thank you.
When we come back, we're going to dive into crypto and the move in digital currencies right after this break. We've got fintech founder and crypto backer Diogo Monica. Squawk Box will be right back.
Price of Bitcoin sliding since hitting an all-time high last week. The cryptocurrency dipping below $61,000 earlier today. It was right, Becky. It never did, I don't think, go under 60 at this point. Doesn't mean it won't. Joining us to talk more about the crypto market, Diogo Monica, co-founder of crypto platform Anchorage Digital. As of today, he's a general partner at Hahn Ventures, and he's transitioning from president to chairman of Anchorage. And for people who don't know, Diogo is the Portuguese version of Diego, which may or may not be the Spanish version of James.
Right, that's right. And the way that I describe it is Diego is the Spanish version of Diogo.
Of Diogo, that came first. Yeah, the Portugal is better.
Do you know what it means, though? The Spanish origin, it means supplanter, which is pretty
Exactly right. Yeah.
during your profession.
We have seen stuff happen with Bitcoin that, you know, if you're not ready, if you don't have a firm conviction, there are times it just shakes anyone who's holding one just to the core. It goes, last time I went to 65, I went to, you know, next thing you knew it was 17. Went to 20, next thing you knew it was 2, something like that. So this is probably not surprising that we were at, what is your high? About 74? Where were we last week? It was around 74,000. Right. All right, so immediately we were down as low as under 61. That's a big haircut. Why? I thought that that everybody's holding them, so the ETFs that are buying them can't get any. There's no supply. The halving's coming. How can it move down, whatever that is, that huge percentage move?
Look, the reality is, if you told me a year ago that we were going to have a correction down to 63,000, I would have been ecstatic. That would have been a fantastic price for us. Yes, the ETFs have had a big impact on the price appreciation in twofold. The first one is the fact, of course, that if you make something easier to buy, there will be more demand, and more demand than supply means prices go up. But the most important point here is actually what the ETF for Bitcoin being approved meant. It actually means that regulators can't stand in the way of legitimate products and financial products forever. So what we're going to see, and what the market is actually counting on, is definitely a set of new crypto products that will come to market soon. Ethereum ETFs, Solana ETFs, many of these other crypto products that I'm sure are coming to market. So it's really this starting gun, that's what is happening, and not really just a Bitcoin ETF on its own.
One of our frequent guests who's been pretty good in a lot of different areas, Tom Lee, said that the institutional adoption and just the overall adoption has been much faster than he thought.
That's absolutely right. One of the things that was necessary for a Bitcoin ETF to be approved in the first place was that we needed all of the infrastructure that was at the same level of quality and reliability as the infrastructure from traditional finance is for traditional ETFs. And that's what we've got. We've got that with companies like Anchorage Digital, which is still the only federally chartered bank in the US. It now actually has over $50 billion in assets under custody. This is a big player in the market with an OCC chartered bank that is helping institutions custody, buy and sell, and stake their assets.
We've had people come on and say last time when Bitcoin hits a new high, it does X in the next month. We've had people come on and say after a halving, which we saw a couple of years ago, Bitcoin does Y over the next couple of months. What do you expect? When's the halving? Next month? Is it April?
Yeah, it's going to be around next month. The most exciting thing about joining Hahn Ventures as a general partner is that I'm a venture investor, and venture investors are not hedge funds. The time horizon for us is really 7 to 10 years. And so yes, we have liquid positions of tokens, but we also invest in equity, and we really take a very long-term view to the market, which, to your prior question, really is the only way to keep sanity in a market with this level of volatility that is baked in.
Sometimes people use a stock-to-flow model to try to value Bitcoin, and they compare it to gold. When you do have a halving, you're going to have half as much over that next year to base your stock-to-flow on. I mean, just by math, if it was worth X, it should be worth 2X.
Yes, assuming that, of course, I think the criticism is the other side is it is already baked in. Bitcoin is not like gold. Gold is actually pretty steady in terms of the percentage of inflation on a yearly basis, and maybe we shouldn't call it inflation, new gold that is actually dug from the ground. Bitcoin is programmatic and algorithmic. that we know exactly what's going to happen, when it's going to happen, when the halving will happen. So it's very easy to predict what is the total supply, which will never pass 21 million.
So with gold, when prices go up, more people can try and find more. So it's not, you can't count on exactly what the fixed rate of production per year is. That changes. With Bitcoin, it can't change.
That is correct. And gold has been pretty steady, but Bitcoin is cryptographic and it is code.
It is code, and it's mathematics. All that taken into consideration can still be either worth, at any given time, be worth 17,000 or 65,000, or 75,000. What do you? I know you're talking 7 to 10 years, but can it go back to 40,000? Will it go back to 40,000?
The exciting part about being a venture investor is that you're looking at investments that have to be able to 10x at least. That is to be
10x.
10x.
But could it go back to 40?
Could it go to 40?
I think volatility is Big 10. Yes, it could back to 40. It could go higher.
That's
short
the
term.
exciting part of it.
It's not that's exciting. It's just part of it. I've been in this space for almost 10 years, and I started with my co-founder of this company, Anchorage Digital, 7 years ago. And so we've seen 5+ cycles. It has always been this way. At this point, it is just a lot easier to go through a bear market. And in fact, the bear markets are actually the better times to build because there's a lot less attention in the ecosystem, and you're actually building the technology, and you're not just talking about the price action.
But there will be waves and, I guess, tides that come in. I was just reading about how there was actual outflows for the first time in some of these Bitcoin ETFs.
That's right. And the price actually is very convenient to bring attention to the space. And every time you bring attention to the space, what you realize is that more people join. And more importantly, more developers, more entrepreneurs, more engineers start building in the space. And those don't go away when the market eventually corrects and when the price comes down. And they will stay, they will build new products and new companies. And that's actually what I'm the most excited about as general partner at Hunt Ventures, is to invest in this new wave of entrepreneurs.
We had Michael Saylor on, and he tries to describe, he's amazing. I've just been watching him for a while, but he talked about how you don't look at it as digital gold necessarily, but more as digital property. Therefore, if you own a billion-dollar building in New York, you're not always asking, can I use part of that building to buy a pizza? So you're not always coming up with that question, can it be a currency? But what is the usage case for Bitcoin? We know about Ethereum and some of these other crypto assets that can be used in all kinds of different ways. But what's the? I can't imagine that the unbanked in some of these countries with rampant inflation, where they work their butt off, and then a week later they don't have anything from all the work they put. If they had Bitcoin, it stays where it stays for whatever they were paid for. They still have that, right? Can they use it? Is that for the billions of people that, I don't know how many are unbanked, but can it work for them?
The technology can absolutely help, because one of the things that is true about Bitcoin that is not true about whatever fiat currency that folks are, that is currently being hyperinflated, is that you can have self-custody of this asset. Nobody can take it away from you. That is very, very, very unique. And you're absolutely right that the volatility makes it a little bit awkward to actually look at this over the short term as a store of value. But as you also know, over the long term, this has been one of the, if not the best performing asset of the past 15+ years. So the reality is that even over long periods of time as a store of value, that has worked. But the technology underneath is actually supporting many different use cases. And for example, we can talk about how it has been the field of cryptocurrencies that has given us something like stablecoins, which are cryptocurrencies that you can self-custody and are tied to the value of the dollar. And those have been even more successful than Bitcoin has in all of these countries with hyperinflation, because they are actually having the value be steady value of the US dollar, or at least with the same schedule of inflation of the US dollar, with the characteristics of the cryptocurrencies where you can have it in your wallet under self-custody, and that is incredibly valuable for somebody that does not have access to these financial instruments.
So the dollar and Bitcoin can coexist, and
they absolutely can coexist. These things are not in competition with one another.
They are and they aren't, I guess.
Depending on which vertical,
the hardcore
would say that they absolutely are.
Yeah. All right, Diego, thank you.
Thank you for having me.
Do you know where you were from originally in Portugal?
Yeah, so I grew up in Lisbon, in Portugal, but I was actually born in the U.S. So I was born in Monterey, California.
You were?
Yeah.
Pretty nice places, I think. Hard to pick. But not happy. Finland. People are only happy in Finland. Go figure.
And here.
Portugal is a pretty exciting country.
Portugal's great. Sintra, beautiful.
That's
I know.
It is just after 8 a.m. on the East Coast, and you are watching Squawk Box. I'm Becky Quick, along with Joe Kernan. U.S. equity futures at this hour are mixed at this point. Nasdaq's actually indicated up by about 50 points. S&P futures up by 2.5. The Dow still indicated down by about 32 points. And this is coming on the day when we're going to be hearing more from Jerome Powell and company. Treasury yields are a little lower than they had been yesterday. You can see right now the 10-year's at 4.28, the 2-year's at 4.68, so back below 4.7% there. I want to bring in our senior markets commentator, Mike Santoli. Mike, what are you watching today?
Well, Becky, can't avoid watching for the Fed, what the Fed does, what Jay Powell says, but we're watching from a very high perch. Yesterday, the 18th S&P 500 new all-time high of this calendar year. That's basically at a record pace of all-time highs. If you go back, decades, the most record highs the S&P has done in a calendar year, somewhere around 72. We got 18 in about a quarter. That basically annualizes to just about the best ever. So you can't obviously count on us continuing to click this way. And we have, as I keep pointing out, flattened out just a little bit in the S&P over the last few weeks. There's been some churn underneath the surface. Much of technology has actually sort of lost a little bit of momentum, but it's enough things are working that we are clicking higher. You do mention the bond market. Sometimes like to look at the government bonds in price terms to get a sense of maybe where buyers might want to come in, where they have in the past. So this is the government U.S. Treasury ETF of all maturities. The average maturity kind of nets out to about 7 or 8 years. And you see this line. I mean, it's basically, aside from that liquidation we had back in the late summer and the fall when 10-year went to 5%, people worried about abundant supply. This has been an area that, in theory, could be some support where people find some value in bonds. We had a decent bond treasury auction just yesterday. For as much as I would say, this market is maybe due for some kind of a pullback, we haven't had a 3% dip in 4 or 5 months. Take a look at JP Morgan. JP Morgan also blasting to a record high, really separating itself from the rest of the banks. And here's against Microsoft on a 1-year basis. Looks pretty much like the same chart, so it's not being treated as, risky financials, commercial real estate exposure. It's obviously just, this is a massive blue chip. It's now top 10 S&P 500 holdings. So enough stocks of different types are making new highs. It's difficult to say that the longer-term trend doesn't have more life in it, Becky.
Yeah, and Mike, the other thing I would point to is the really low volatility. If you're watching the VIX, I mean, it's 13, right?
It's 13. It's been bumping along this area. There have been a couple of times when it's actually ticked up toward 15 as the market got a little nervous. And then it's obvious to me that there are these algorithms that say, oh, if it goes above 15, buy some stocks, because we think it's still going to be this calm, tight uptrend. I always say boring is bullish when it comes to markets, although you can never say it's going to stay that way forever. Things do come out of the blue. We'll see what the Fed has for us today.
Okay, Mike, thanks a lot. For more on the markets right now, we want to bring in Jeremy Siegel. He is Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business. He's also Chief Economist at WisdomTree. And Jeremy, the thing that I've been watching pretty closely lately is just how Treasury yields have moved up. They're a little lower today, but they have moved up substantially in recent weeks as we got these hotter than anticipated inflation numbers. And yet the stock market keeps hitting new highs. If the Fed comes out and is hawkish today, can that continue?
I think the Fed will be hawkish today. In fact, I'm expecting the number of cuts to decline from the 3 that we saw in December to 2. And by the way, I wouldn't be surprised if more people, more FOMC members predicted less than 2 than more than 2. I think the economy has remained very, very strong, stronger than the Fed expected, very definitely. So they're in no rush to actually cut the rate. So I think I'm not sure the market is quite prepared for that. I've been hearing that most observers still think that they're going to do 3 cuts by year end. But I don't think so. I think right now they're predicting 2. Of course, circumstances will evolve as they evolve. They can't predict the future. But at least at this particular point, I think there's going to be a shift to hawkishness today at the meeting.
Jeremy, how much of the gains we're seeing in the market do you think is predicated on the Fed being more aggressive with rate cuts? How much is just based on this great economy itself? Because I guess the good news in all of this is if the Fed's not cutting rates, it's because the economy's looking pretty good.
Absolutely. I said that before. It's more important that the economy stays strong and then earnings stay up than whether the Fed cuts in June or July or September or October. As I said, probably some of the worst news, if you heard they're going to cut 100 basis points in the next 3 or 4 months, I would say, oh my God, what happened? This is not good. So it is absolutely the strong economy that's driving the earnings, and that's why they seem to be ignoring whether we're really going to have 3 or 4 cuts, because it is more important for economic strength for the stock market than when they're going to cut. Now, what is important is that the Fed doesn't make a mistake and wait too long. But there's no sign that if they see the economy really slowing, that they won't then cut the rates. I think that was the signal that was given last December that encouraged the market still on the table. If we see weakness, we will cut rates. If we don't see weakness, then at this particular point, we're happy with the rates as they are. You know, their measure of inflation is stickier. My measure is it's lower because of the shelter distortion, but nonetheless, the economic activity is the main mover of how they change the Fed funds rate.
Okay, if you're right, they're more hawkish, they don't cut rates, we do continue to see this strong economy. What's your guess for where stocks wind up later this year?
Well, I think that, you know, again, they might hiccup at 2 o'clock. When we get that 2 o'clock dot plot, I think there might be a hiccup. I think during the news conference, Powell actually repeats a lot of what the projections are. He's not going to back off, although he's, you know, I think that today might not be the best day for risk assets. But I think that once people realize, hey, exactly. Once he says, well, that's because the economy is so strong, I don't think this bull market is over. I think the momentum is still there, still on the upside. I don't think we've seen the highs of the year.
Okay, one quick question for you. Do you think the leadership remains with the technology stocks and others, or do you think the baton gets handed off and manufacturing and other sectors kind of pick up and run?
I think they will eventually, but right now, I still think the technology stocks have the momentum.
Professor Siegel, thank you, as always.
Thank you.
Coming up, deep fakes and election integrity. We'll look at the danger posed by AI-generated images and other threats. Squawk Box will be right back.
Welcome back to Squawk Box, everyone. Among our top business stories today, Intel is going to be receiving $8.5 billion in grants from the CHIPS and Science Act as the government tries to ramp up domestic semiconductor manufacturing. The company could be in line for up to $11 billion in additional loans. Intel says it will use the new funding for fabrication sites and research centers in Arizona, Ohio, New Mexico, and Oregon. President Biden set to officially announce those awards today in Arizona. By the way, in the next hour, you can catch a live interview with Intel CEO Pat Gelsinger, then additional commentary from him later on today on Closing Bell Overtime. Saudi Arabia's sovereign wealth fund is in talks with American venture capital firm Andreessen Horowitz and potentially others to create a $40 billion fund to invest in artificial intelligence. Though sources tell CNBC those talks have not been finalized. This news was first reported by the New York Times. And Chipotle's board of directors approving a 50-for-1 stock split. Those shares closed at a record high yesterday, just below $2,800. Right now, they're at $2,950. You can see things really took off in the after hours, up by 5.5% in extended hours trading.
Got a lot of money, and they apparently want to diversify. Have you thought about it? Golf, tennis.
Oh, the Saudis. I thought you meant Chipotle.
No. Golf.
Give me a second to catch up.
Golf, tennis. Isn't Mnuchin's consortium for TikTok all Saudis?
Well, no, I don't think
AI,
it's all Saudis.
Middle Eastern.
Middle Eastern was in his fund itself. I think when he was here with us on CNBC talking about it, he said
Dubai or
nobody
something?
would get more than 10% stake, and he did not mention Saudi investors. I think he said that it was supposed to be U.S. investors.
Yeah.
In his fund, though, he does have a huge influx of Saudi
But
money.
MBS is definitely a mover and a shaker in terms of not the old, I mean, it's not your grandfather's Saudi Arabia.
Well, I think they're looking at, you can't rely on oil profits for forever.
Right. They got a lot of money, it seems like. I mean, do they own a business news channel? I mean, that would seem to be something. It just would seem to be a great asset. You have to keep the current talent.
The golfers.
Keep the current. What? Nicholson, $300 million. Coming up, takeaways from NVIDIA's AI extravaganza out in California. Wired editor-at-large Stephen Levy is going to ask, what are we at a peak? NVIDIA. Please, I said it. He'll join us in a bit, but first we're going to talk about the darker side of AI, specifically the threat from election year deepfakes. Could the deepfakes be any worse than what we really have already? Former Facebook Chief Information Officer, Security Officer Alex Stamos will join us. Stay tuned. You're watching Squawk Box on CNBC. Among the worries for voters this election season, misinformation and AI-fueled deepfakes. To help prepare for possible election day problems, NBC News reports that tech executives, civil leaders, and former U.S. officials recently participated in a war game style simulation, but a report on the exercise says the results were sobering, with one organizer saying it was jarring for participants to see how quickly just a few threats could spiral out of control. Joining us now to talk about election year misinformation, Alex Stamos, Sentinel One, Chief Trust Officer and a lecturer at Stanford University. He formerly ran online security operations at Facebook and Yahoo, and it's amazing, I guess, how innovative bad actors can get. Alex, have you put together some possible scenarios that you can scare us with on the type of things that could be done with deep fakes this time around? I was kind of joking about how the real thing on both sides of this, on both candidates, the real thing looks like a deep fake half the time. You can't even believe what, I mean, that State of the Union or you know, an average Trump speech almost looks like the other side already like sort of fabricated what either candidate is saying. It's bad enough without deep fakes. How could it get worse?
Yeah, so you're pointing out kind of the obvious use of a deep fake would be to create a fake video, fake audio, fake image of one of the major presidential candidates doing something that isn't true. I think that's actually the least worrying option here, and I think that's one of the things that came out of the simulation that you mentioned and that NBC covered, was that there's a bunch of different ways you can use deepfakes that are much more subtle and a lot harder to push back against. You know, if there was a video of President Biden saying something he never said, you'd have the entire press corps looking into it, fact-checking it, and possibly telling people, oh, this is fake. But if something is distributed point to point, if it's only going out to a small number of individuals, if it's going out on group chats, if it's going out in phone calls or individual text messages, it's much less likely. And that's exactly what we saw in New Hampshire, where a deep fake of President Biden's voice called up voters and said, don't vote in the Democratic primary today, you need to save your vote for the fall, which is, you know, not just a use of deepfakes, but is actually illegal. That is against federal law, and there has been investigation, and the person responsible has been caught. That's what I'm more worried about, is those kinds of things. Is that if you end up communicating to a small number of people and you convince them that there's violence at the polls, if you convince them that the polls are closed, if you tell them that, you know, if you vote today, your vote won't count, that could really affect maybe not the presidential race, but certainly local races, congressional races, situations in which people are winning by only a couple hundred or a couple thousand votes. And that's going to be much harder for the media to push back against.
I should not touch third rails, but I don't know. I touch them a lot. I'm still here, kind of.
Right.
But the third rail I would say here, Alex, is you described the mainstream media making sure that Joe Biden didn't say something that a deep fake, you know, purported him to be saying. I think they would. I think they would look for that. But the other day we saw a prime example of the mainstream media totally on board with promulgating a false narrative about what Trump was saying with the bloodbath in the auto industry. So you can't count on the mainstream media to treat both sides equally. So why does it matter if there's a deep fake? They don't treat real news objectively for the two different candidates.
So, I mean, I think you, sir, work for NBC Universal, so you know, you got your chance right here to treat both candidates fairly. You know, from my perspective, I try not to get into politics here.
Thank God I'm here, yeah. Alex.
Thank God for you, sir.
I feel a little lonely.
Well, I think you've got some neighbors there in Midtown Manhattan who perhaps fill the airwaves on one side as well. But from my perspective, like, the real danger here is around the actual mechanism of the election. We've had candidates in the media saying bad things about other candidates all the time. I mean, that is a long history in American history. But what is special now is that you can create something that looks like the President of the United States or your local Secretary of State or a governor. Don't go vote. There's violence in the polls, and the polls are closed. And the other thing that I'm really worried about is tying that to actual cyber attacks against election infrastructure. The last couple of years, there's been a bunch of politically motivated attacks against the groups that have tried to protect the election from direct cyber attack. That has been effective in driving a lot of states out of these collaborations and reducing the amount of help the federal government gives local election officials on cyber. And our adversaries are not stopping. My colleagues at Channel One just wrote up a report on a new version of what's called the acid rain wiper, which is a piece of malware that the Russians used in the first days of the Ukrainian invasion to knock out satellite terminals to attack the Viasat satellite system, not just in Ukraine, but actually across all of Europe. That's a kind of tool that could definitely be used against the systems that support elections. Maybe not the voting machines themselves. Fortunately, we've moved away from touchscreen voting in the vast majority of states, and I believe in all of the swing states. But there's all kinds of systems necessary to count the vote and to provide like a quick response so that people trust the output. Disinformation showing one of these candidates saying that it's rigged or trying to convince people not to vote, combined with an attack that doesn't actually change the outcome, but means that you don't know for a couple of weeks because everything has to be hand voted. I think that could be incredibly disruptive.
Alex, let me just ask you, there was a warning put out yesterday, I think from the administration, saying that we need to be careful and watch out with the water supply. You know, all water companies need to watch out for this.
Yeah.
How, you know about these cyber attacks, how big of a deal is that? Because stealing an election's one thing, not knowing if you can drink the water coming out of your tap is exactly what I was thinking.
Right. I mean, right now,
not to downplay stealing elections, but how big of a problem is this?
It's a huge issue. We see this actually from a number of American adversaries. This is a classic Russian thing. The Russian GRU has spent years building malware that specifically targets infrastructure. Again, the acid rain is one of those examples, but they've done this work called a tool called Black Energy, which was a tool that was used against Ukraine a couple of different times to knock the power out. Now, the Ukrainians have gotten very good at defending themselves because they've been fighting this since 2014. But for us in America, we haven't had kind of blackout after blackout due to Russian attacks. And I don't think we would do as well in that kind of attack. And the other problem is that the Chinese are now in this game. Over the last year, a number of companies, including ourselves, have written about finding Chinese backdoors planted in infrastructure systems that look like they specifically would support an American response in the Pacific. So places like Guam, Pearl Harbor, San Diego, those are the places that if something happened in Taiwan, American ships would be moving, Marines would be going into ports on rail, we'd be moving a massive amount of equipment to the West Coast to deliver into the Pacific. And it looks like the Chinese have built systems and backdoors specifically to try to disrupt that capability. And so, yes, it is. We have a risk here both on the Russian side because Russia is losing the war in Ukraine, and the best option they have for winning is to try to get America off of Ukraine's side, which they can try to do by creating political divisions. And then you've got the People's Republic of China, which is clearly looking towards disrupting America's ability to fight a war in the Pacific. And so between those two adversaries, I am worried about water, power, other critical infrastructure systems that are not getting the attention they need.
Alex, it's International Happiness Day. Good God. Ooh,
yes, sir, National Happiness Day. I can't. That's your next mistake.
Every party needs a pooper. That's why we invited you today.
Yeah, well, anytime, let me know.
Okay, if you can't have, it's got to be vodka then. If you can't drink the water, I guess, right? How do you stay hydrated?
Bottled water.
Bottled water, there you go. Or we can boil it. Alex, thank you.
When we come back, Amazon makes a new play for spring shoppers, but will that siphon off sales from second quarter results? We've got that story next. We'll be right back.
well as other people.
Well, Amazon looking to shake up the spring sales season for retailers. Kate Rooney joins us right now with the company's new tactic. Hi, Kate.
Hi, Becky. Good morning. So a few things to note about Amazon's strategy here. Unlike Prime Day, these discounts for this sales day are open to non-Prime members. Some see it as a move by Amazon to recruit more subscribers into the Prime ecosystem. We've got Dan Ives of Wedbush in that camp. The $139 per year membership includes free 2-day shipping and streaming, among other things. That flywheel effect, as it's sometimes called for Amazon's e-commerce business, it's been a driver of customer loyalty, and Prime members do tend to spend more. Bank of America sees potential for $1 billion to $2 billion in GMV, or gross merchandise volume, as a result of this spring event that starts today, which is modest. Volume in the U.S. alone for Amazon was an estimated $500 billion last year. B of A points out that Amazon is targeting fewer product categories, specifically mentioning warmer weather items. Think of things like outdoor furniture, and they say that this might be a competitive move ahead of Wayfair's upcoming spring sale. Something similar is planned over at Overstock, and then Amazon, of course, has been fending off some newer entrants like Shein and Temu. The event is at the end of the quarter for Amazon, so it could be a boost to sales in Q1, which some see as strategic. But one potential concern is that since it is so late in the quarter, analysts are worrying that Amazon could be, quote, borrowing from second quarter sales, pulling forward some of that spending, and then discounts also have the potential to weigh on margins, guys.
Yeah, I guess, Kate, it's kind of experimenting with things that traditional retailers have been doing for forever, right? When you offer the sale, do you bring more people in? Do you get more loyal customers? Can you increase the flywheel effect? Or does it just drop right to the bottom line? And I guess I would look at this as an experiment, and they'll see what happens, right?
Yeah, I think you're right, Becky. They've already got these major sales day. This is the first time that Amazon is doing this. We'll see if it becomes an annual event. And you typically see this happening for traditional retailers too, when it's a really slow sales cycle. That isn't necessarily the case ahead of summer, but you're right that it is sort of a test here. It could turn into one of those annual sales days, but they are kind of compromising, pricing. You've got to think about margins as well, and how this plays into how much they're actually taking away at the end of the quarter. So we'll see how it does. It'll be really interesting to dig through this and any sort of effect on quarterly results, guys.
Kate, thank you.
Coming up, we're going to hear from the CEO of Redfin on what that landmark settlement by the National Association of Realtors means for the big business of buying and selling houses. Squawk Box will be right back. The big news in real estate, that legal settlement by the National Association of Realtors that we were talking about, if approved by a federal court, the deal could change the fee structure for real estate commissions and put money back in the pocket of home sellers. To talk more about this, Diana Olick joins us now with a special guest. Hey, Diana.
Hey, Joe, good morning. And Glenn Kelman, CEO of Redfin, good to see you again. We had you on Friday when this first came out. You reacted to it. Now you're talking about changing how you're doing your business model. Tell us about what you're doing in reaction to this.
We're just getting more aggressive about selling homes directly to consumers. There are so many people who called us over the weekend after the news of the settlement broke and said, I don't want to pay a buyer's agent. I want to hire you to sell homes directly to home buyers. We have a big website to do that, a bunch of software tools to do that. Let's get to work. That was the message this weekend.
But what are some of the anecdotes that you're hearing from consumers? I know there was a lot of confusion about it over the weekend, about buyer's agents, seller's agents, who pays who. Have you had to do a lot of explaining, or have you simply just answering their questions?
Well, mostly people have been asking if commissions are going to come down, if I still have to pay a buyer's agent when I list my home. Everyone's trying to figure out if this industry is really going to change, and anyone in the real estate industry has had the same experience, which is that my phone is blowing up, I'm getting text messages, I'm getting emails. Everyone wants to know, is this for real?
But what about buyer's agents? I mean, the argument is to be made that for first-time buyers, for perhaps people lower income who might not know about what kind of deals, how they're made, how negotiations are done, how escalation clauses are done, isn't a buyer's agent helpful for a lot of people?
Absolutely. We just think people ought to have a choice. We are buyer's agents too, so we know that people need guidance through the whole process, what they can afford, how an inspection contingency works. They want to tour listings offered by different brokers, and the only way they can do that today is through a buyer's agent. So obviously many people are going to need that support, but they shouldn't have to hire someone. They should do it because they want to. And when they do that, they should have a voice in how much that agent gets paid. That's the premise of this reform in the industry.
Now, is it your opinion, as some of the headlines have been screaming, that this is going to slash commissions entirely and that the people who work for Redfin, you know, your colleagues, are going to lose millions of dollars?
Well, Redfin has saved consumers $1.6 billion in fees. So actually what we saw over the weekend is a higher affinity for Redfin, where all these people started asking us about listing their home, representing them as buyers, because they know they can get a deal from Redfin, and they feel like this news gave them permission to do so.
And explain that just so our viewers know. Redfin has a standard commission, unlike the industry, which was anywhere from 5 to 6%, which was kind of the generalized commission. You could negotiate that, but Redfin has a different model, right?
Right. So we charge a fee as low as 1% to list a home. If we sell it directly to a buyer, the total commission would be about 2%. When we represent a buyer on a listing hosted by another brokerage, we refund part of our commission to that buyer. So for 18 years, we've been trying to change the game and give consumers a better deal. Sometimes that's been easy, sometimes that's been hard, but over the weekend, it got easier.
Okay, and so not just plugging Redfin, I know you're the CEO, you have to, but have you actually been seeing more business because of this fee structure over the weekend? Are people confused about how the general market is and saying, okay, Redfin seems clear?
Yes, so listing demand the day of the settlement popped 14%. Home buyer demand over the weekend popped 5%. That's not year on year, that's week on week. That's an unusual signal for us.
And that's not just seasonal.
That's not just seasonal. There's a little bit of that. You're too smart. But mostly, it's a real pop. It feels like the bell has been rung with consumers, and it will be hard to unring that bell.
And looking out across the landscape of other listings, I know you've been watching. Obviously, this settlement, if it is approved, doesn't go into effect into the summer, but have you seen changes in listings so far with the buyer's agent coming off of it, that kind of thing?
We've had many customers ask us about it, where we activated a listing, offering a commission of maybe 2.5%, or 3% to the buyer's agent. They called us over the weekend saying, well, actually now I want to lower that or eliminate that commission. But when we looked over the weekend at how many listings have been activated across the industry that were no longer offering a commission to the buyer's agent, that number hadn't changed much. So people are still processing the news.
Very quickly, mortgage rates up or down? It's a Fed rate, Fed day.
About the same. There's still inflation pressure out there.
Okay. Glenn Kelman from Redfin CEO. Becky, back to you.
Okay, Diana, thank you. When we come back, inside NVIDIA's latest technology advances, we will talk about the real-world AI applications that we could start seeing in the near future. Stay tuned, you're watching Squawk Box, and this is CNBC. Welcome back to Squawk Box. The futures this morning, still a mixed picture. Dow's indicator off by about 65 points. S&P futures down by 5. But you do have the NASDAQ that's picked up steam this morning. It's indicated up by about 15 points. We'll see what happens as we hear from Jay Powell and company.
NVIDIA wowing the tech world this week with its latest generation of AI chips and software. The company's CEO, Jensen Huang, spoke with our own Jim Cramer last night on Mad Money.
We reinvented the computer as we know it. The computer's been the same since 1964, since the year after I was born. And we reinvented it with this idea called accelerated computing. Now, you could have a computer that's 100 times faster or 20 times more energy efficient, cost 20 times less, and to be able to solve problems at a scale that nobody's ever imagined.
And join us now to talk about the technical and societal impacts of the latest generation of AI chips. Stephen Levy, the editor at large at Wired. Stephen, do you ascribe anything to the science fiction that we've all read over the years about as we get closer and closer to this moment of a sentient computer? Is it relevant to talk about those issues, or is it too pie in the sky? Are we getting close?
You know, in his 2-hour keynote, the NVIDIA CEO, Jensen Huang, really didn't touch on sentience. So I think we're a little away from that. You know, he didn't shy away from big ideas. I think it really is up for grabs where we're going to land with AI. Right now, the AI we have, the generative AI, is startling beyond what most even scientists thought was going to happen in 5 years ago. They wouldn't have predicted that we're going to be this far along. But sentience is really a step beyond what anyone can get their arms around now. So I wouldn't expect computers coming to life anytime soon.
That's why it's called a singularity, I guess, because we have no idea what's on the other side of it. But
yeah, well, Satya Nadella mentioned it as the last invention, if that happens. And OpenAI has it in their contracts that if artificial general intelligence is reached, they have to renegotiate anything, because who knows what anything means anymore if that happens.
That's what I was talking about. Yeah, I don't. Maybe artificial general intelligence is not the same as sentience, and I think Jensen Huang sort of differentiated the two. He sees that the emergence of AGI within 5 years. I mean, if you give it another, Steve, if you give it another 20 years after the next 5, I think you're at sentience. And then I do think we need to start the human brain. Do we know the difference between a sociopath and a normal person at this point? Do we know the?
When I see it,
you know, it's like pornography.
We're getting into squishy grounds here, but I mean, we don't know inside anyone's brain. So if the computers get smart enough in terms of their performance, it becomes moot whether they're actually sentient or not, if they're behaving that way. So sentience really is in.
I don't want them to pull my plug, Stephen, and get rid of all, hydrocarbon-based or carbohydrate-based beings because we're superfluous and they don't need us. I mean, I really do want. That's why I started this whole interview about science fiction and what's possible, because there are plenty of things to worry about with AI. But, they're not existential things, and I think that it is actually something that 100 years from now could be existential if we don't know what we're doing.
It's up to us to determine to what degree of control humans will have in the systems that operate modern society. It turns out to be very convenient as computers get smarter and smarter to turn over those things to computers because our systems are so complex that no humans can easily grasp them. I think that's when the danger comes. It's not necessarily a sentient computer making a decision to take things over, but a computer fulfilling missions that we might give it might determine that fulfilling that mission might not be the best thing for humans in the way it doesn't.
Well, we can do that already. I mean, you just got to look at go watch the movie Oppenheimer. We can create systems that if a human employs it, that it just is devastating. So near term, Stephen, I'm not going to worry. Okay, I'm not going to worry then. Near term, not today, but what should I worry about near term?
Well, I think the NVIDIA case is something. What I think a lot of people are quietly concerned about in the industry is that this one company, in large part because it's done so well in building these chips at just the right time, has so much power to determine winners and losers and build itself up. It's gone from sort of the second tier in the tech industry to way up top, in the clouds with the top tier, multi-trillion dollars. So I think that right now the question is whether we're viewing peak NVIDIA, because right now they look at the apex of their power, they're expanding their lead, or whether people are going to be determined to catch up to replace it with, or present a competitor that can do the same with similar chips. Right now, there's no competitor that could even match them.
On International Happiness Day, can you tell me when we're going to have AI designing rational drugs and curing cancer and consolidating all of our medical records so that we know exactly what the prognosis is and what kind of treatment we need? I mean, there are amazing things that are potentially near term with this, right? Can you give me some of those?
Absolutely. I think that's going to happen soon. I mean, just a few years ago, even before generative AI exploded, Google DeepMind came up with a way to solve the problem of protein folding, which was something that was a very difficult, intractable challenge that scientists couldn't do easily. And I think we're going to see the same kind of advances with now generative AI and chips like NVIDIA's. There's already a giant partnership with Novo Nordisk to try to solve those problems and come up with new drugs.
Someone just wrote in, Stephen, that bones not the caddy, but the doctor on Star Trek was very, very worried about AI back in the 1960s. So this is not new. I can't believe we've lived to see it where we have to worry about it.
Well, close the pod doors, Dave. The how.
That was a segue, Stephen, because Shatner's birthday, my idol of all time. He's still like, he may not be around. He may be ziplining over in the Amazon or something on the Amazing Race, but he'll be 93 on Friday. I think it's his birthday, and I think he needs to. We're trying to get him to come on the show. But he's a specimen. Do you think he found something out about life and everything out there somewhere? I mean, how does he do it at 93? Do you know?
Yeah, well, he broke out in tears after his short trip into space. I remember that. And I think it's amazing. I'll bet he never thought that he would see life approach Star Trek the way it has in the last few years.
Well, I never thought I'd hear him sing "Lucy in the Sky with Diamonds" either, but he did. Stephen, thank you.
Thank you.
Playing along, and I mean, we're both in media, right? We're allowed to do this type of thing. Good to have you on, and happy birthday to Bill, who has a movie coming out. I think it's called "Call Me Bill" or something like that. Shatner.
Oh, Shatner.
Yeah.
I still think Wood.
Yeah. Well, quick programming note: you can catch more of Jim.
I think. You say Bill, and I think Bill Murray.
That Bill. Yeah. You catch much more of Jim Cramer. There's two Bills in our life: Bill Shatner and Bill Clinton, of course. And the interview with NVIDIA CEO Jensen Huang tonight on Mad Money.
Because Bill does that.
Coming up, we're going to talk markets and get you ready for the opening bell on Wall Street. First, as we head to break, check out the shares of Boeing, the company's CFO, updating analysts on free cash flow guidance. For the first quarter, it's projected to be in the range of -$4 to $4.5 billion. Stay tuned. You're watching Squawk Box on CNBC.
Well, just a little more than half an hour to go before the opening bell on Wall Street. Investors are looking ahead to this afternoon's Fed decision and then probably more importantly, the meeting that comes after that. I want to bring in Carrie Firestone. She's executive chairman and co-founder of Arias Asset Management, also a CNBC contributor. And Carrie, let's set this up. What are you expecting from the Fed? What might happen in the markets?
Well, the Fed is unlikely to do anything today, we believe. And Becky, nice to see you. We've had a reasonable year already. The S&P is up over 8%. Tech, of course, has led. The market expects there to be cuts this year, so we need the Fed to sound as if they're going to do something about that. It doesn't have to be at this meeting.
Let's talk a little bit. We've talked so much about the Fed today. I'd like to talk about an article, a column that you had up on CNBC Pro. That's for NVIDIA, whether or not that stock can continue the parabolic gains. You took a look back at history. What did it tell you?
Yeah, so we looked at 20 years of S&P 500 history. We looked at all stocks that had gone up 200% or more in any one year to see what happened to the stock in the following year. Because anyone who is buying NVIDIA now must understand that it's up 80% so far this year. It's up 2,000% over the last 5 years. 250% over the last 2 years. You pick your time frame, big numbers. So what does it take for it to go up again? And the numbers were interesting. About half of the names went up and half of the names went down in the next year, in the following year to that 200+%. And less than half outperformed the market. 43% outperformed the market. And the ones that did had the biggest earnings growth. Average of over 80%. So that means NVIDIA, if it's going to be on average, would have to grow its earnings 80% this year. We know, or we expect, that the numbers will be up 100%. It's supposed to grow from $12 to about $24 in this fiscal year. But does the market believe that is that in the stock? Does NVIDIA need to grow its earnings more than 100%? And that's really what we think the market should be focusing on. How much can those earnings grow in the next 12 months to maintain this stock to outperform the market? Of course, it could go down 30% from here. And if the market is flat, NVIDIA would still outperform because it's up so much versus the 8% of the S&P.
You sound a little skeptical. We're almost out of time, but am I right to interpret it that way?
Well, I think you have to question whenever a stock has this kind of surge, and option buying is so much of it. It's not that it isn't a great company. We think it's fantastic technology, but these kind of moves have to end at some point.
All right, Carrie, great to see you, as always. And
good to see you.
Thanks for forwarding that article to me. It was a good read. Appreciate it. Okay. Let's take a final check on the markets right now, folks. You're going to see that we are still looking at a mixed market ahead of this big Fed day. Dow futures are now down by 76 points. S&P futures off by 5. The NASDAQ indicated up by about 22 points. The Treasury market's been interesting, too. Yields have picked up steadily, although today and yesterday giving back some of that ground. The 10-year right now is at 4.28. The 2-year is at 4.68, and before that, the 10-year had been above 4.3. The 2-year was above 4.7. So
but Jackie, get a worm song in your head.
Oh, I bet I can get one back in your head.
Don't worry, be happy. It's International Happiness Day.
Wanna be happy for the rest of your life. Happy, happy, happy. Yeah.
Oh my God,
happy ones too.
I don't like any of these, but I'm happy.
I am too. We hope you're happy, and we'll hope you see you back here tomorrow. Right now, it's time for Squawk on the Street.
Good Wednesday morning. Welcome to Squawk on the Street. I'm David Faber, live from Post 9 at the New York Stock Exchange. There he is, Jim Cramer, still in San Jose at NVIDIA's AI Developers Conference. We'll have highlights from, are you still doing the interview? Has it ended? I'm not even sure. That long interview with Jensen Huang from NVIDIA. Let's give you a look at futures, of course, as we get ready for what Jim and I like to call Hump Day. I call that a mixed picture. I don't know what you want to call it, Jim. Mixed.
Mixed picture.
Yeah.
Looks mixed.
Mixed. All right, good. Let's get to our roadmap.
Mixed.
Starts with what else? NVIDIA and the AI boom. The shares, of course, up 240% in the last year. We're going to have more from Jim's exclusive with the company's CEO, Jensen Huang, and why he thinks the PC is changing forever. Speaking of PCs, The engine behind them, Intel, preparing for a $100 billion spending spree across 4 states. This after securing CHIPS Act grants from Uncle Sam. We're going to hear from Commerce Secretary Raimondo and Intel CEO Pat Gelsinger. That'll be this hour. And of course, don't forget it's Powell's moment. Wall Street waiting for the latest guidance from the Fed chair today on the future of rates, whether that might include some cuts. Let's start with NVIDIA. Jim's exclusive, of course, with Jensen Huang. He spoke on Mad Money about reinventing the computer. Take a listen.
We reinvented the computer as we know it. The computer's been the same since 1964, since the year after I was born. And we reinvented it with this idea called accelerated computing. Now, you could have a computer that's 100 times faster or 20 times more energy efficient, cost 20 times less, and to be able to solve problems at a scale that nobody's ever imagined.
Jim, you know, so many different takeaways, including that. It's something you've been discussing to a certain extent. And I think a lot of investors are just trying to get their arms around all of this. What does it mean? Where do I want to be? Is it just NVIDIA? Can that growth continue? I mean, so many different questions that seem to emanate from both his presentation and your interview.
Well, look, I think that you have to go with analogies. And I didn't get this one from Jensen, but I've been thinking about it all night, which is that right now we are really happy because we have propeller airplanes, and they're terrific. And a lot of people are wondering, why do we need something faster? Why do we need anything faster? And Jensen's got a jet. You know what? It's a secret weapon that he's using, and everyone's going to want a jet. We just don't know it yet, David. That's the difference.
And everything's going to be so much faster. There was that moment where he pointed to, I think, sort of the setup of the servers, and his point was, this is so much faster and it's going to take up so much less space. Obviously, it's still going to be in a data center, but it's going to replace what is a current data center just with, you know, wasn't that much equipment that he was looking at.
Well, he's got a great sense of irony, and he's a very humble man. So it's difficult to really grasp sometimes what he says because it has so much gravitas. For instance, he said, Jim, I asked him, I said, do we have to do a do-over of our entire system? And he said, look, only 95% of the chips aren't any good anymore. Solid 5% leaves. We left only 95% of the chips just aren't what we want. And when you hear that, and then you hear all these skeptics, you say, well, do they listen to him? Is he too calm? Does he have to be more jumping up and down? What does he have to do?
Right. And you're seeing that in some of the research now in terms of that point you're making. The second, you know, the strong second leg of GPU growth will be spend shift from an x86 data center to accelerated computing. And to your point,
right?
Yeah, yeah.
Well, David, look, I dealt with a robot yesterday.
Yeah.
I dealt with a robot. I at a bar, okay?
Yeah.
And he wanted. I said I'd like a cocktail, and he said okay. And he started making me some mocktail, and I said I wanted that. And then I said shaken, not stirred. Well, he didn't understand that. Okay, because that's like me being Bond, which is difficult to understand given. But next year when I come back, he will come back with a quip when I say shaken, not stirred. That will be from Goldfinger.
Right, right. I could see that.
You can see that?
I can. I can see the advance.
It says he can see it.
What does it all mean for, you know, let's go through some of the names, though, the big names that we've been talking about for the last year, whether it's Meta, who's the biggest, by the way, the biggest single spender when it comes, I believe, to NVIDIA chips, right? They're spending more than anyone.
Right, but I have a comment about Meta, which is that later on I'm going to see the Vision Pro. Okay. And what NVIDIA is doing with the Vision Pro. I am not going to see what it's doing with Meta because I'm not sure. I know that Jensen personally likes the Vision Pro, and I think that's more additive to Apple than anything that we're talking about, including the fact that Tim Cook, wow, is in China. How about that? Let's have a Tim Cook watch in China. No, I'd rather talk about what Jensen wants to do with the Vision Pro, which I think is monster because it's business to business, and that's what Apple's been waiting to do.
Yeah, you talked about this a bit yesterday. You really think there are enterprise applications for the Vision Pro, and
absolutely,
they can only be
buying
enabled
autos
as
and
a
buying
result
homes.
of accelerated computing. I mean, it's not the stuff in the Vision Pro. It's what you could deliver to it as a result of this.
You watched the interview. You did. You watched it.
Yeah.
That's exactly what happened. And that stock was up $1.50 because of that, but people would never say that because that would require genuine accelerated computing by listening to the interview. And people don't have accelerated computing. Do you know that Moby Dick can be read in 1 second?
I picked that up during your interview yesterday, and in fact, I mentioned it on air. He didn't even say a second. He kind of indicated less than a second. I didn't even know
I
what
think
to
that
do
War
with
and
that.
Peace is this full second.
I know. I didn't really.
It's brilliant. Think about this.
I know. Well, I try not to.
But David, that's putting it in English. Our viewers get that because they all have to study Moby Dick. They understand Ahab. They understand that Starbucks gets it much faster than the triple venti cappuccino that I tried to get the other day at the airport. Starbucks in the book is better than Starbucks in store.
Right. But a lot of people are trying to put it all together and what it means, again, for this ecosystem, for the metas, not just the entities, for Apple. We've talked about things moving to the edge, for example. This week, we had that story earlier in the week from Bloomberg about Google or Alphabet negotiating potentially with Apple about including Gemini. When we say the edge, we mean essentially the device, just to be clear, which potentially would require a lot more memory in the device itself, by the way, if you're running these large, if you're running these kinds of apps.
But you could put 280 billion microprocessors in this. We spoke with Synopsys yesterday, and you could have 280 billion. Well, they're actually transistors, but they're pieces of something.
208. It was 208 billion. It was 208 billion transistors in the.
It was too noisy in here. I thought he said 280.
No,
wow.
208.
Granularity.
Yeah.
I couldn't hear.
Really, you couldn't hear?
Wish
All right, let's. Do we?
able
I
to
think we have
hear.
some more. We have some more from Jensen's interview that I think is worth taking a listen and get your reaction on the other side.
There's no computer company that has ever been built like ours. We created a brand new way of doing computing. Everybody we work with here, there's researchers and scientists from $100 trillion worth of industries, healthcare, financial services, manufacturing, and such. And when we're done building all these computers, we break them up into parts and we integrate them into Microsoft Azure, OCI, GCP, AWS, HP and Dell and IBM, and they take it to market. And so the application software is being offered by Cadence and Synopsys and Ansys and Dassault, really amazing company that we work with, Dassault and Autodesk and Adobe and others. Our technology is integrated into theirs. Our technology is integrated into all these computer makers, and the world connects it together. And that's the reason why NVIDIA's everywhere.
Okay,
we're in every cloud, every data center.
Is that we hear all the time, well, but Amazon's working on a competitive product. Alphabet, all I hear from you is good. We want to help everybody develop whatever's necessary. You are not at war with customers.
No. Well, we do something very different, first of all. Our architecture, on the one hand, could do artificial intelligence. It could do computer graphics, physics simulation, data processing, SQL data processing, which consumes a lot of energy, a lot of cost. For many customers, we reduce it by 95%, 20 times reduction in cost and energy used. So much so that Google's Dataproc is now accelerated by it. We announced a partnership yesterday with a great company, Databricks. They're going to accelerate their data processing. They're the large-scale data processing cloud company. They're going to accelerate their data processing on it. And so all of this is something you can do in our architecture. The other thing you can do with our architecture is everywhere.
Right.
And so if you're a developer and you develop on NVIDIA, you can run it on AWS, GCP, Azure, HP, Dell, IBM, anywhere.
All right, Jim, you want to explain to our viewers what exactly that all means?
Sure. Well, you take a look at, you mentioned several times Amazon Web Services. I'm going to spend some time with Adam Slipsky today, who runs that. This is all about the ability to move so fast that in Anthropic's case, in Amazon, what they're saying is it moves so fast and it's also more accurate. Okay, so this new step function of what he brought in moves gives you the information faster, can read much faster, but it also isn't as prone to hallucination. And hallucination is what everyone's worried about when it comes to artificial intelligence and answering and having inference. Cutting down on hallucination will make it so that people will be much more willing to adopt and use the ChatGPTs of the world or the Claudes of the world, which I think may be ahead. I think Claude 3 may be ahead of everything right now.
Really? Anthropic's Claude 3. Why?
Yes. Yes, I do. Well, because it has the fewest mistakes and has the quickest answers and has the most in-depth answers. And that is the one that Amazon Web Services has backed. Amazon Web Services is the biggest buyer of the fastest stuff that NVIDIA does across the whole line. That's why it's so important to realize why Amazon Web Services has such a great business, David. It's because they have superior recall. They have.
I thought Meta was the biggest buyer. Accurate. I thought Meta was. They're
the biggest buyer of one kind of chip. One kind of chip.
I see.
NVIDIA, Amazon Web Services is the biggest buyer of the whole suite. All the chips that Jensen just mentioned. And thank you for running a longer version, because you don't get what he's about until you hear listen to that breadth of clients, and you know that this is a company where it's really hard to pin down what they're going to make per share, because every one of those clients, as he told me when he said that Andy Jassy, CEO of Amazon, would buy anything that he had, every one of those is on allocation. Not one of those companies has enough chips right now. Think about that. Everybody else has inventory problems throughout the chain because there's too much that has to be destocked, and this man cannot meet the demand from those customers. It's an amazing moment for accelerated computing and generative AI. It's an amazing moment. And people are thinking too small, except for that one man right there. He's not.
Okay, when we come back, we're going to continue to talk about chips. This time, Intel CEO Pat Gelsinger will be part of the discussion. Billions that his company, in fact, is receiving from the U.S., plus what Commerce Secretary Raimondo told Jim about the CHIPS Act subsidies for Intel. Let's give you a look at futures. We're going to be trading here in about 17 minutes. You see sort of a mixed bag. The NASDAQ may be up, but the S&P perhaps down a bit. We're back. All right, welcome back. We're going to stay with the chip sector. AI, of course, an important component of that as well. The White House announces that Intel has been awarded up to $8.5 billion in funding from the CHIPS Act. Could receive an additional $11 billion. The funding would benefit Intel's plans to build chip fabs in 4 different states. You're going to want to hear what Intel CEO Pat Gelsinger has to say about it all. That'll be later this hour. First, though, take a listen to what Commerce Secretary Gina Raimondo, had to say to Jim about the subsidies. That was in an interview that is going to air tonight on Mad Money.
Right now, the United States of America produces 0 leading-edge chips in the United States. We buy 92% from one company in Taiwan. That is not resilient. That is not safe. Right? That is an overly concentrated supply chain for a critical item, and that's why it makes sense for the U.S. government to provide these subsidies so that these companies make it in America.
It's a national security issue, Jim. It's certainly seen as that, given that Taiwan Semi basically controls the manufacturing of the highest-end chips, including, of course, all the ones we've been talking about. So where all the NVIDIA designs go to be made. Intel was the leader for so long and then just lost it when it came to the manufacturing side, not to mention the design side as well. I mean, it was once our premier chip company. It's had a good year as a stock, by the way, up 44%, but it's just to put it in perspective, $177 billion market value versus NVIDIA's $2.1 trillion market value.
Right, and it's important to recognize that AMD passed Intel too. It's just something that if Andy Grove were alive, the man who really accelerated Intel's growth, I think he would just be shocked. AMD at one point was being joked about as the company that Intel kept alive in order to be able not to have a Justice Department investigation of monopoly. And now, well, just say AMD is the only rival of NVIDIA. Intel does not make the leading chips. Maybe it will with the money that is receiving. But right now, Intel, as you said, is just very far behind. They had a series of CEOs that, frankly, were suboptimal. But that was not talked about much because, you know, David, other than, I think, on a couple of shows, we never criticized CEOs for having no vision. But Intel had no vision, and this is what you get when you have no vision.
Yeah, you know, listen, it is sometimes hard to discern from our vantage point how poorly things are going from an execution standpoint. You look quarter to quarter, it sort of takes a while. But to your point, decision not to provide into the iPhone when they had a marketer running the company, frankly, instead of a scientist. Many people point to that period of time. You're right. There's no doubt. It's a Harvard case study to be done, I assume, if they haven't already. Pat Gelsinger obviously trying to turn it around.
Moments,
yeah.
Jensen came to Intel and said, look, you guys should be doing gaming chips. I happen to have a friend who was on the board at that time and said, look, gaming chips are very, very fast. Maybe we should make an investment in gaming chips. And Jensen's proposal was right on the desk of Intel. And Andy Grove was so dismissive that it became doctrine not to talk about gaming chips, which is why Jensen is not historically that much of a pal with Intel.
Yeah. That said, you know, the hope is that we are going to be able to make, or that we will have a lot more manufacturing capacity here in this country, perhaps as much as 20% up from, I think, what is 12 right now, in order to make these advanced chips, because there is that risk.
There's no payback. There's no payback for 5 or 6 years in these chips, so you need to have subsidies. Brad Koenig, who used to run Global Tech investment banking for Goldman, he's the advisor on this. So don't think that the government knows that they don't know what they're doing. I think Brad's probably the most knowledgeable when it comes to doing exactly what the government would like best.
Yeah, and your guest tonight, Gina Raimondo, as well, is deep into this stuff, I think. Hear from every CEO.
They talk to Amazon and Alphabet. They talk to Apple. They talk to every major company. And yet we think that the government's a bunch of idiots. I think that people who call her someone who doesn't know what she's doing, people should look at her body of work, because they should be embarrassed of their criticism. Embarrassed. And we know that there are people who are very critical.
Yeah, I know, but every time I run into a CEO in this world, they've heard from her recently. All right, Jim, get ready. You got an opening. We got an opening bell, but you have a mad dash to get ready for it. Stay with us.
NBC.
Opening bell. 6 minutes from now, you can see amongst the top gainers on the NASDAQ as we head into trading is PDD. That's Pinduoduo. Of course, we'll take a look through the earnings, clearly getting a very positive reception. And then Intel, which we just talked about. We're back at this. All right, let's get to a mad dash. Chipotle is on the menu.
Yes, yesterday I pressed Jensen Huang to give us a big split because I said that individuals love splits even though they don't create value. Well, David, Chipotle's listening to this call. They're doing a 50 to 1 stock split. 50 to 1. And you can see what's happening. They're doing it so employees get stock, and employees want to, this is much easier for employees to understand. But David, the individual wants this. The institutions hate it because it means more commission dollars. It hurts the S&P because for these index funds, because they add more friction. But the individual goes crazy. There is nothing new, David, with Chipotle. Nothing except for this 50 to 1. And look what it's doing. A 50 for 1, and the stock has a major move, 5%. This is what corporate America should be listening to. This is how you get individuals involved with your stock.
It's still that's still the case, even with all these short-dated options and all these other ways to do things. It still matters to people
You're
that you'd be able to
right
buy
to
something for $29 instead of $2,943.
That is the right question. But Doug McMillan at Walmart said that Sam Walton had done an analysis of this for his employees. There are people who understand this. They understand that there are sticky investors and there are fickle investors. The fickle investor, we should stop catering to them. They're the ones that don't care about this stuff at all. But the individual investor will buy Chipotle, put it away, and you know, when the carne asada, when they get that chicken al pastor, which is really good, David, maybe they'll buy a couple shares. Have you had the al pastor?
No, I don't really attend. I don't really go to Chipotle. Sorry.
Do you know what guac is?
What? Yes, I do.
Guac?
I know what guac is. I do.
Okay.
I do.
I just want to be
Yeah.
sure because guac costs are higher. The
Are they?
avocados
Once again, the
spiked a bit.
avocados are soaring again.
It's spiked a bit.
Yeah.
Mm-hmm.
Well, when you owned the Mexican restaurant, we used to get real-time pricing information on the avocados, but not so much anymore.
Avocado killed me. I had 3 months where I lost money because of avocado. I couldn't make it up with Corona.
Here's the opening bell. Here's the big board. Redwood Trust. Real estate investment trust celebrating its 30th anniversary over at the NASDAQ. AI infrastructure firm Astera Labs. That's an IPO. Its CEO is going to be on Money Movers. That's about an hour and a half from now. All right, Jim, you know what? I'm going to start us off somewhere a little bit different than everything we've been talking, and I'm going to go to Kering. I'm going to start with Kering, the luxury goods
You're going to start with
company.
Gucci?
I'm going to start with Gucci.
Big customer of Salesforce.
Yeah, because we got a update, some preliminary information regarding the first quarter is what it's called, and they're talking about challenging current trends. Consolidated revenue in the first quarter could decline by as much as 10% on a comparable basis. And they're citing a steeper than expected sales drop at Gucci, notably in the Asia Pacific region, where comp revenues in the first quarter could be down by nearly 20%, Jim. This is taking that all its cohorts in that area down as well. I want to take a look. Of course, you'd expect LVMH and the like. Your thoughts?
It never stops. China has gotten away from conspicuous consumption. The Chinese, I think the government doesn't really want it. I think that the people are not as wealthy as they used to be. And you don't need to have Gucci, David. You can live without Gucci, okay?
Yeah. I have managed to do that throughout my entire life. Interesting.
Here I am.
A journal story about sort
Am I
of
late?
tax as well.
Yes.
The richest man in the country. And some leaders of business sort of
Say we're going to go down
on them. That's going on at the same time.
somewhere right here, right around 5/14/19, 29.
Consumer is very important for these companies.
Actually, let's do this right.
LVMH, Kering, all down, but Kering obviously bearing the brunt of this. That
Right
said,
there.
I feel like recently we've
5/14/41.
different kinds of performance. You know, you'll see one not doing well, but it doesn't necessarily translate.
Oh,
to
you
some of the
dummy.
others, including, for example, I remember Burberry had a
Hurry
bad
up.
quarter, but LVMH didn't.
Finally.
No, LVMH
God.
had a great number. Restock
How
wasn't
disgusting.
really as bad. Now, David, what I see
This is a
happening
spy. Good morning, retail traders.
stocks, Macau has come back.
This is Washboardjim. Market's open green, it looks like. DWAC's up. Jimmy mentioned that one yesterday.
Is very important.
We got a stock split on CMG, 50-1.
The ultra rich, their government can jail the ultra rich is a much more critical thing. And so what we're seeing is the crackdown again on conspicuous consumption that, David, I think must be frightening all of the wealthy.
50-1 stock split. You have a problem with that? Yes.
Holdings, which of course is a very important company there. Temu is one of its main
Yeah, I got a problem with it.
businesses, as our viewers may well know, and things look pretty good there.
Cat.
PPD is up sharply. You can see the 123% overall increase in revenues from the company, and this includes obviously domestic China. It may also be on the earnings side that
Man.
they did a better job in terms of executing, and so margins a bit better, or the business just more.
Let's see,
profitable.
NVDA called that one out yesterday.
Well, many of the estimates, both on the revenue and profit side, that analysts had for this company, and again, we're talking about the consumer in China here.
Well, the price of what Temu makes, I mean, it's unbelievable how cheaply you can get it. Now, a lot of us is, my daughter got sent a big box at Temu.
Apple
Sunday.
pulling back some.
It was like she's an influencer or something. I bought some stuff for my wife at Temu just to see
Your
how it
wife?
worked.
Who'd marry you?
It was not well received. frankly.
No, it wasn't.
I think it was mostly because of the Dow issue.
Double top on Tesla.
The polyethylene issue.
Oh, the polyethylene.
Today's losers.
The actual making of it, which I think would
Not very big.
hazard throughout New York City. But that's what they make. They make incredibly cheap stuff. The prices are insane. It's you know what? It's Crazy Eddie like.
Well, they ain't today's losers.
Yeah,
There we go.
Insane. Good old Crazy Eddie.
SMCI.
Growing demand driven by encouraging consumer sentiment.
We got to break 906.65.
Going on to say we will continue our high quality development
And we got to hold
strategy.
877.49.
High quality? Did they say high quality?
They said high quality.
They mentioned high quality. Okay, so I saw Jassy at Amazon. You can buy their stuff on Amazon.
Oh,
and they
shut
actually
up,
give you a date.
Jim.
If you buy it through them, it comes within like
Double
2 or 3
top on
weeks. Okay, if you buy
QQQ.
it through Amazon, you get it immediately. You
God.
pay a little more. I mean, I bought a
Who charted the
swimsuit
SPX?
my wife, which again was a suboptimal situation.
The 200 SMA. Come on.
Come on, man. You've been married a couple of
it
times.
was ill-advised.
You've been married to Lisa for a while here. What are you doing buying her swimsuits on Temu?
What's a fudge?
I was going for number 3 wife. I mean, I don't know.
I mean, it's nice. It's thoughtful. I would
It
never
was
do that.
it was kind of like, it was like, you know how you eat like have a popsicle and your brain freezes?
You had a brain freeze, yeah. All right,
Yeah,
I'll give you that one.
When it came, I realized it. See, as soon as you started to feel it, and it felt like something
Okay.
that is made by DuPont, that was it.
I'd say we're at a support right now.
I want to get to Boeing.
To stay very bullish.
Things, Jim, but we do have to move on because we do have a special guest, as our viewers know. The Biden administration awarding Intel nearly $20 billion
Ooh.
in grants and loans. That, of course, from the CHIPS Act.
Did you hear that? Intel?
Now we'll receive $8.5 billion in grants.
Oh my God.
Which is, additional
20 billion?
in
I said that one yesterday on the.
build out fab manufacturing, fab facilities here in the U.S. Let's bring in John Fort because he has the man of the
Oh,
hour.
here we go.
John.
We're at support.
David, thank you. I am here in Chandler, Arizona, with Pat Gelsing, the CEO of Intel. Big day for you. Been waiting for this for a while. Funding $8.5 billion. That's a lot of money, but shy of the $10 billion that.
Man, this is a nice spot. Intel on the 1 hour time frame. I'm telling you.
$2.5 billion.
Mike, check it out.
With this funding now, what's this going to
Magnificent.
do for the timetable for you for getting Intel?
Put your eyes on INTC right now.
Just say this is
4250.
for America. It's an exciting day for the CHIPS program. It's an exciting day for Intel. And behind us, the construction project alive and well, and we're moving forward rapidly. And the facilities behind us, hey, these need to come online in 2025. They'll be part of our 18A, our finish of our getting back to leadership. So this brings us back to leadership manufacturing for some of our key products. Also will be key for our foundry business as well. And it really is sort of the coming together of everything that we did. A lot of shoe leather, getting the CHIPS Act passed, and $8.5 billion.
You liberals.
$11 billion of loan guarantees, the
Man,
investment credit, and then more to come.
Liberals will never get it.
The R&D investments. So today's a great day.
They make the rich richer.
At the end of the beginning of our journey to rebuild
And they make the poor poorer.
What's coming with defense? What kind of timetable should we be looking at?
No particular timetable in that area, but everything we're talking about is the commercial efforts that we've laid out. And as you said, we want to build world-class, at scale, commercially viable leadership technology, and then we want to add to those capabilities the additional requirements for defense and intelligence. So that work is underway. But today, a proud day to get the commercial work well underway.
Today's a proud day.
Thank you to the CHIPS Act. Thank you to Congress, President Biden, and the.
Oh, you're such a wonderful man, Brendan.
Okay, level set with me now, because we're almost exactly 3 years and 1 month from when you started this job as Intel CEO. The stock is about a third lower than it was then. There's been a lot going on
ouch.
in the market.
Low blow.
How far are investors now from being able to tell?
Okay, Washboardjim has his support level
and in
at 4234.
Take a while. This wasn't going to be overnight. How far are investors from seeing whether this?
Get ready.
Yeah, and I certainly believe that we have taken
Come on.
on a journey. We said very clearly this is
damn thing.
Years to turn the company around.
I just don't believe what's going on with
journey, and now we see the light at the end of the tunnel on the process technology. We just held our Foundry Day, where the industry, the EDA community says, "Oh, the industry can build on Intel."
Okay, here we are.
Manufacturing partner. The products, our product execution has, almost entirely,
Spy looks like it's reversing.
Back to delivering the products to our customers that we said we would.
There it is.
Launching new categories.
Washboardjim nailed it.
PC, and now this entire AI craze is going to demand more.
This is going to be a scalp.
Than even we imagined.
I'm looking at the $41, the $42 strike, the $42 strike.
We're a little bit over halfway through the challenges to rebuild this iconic company, and we're appreciative of everything that's come together.
At 78 cents.
5 nodes in 4 years, still on track.
Absolutely, and this will be the culmination of that. Right
Okay,
behind us as we
let's do it.
the 5th node.
This is risky.
And that'll be manufactured right here.
Let's put that into context for people, because we've been talking a lot about chips lately. I was in Austin a little more than a week ago. With
It might be good to.
Jensen Huang, and NVIDIA's been putting out news this week, just talking about Blackwell, which I believe is made on TSMC's latest 4-nanometer process. Now, you have argued that this isn't apples to apples when you're comparing
Apples to apples.
technologies, Intel's to others. So, if you were to make Blackwell for NVIDIA, how long before
38, I wish.
would be ready to do that at scale?
Well, what you see behind us here, would be the sub 2 nanometers, or 18A, as we call it. So 2 nodes more advanced than what they're using today.
Right.
For that, so that makes it faster, smaller.
If you can count to 3,
performance capabilities.
you can trade with me.
Coming online next year in 2025 for manufacturing. So we would hope to be manufacturing.
If you count to 4,
AI chips,
you just might get a little bit more.
but for AMD and NVIDIA.
Anybody take this trade, let me know.
Amazon and Google, we want all of those chips to be made.
Because right now you're up $100
taking advantage of the
if you bought
R&D
10
that's done
contracts.
here uniquely in America as well, and that's why today is such a thrilling moment.
And you make a business decision.
Any new news on when that
And then you go to the beach.
competing with the others is going to be ready?
Coming very soon, very healthy. We're bringing it up in the labs, and the systems are getting bigger that we're running it on. Very healthy. You'll be hearing more about that soon.
All right, going to take a pause here. We're going to hear more from you on CNBC here on Overtime.
I've heard enough from him.
Thank you. Send it back to New York Stock Exchange.
I want to hear Howard Cosell.
John, thank you. A reminder, by the way, tune in tonight, 4 p.m. Eastern, actually. That's later today. Closing bell overtime. John will have much more.
Okay, let's find another trade. Keep an eye on this one.
Pat Gelsinger. Jim, let's bring you back in. I mean, interesting, of course, we talk about NVIDIA, we talk about Blackwell, and then you got John asking, hey, is this facility ever going to be in a position to produce those chips?
Well, look, I think that the problem
Watch the
is
QQQ.
finish the facility. Jensen will.
We got a 1, 2, 3 bounce support level.
I mean, that is what keeps
The
happening.
QQQ.
Put out some chips, and they were terrific. And then right on top of that,
1, 2, 3B.
all the big
Pull back.
are the
I'm going to
latest
double
and
bottom
greatest.
off a
It's
wick.
Absolutely, there'll be demand for what Pat Gelsinger is making. But the real demand when it comes to the Amazons and the Alphabets, when it comes
And
to
if I don't
Meta's,
hold this
when it comes to
number,
Microsoft, are going to be for whatever is the fastest at the
which
time.
Intel here.
And what has software. NVIDIA will have software. Intel is not a software company. So Intel will be at a disadvantage. That said, look, it's very difficult to get engineers in our country. It's 50-1 between Taiwan and us in terms of the number of engineers.
We're back at 78.
It's very, very difficult. So I think this is a great thing that the Commerce Secretary is doing. And these plants would not be built because they're uneconomic without the subsidy.
Yeah, that is part of the problem. And I mean, Morris Chang, the founder of
Damn it.
TSMC, American, of course, he was at Texas.
The double bottom.
Much of his
I didn't see
life. He's an
that.
older gentleman now. He's complained about how expensive it is. I mean, in Arizona, where they're trying to build a new fab.
Everything I know is from Morris. I just read everything he does. He's a good friend of Jensen's. And Morris is someone who is idolized in the semiconductor capital equipment business, which, of course, is where the real IP is. Real intellectual property belongs to the KLAs.
We're at 71.
To Lam. And Morris Chang, godfather of the construction, it used to be another. There was Jerry Parker, who used to be the architect of the great Intel plants here, Israel, and Ireland. they lost that. They lost their way at Intel, and Morris took up the vacuum. That's why Taiwan has such an advantage.
No, I mean that the
They're
208
really
billion transistors. That's
James.
what we're talking about. The ability to microscopically put all of that. It's just incredible.
You're so right. Remember what Synopsys said.
The falling wedge.
Designs, then the
It's getting ready to
software
squeeze.
It's handed off to the software for Synopsys. And
So
then
don't
it
count
goes
your
to Taiwan
chickens
Center.
before they
Use that
hatch.
software component in
Yeah.
order to be able to stay ahead of everybody else. That's how inference occurs. Remember, inference is the ability to ask a question in English and get an answer.
We're out of the
And
wedge.
as these machines learn more, the answers more.
We're at a tweezer bottom.
That is not what Intel does, and that is not what Intel will be able to do when this plan is done as efficiently as NVIDIA or AMD.
Yeah, well, but they're not writing the large language model. They're not, using. They're not behind that side of it, NVIDIA. I don't want to get too right.
Break it.
They're allowing the platform
Falling wedge.
for the large language model. Correct.
Correct. And
Type it in. Break the 9. Target the 63. 10-4.
Quickly. Look, I think Intel is going
Say
to do
yes.
terrific stuff. I am not denigrating. I think this is a great idea, and it should be done there. And we know that from the supply chain problems we had during the pandemic that we are so vulnerable. We need this. At the same time, we have to understand that these chips may not be as valuable as they seem because of what Jensen is thinking about doing 5 years from now. Right. This plant may not produce chips.
Oh, Jim, shut up.
For say 3-4 years, and Jensen will have moved on.
He did talk about 5 years as well, getting to human level AI or general
Okay,
intelligence.
falling wedge.
Which is a conversation.
And then I'm going to type in
Yeah. What?
trade.
We're all concerned about the possibility of these computers, let's say, having biases.
Out
or being able to
of
say,
wedge
you know what? I think that after looking at everything,
to break
they're smarter than we are.
the 9 EMA
Talking about for the last year.
long
Listen to me at all.
the 63 EMA on a minute.
David, you've been worried, and you know what? I'm a
MIN
little bit more concerned. I was just trying to get it so that
you're getting
I was doing a little TV thing.
You're getting a little more concerned now.
Oh, shit, yeah.
Huh? All right.
Misprint.
The ability for the machines
2 of
to be
them.
able to have their own opinion.
It's also,
and I don't know if I want the machine's opinion on Moby Dick.
I know.
I want to look at all the
Wedgie.
And what they're going to do, and all the
Then
softwares that are going to have their own
EMA.
language models.
I don't know how I got RMS.
As well, because they don't want to just rely on the U.S. And there's a lot of roads you can go down.
You know, David, I come back
Break.
with newfound
Not Braille.
recognition of your concerns.
Braille.
And I think we're going to have to address them continually because it's what I
Falling
saw.
wedge, trade
The machines
out of the wedge
have
and break the
conceivably
9
have
EMA.
disregard our opinions.
I want to talk to you a lot more about
Jim,
that.
by the time you get this typed in, you should be out of the trade by now.
Despite what doesn't seem to be great news from the company's CFO presenting at a conference in which he really does give guidance in terms of.
So now we're squeezing between the 9 and the 21, which
as much as for the first quarter, -4 to $4.5 billion in free cash flow, some of which will not.
nice
be
little
made
pop
up
to the 63 for the exit idea.
being
Outstanding.
positive, but again, and it goes back to something called traveled work. For years, they
Now, if you're in the trade and you don't get green, you don't take profit.
right, and that's got to
You had your
change.
chance.
That's a quote from Dave Calhoun previously. And so
I'm
they
holding
decided,
on,
as you
man.
saw there, to hold airplanes that are positioned longer and get after this traveled work broadly. It's
Falling
gonna impact
wedge.
revenue, earnings, and cash flows.
Okay, here we go. Get ready.
In the year, and as I just said,
God.
it will be between 4 and 4.5 billion. It's essentially has to do with the fuselage that they used to get from Spirit. That was
You dirty rat.
non-conforming. Now they need it to be fully
90
conforming.
cents you could have got.
And it's just going to have the effect of making everything slower, Jim, for Boeing, as they sort
Well,
of.
Boeing sucks, if you're asking me, David Faber.
Correctly point out, this is a cash flow story. That's how it's always been valued. And the cash flow drain, it's worse than expected. Should the stock be up to? No, it shouldn't be up to.
No, I'm kind of curious as to why it is.
Well, I mean, there may be people who think that what they're going to do is get control of fuselage and do Spirit and have Spirit not do Airbus work. But David, what really matters is that you and I both know from the crisis during the pandemic, it's all about the cash flow at Boeing, and so therefore the people who are buying it must think it's about something that is ephemeral versus the cash, which is permanent. So.
They did say when it comes to Spirit Aerosystems and
I should have added on to that.
that company, it would be cash.
That'd have been
not
pretty.
equity that they would use. And the CFO said
Get out at
Spirit shouldn't
90
be a
cents
business, it should be a factory.
and buy it at 75 and
Well, when they should have thought about that.
All right, I'm going to give you a bond report now, Jim, because it's that time.
Sure.
And I know you care. But we haven't even talked about the Fed. Let's take a look at how treasuries are faring. You want to throw something in here during the bond report? Go ahead.
The Fed meets today.
We'll be right back.
There's a presser.
So here's the pullback. Now we need the boom. Be nice to keep a higher low right here. We need the boom. Boom a chicka, boom a chick, boom chick chick. The crowd doesn't know what to do. Tesla, wedge. The crowd's going wild at the sports arena. Break it. Break it. Oh, what'd I do? I put the SPY on there. It's not the SPY, it's the Intel. Dun-dun. Okay. I need you to do something else besides dip. Watch the QQQ. Watch the QQQ. The crowd's going wild here. Yes. I need silence. Jim. Just trading the stock. Spies at the VWAP. This is the third attempt. Spies at the VWAP. So I'm going to go into the kitchen, give Nancy Pelosi a kiss, and turn on the hot water.
Look at some of the laggards right now on
mRNA, lager, aluminum, LILMNREGN, and SIRI, which I never invest in. Now we're waiting for the breakout here for the boom. We've got the snake, breakout, pullback, and all we're waiting for is now the boom. Do you understand me? Say yes. Any moment we're going to know something, how strong this stock's going to be. If it doesn't hold this trend line, then we're weak. If we break the 21, we have two resistances that target. Oh no, don't. Pal will have nothing but good things to say. I'll be like Arnold Horshack. Ooh, 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 ooh. Mr. Powell, I got a question. Why are you making the rich richer? Uh-oh. Okay, it's time to add on now for the double bottom. No, we're still good. Right now, we're still good. Right here to the penny. Maybe just 1 cent below. We're still good. Right there. 42.21. That's about where I said the first time. Now, as I teach people how to trade the sneaky snake trading strategy, all we got to do now is break the 21. We're still bullish because we stayed above support. This is called an inverse head and shoulders. We came back and touched it for the second time. Yes, we did. I saw it. 5, 4, 3, 4, 3, 2, 4, 3. W didn't see the humor in that.
Download the app.
All right, Jim, what do you got on the big show tonight?
God, come on.
Final portion of my interview with Jensen Huang from NVIDIA. Amazon Web Services.
You were playing with David Wong from NVIDIA?
Talking about exactly what John Ford's doing, which will be interesting. And then SoFi answering some questions about why the stock fell down so much.
Oh, great show.
Jim Cramer.
Oh, thank you, David.
You're ever coming back, or you just staying out there now?
Actually, I'm going to stay out here for the rest of the week. I'll be at one market later today. Just learning, just learning. Thank you for watching all that stuff.
And you say you're a married man?
We both know that we have to think about it. You're right. I want to congratulate you. I was a little too glib about what can be accomplished with AI.
Well, now you're starting to worry me.
I was too glib.
All right, we're going
He's worrying me too, David.
The guardrails are necessary. I was too glib.
He's playing with David's Wong.
Great day and a great show tonight on Matt. All right, coming up right here, it's a rough morning. We talked a bit about it for luxury retail. Signet Jewelers, though, also included in that. The CEO's going to...
God, come on, break. Do something.
Earnings and guidance.
How dare you? We're in a perfect position to break to the upside. Well, if you're in this trade, I don't know. Seems like you're just sitting here at support, not doing nothing. It could drop. The longer it takes, we're back at the second. Okay, we're going to call this the second touch. I called it there, but We'll make that the second touch. Yes, Jim. Whatever you say. We know you're going to make profit on this trade. That's all that matters. And I got 7 hungry children I got to feed. All the under the age of 3. Food's up 30%. Breakout. My great grandma, she eats dog food. I need to help her. Come on, you platform. Is it my mouse?
Good Wednesday morning. Welcome to another hour of Shit. Street. I'm Sarah Eisen with David Faber, live for you as always from Post 9 of the New York Stock Exchange. Carl has the morning off. Take a look at stocks. Happy Fed Day. We'll get the decision and the news conference and the dot plot and a whole lot more this afternoon. Ahead of that, market's doing a whole lot of nothing. Just waiting waiting.
Watch your mouth.
S&P 500 down 2 points. Nasdaq's down 18 points.
Right now we have an ascending triangle double top, and we want this thing to break.
March up to near year-to-date highs.
And that's the 51 EMA there.
It calmed down yesterday. It's calming down a little bit today. 2-year yield stays below 4.7 right now. So there's a little bit of bid for bonds. 10-year yield below 4.3%. We're 30 minutes here into the trading session. Here are 3 big movers we're watching. Shares of Chipotle rallying this morning. Fast food chain planning a 50-for-1 stock split, making it the first stock split in Chipotle's 30-year history. Shares are up 30% this year, 85% in the past year. Shares of CarMax are moving higher too. The used car dealer upgraded to buy from hold at Needham. Needham saying the used car vehicle market could be on the verge of a multi-year recovery. And we're also watching Intel. The company set to receive $8.5 billion in CHIPS Act grants.
Yeah, and it ain't doing me no good.
With billions more loans possible. CEO Pat Gelsinger telling us in the last hour that the company is halfway through its turnaround challenges. We're going to talk.
I know what the problem is.
And you can catch more of that interview.
I just now figured it out.
On Closing Bell.
I don't have my shoes off.
It is Fed Day.
Yes, it is.
David,
one of your most happy days.
Let me take my shoes off and let's see what happens.
It's exciting to preview it too because the Fed has 2 mandates, right? Stable prices, inflation, and maximum employment. And we're at a point now where I think we want to know from Fed Chair Powell which one he's a little more concerned about at this point. For the last few years, it's been
I don't understand it.
high inflation rates. Inflation has
Every
come
time I
down.
take my shoes off,
Has it come
all the
down
dogs
enough where
in the
people
apartment start to
worry
bark.
about the jobs market, where we are not really seeing a ton of stress, but signs that it's cooled off. The
Pulled off
economy
from an incredible rate, though, right?
from an incredible rate, but they want to get ahead of any
If you ever want to get rid of bed bugs,
weakening
just invite me
in the
over. I'll take
market
off my shoes.
unnecessarily by just keeping rates so restricted and high. And this has been a Fed that in the last meeting, in the last few public times, there's been concern, or at least there's been caution around not keeping rates too high and wrecking the soft landing, which is what everybody wanted, including the Fed. So yesterday I showed that CPI was remaining sort of stagnant in a
Dang, man.
level. Tom Porcelli, the CEO of PGIM, said, hey, you gotta look at PCE. That's the Fed's preferred measure.
I don't
so we
think-
made a chart for
well,
that
just-
of PCE and core PCE.
I'm just gonna hold it here.
Which shows there has been
This is the second touch if that body stays right there.
and in fact, if
And I'll be a lot more happier.
numbers, PCE is back down to 2.4%, and the Fed wants it at 2%. So
We're close.
we're close. So they can look at that chart and
Sarah,
say, hey,
what are you wearing
we have
today?
made a lot of progress. We are going in the right direction. Our next move can be a cut, and they won't have to kick that can down the road.
You said that last time, honey.
So now we're thinking maybe not hawkish.
She's wearing pink.
The market is positioning hawkish, right? Yeah. We've seen yields run up. We've seen the dollar strengthen. We've seen stocks sell off. He could be a little more hawkish than he has been. January and February showed disappointing inflation reports, disappointing on the progress front.
Okay, I'm going to add, well, no, it didn't dip. I should have added when it was at 74.
3 cuts this year, to 2 cuts this year. 2025 dots will be interesting.
So it's gaining,
should upgrade their
it's not hurting.
growth forecast for
The price is not hurting.
Should downgrade their inflation forecast. So all of that would
Open
be
interest is at
consistent with what's happening
4.53.
right now. But
Just a little above the volume.
On how
We need a volume
concerned should we be
spike.
about those January, February numbers
what we
and the
need.
lack of progress on inflation, or looking at a PCE number, which we know measures.
Did I ever tell you that I love you? You should have never called me last night at 1 o'clock.
Right, and jobs and how the economy has been doing, and it's so far so good, right? We're at a much higher growth rate than we expected to be this time of tightening, but we're looking for signs of weakness. And one thing that's just going around the trading desk this morning that I wanted to show you with
She just a little bit of good news is all this market. This market doesn't care what the Fed's going to do.
back to levels pre-COVID and climbing a little bit higher than those levels. So those are kind of leading indicators we watch.
A little bit of stress, perhaps.
I believe we close higher. What about it? Magnificent.
Correct. And so that's something we need to pay attention to, and it's potentially a leading indicator. And it's no wonder, because if you look at what's happened to interest rates, we went back to March. We're in the March meeting, March 2022. That was the first hike in this whole cycle.
So 2 years ago.
So we were at 0 rates, right, until then. And if you look at things like credit card loan rates right now, between then and now, March 2022, March 2024, we're at 21%. They were at 16 then. I mean, that
hurts.
That hurts. Look at the personal loan, 5-year fixed, from 12% to 21%.
Randy, are we going higher?
We've told that story here. 4% to 7%. Used vehicle, and you can go across a number. This is how it hurts the average consumer.
What is that?
And so it's no wonder we're starting to see stress, and the Fed knows this.
I asked, are we going to break this flag and go higher?
About keeping rates tight, keeping the brakes on the economy at a time where inflation is showing progress.
Are we going to close higher than where we are right now?
It's an art, not a science.
It is an art, although data dependent.
Data dependent. Can't wait for those AI models.
Ladies and gentlemen,
I know,
if you can count to 3, you can trade with me.
That would not be fun to talk about. And the other thing is I always monitor the companies for how they see consumers doing. General Mills had a pretty decent quarter, but they're still seeing volume
Ford paying this morning?
falling, and food inflation. Listen.
Ford. You traded Ford?
We still see the inflationary environment. It's 4% now. It was double digits last year, and long term it's been kind of 2 to 3%. And so hopefully we're headed in the long term direction as we look at next year. We'll certainly give guidance in June on what that exactly looks like.
Still
Update Ford accident.
So that's hurting consumers. We've heard that. It's value is one of the words that I have heard more than ever in consumer company conference calls. Signet Jewelers. We're going to talk to Jenna Drosos this hour on Squawk on the Street, but disappointing on the sales front and on specifically on guidance. And here's what she says about the consumer.
All the shitty stocks are moving today.
Valentine's Day shoppers were late and highly value motivated.
Look
As
at
a result,
Boeing.
January and early February trend was quite soft, with comp sales down mid-teens.
God darn it. Intel.
In early February, trends have notably improved.
I don't want to listen to you, Gina. Right now I want to see Intel pop. So I'm going to go into the kitchen, grab a Valium and a shot of vodka. Dadgum, that was a major support. Okay. If I think it's going to pop here, I'd add on. But I'm not that. I'm $30. Jimmy will wait. I'm going to walk away. I'll go into the bathroom and fart, and I'll be right back. Or no, I won't either. See if I can get another. $42.19 is where I said earlier. Amazon, 35 cents. I'm saying we're going to hold this support. $42.19. SPX is up there pretty high. SPY broke the VWAP. It hit the 200. Sarah, don't ever wear that pink top again. Not with your arms showing like that.
World, Sam, that are growing fairly quickly. I'm just sort of curious as how you see that, sort of those big mega caps, the handful of them, versus the broader market overall.
Sure. Well, I've been around long enough.
Closing in on the double bottom. I'm going to add on here. Take a risk.
Cheap at 60 times forward estimates. Today
I'm still in the money. That's what matters right now to me. I'm not far out of the money, which makes me feel good here.
And typically, at least over the last 20 years or so, that has
if I get 72 cents,
resistance level. So I think
there it
we're
is.
going to have to see improved earnings estimates
Come on.
in order for technology itself to move meaningfully higher. I also acknowledge the fact that we are seeing a pretty strong first quarter relative
I'm going to go into the kitchen.
going back to World War II. And if you look
Turn on the water, make some coffee.
15, 13 of them had declines averaging 11% that started predominantly in the...
If you're going to have anything good to say about the S&P, say it.
Relatively soon.
There it is, 72 cents.
Sam, thanks for your time. Always appreciate it.
My pleasure.
72
As
cents.
we head to break, here's our roadmap for the rest of the hour. Reddit getting ready to price its IPO tonight and begin.
That's going to be good news.
Investors need to know before buying in.
Plus, Apple's Tim Cook
Up.
is in China. He's there opening up a flagship store, and it comes a bit slowing in demand, perhaps for iPhones in the country. We will head live to Beijing.
And as we mentioned, Signet Jewelers beating earnings estimates, boosting its dividend, but the stock is falling hard right now. The company's CEO joins us later.
Yeah, what do you think about
Big
that?
show still ahead as the Dow recovers, only down 9 points right now.
Yeah, it's going to bounce here in a little bit. I'm going to win the bet. Okay, Jim, you nailed it. I need 75 cents to break even. I'm in the even. Good job, Jim. Jim, is that a high or low? Yes. Falling wedge. It's time to walk into the kitchen now. This one trade's going to give me a heart attack today. Fascinating. My suggestion when the split happens on Chipotle, as much as I can't stand the company, I think it would be a good long investment. I'd trade 50% pullback today on the run. Maybe even back to the bottom. I'm back to even here on Intel.
On the trial.
It's one of the most highly anticipated IPOs
David.
of the year, in which there haven't been many highly anticipated ones. It's going to price tonight, start trading tomorrow here at the NYSE. I'll let
You remind me of the kid up the street that wore the bow tie to school.
Well, I can tell you why it's highly anticipated. It's because it's been 827 days since Reddit announced it had confidentially submitted its paperwork to go public, and it appears that long-awaited debut is nearly here. Reddit is expected to price its IPO after the close today with a trading debut tomorrow. I'm told the pricing call between management and its team of advisors will begin at 5 p.m. Eastern. In the meantime, though, I've heard from a few sources.
Well, what's the IPO name for Reddit?
Too much on pricing.
REDT?
Just confirmed Bloomberg headlines that said they're considering pricing at the high end of the range or above. So we'll see how that filters out throughout the day. Reddit has been marketing a price point between $31 and $34 per share, which implies a fully diluted valuation as high as $6.4 billion. That's a 36% decline from the $10 billion valuation Reddit received in a 2021 private funding round. In the prospectus, Reddit calls itself a, quote, global digital city where 73.1 million daily active users collaborate through different communities with common interests. But the headlines just while this company was on its roadshow encompassed a letter from Nokia alleging infringement of some of its patents and an inquiry from the FTC into Reddit's agreements to share content with third parties to train AI models. Some investors were surprised that Reddit, despite being a 2-decade-old company, was not profitable.
That is right.
Profitability
Magnificent.
Users, leading to a user blackout last
It was political. Because it was in Israel. So what the hell are they doing here to us? They're flip-flopping?
to not be profitable. What is the reasons that?
What's the IPO for Reddit?
Their inability to get to that important metric.
Yeah, no, that's exactly the concern from some investors as well. It took them a while to really monetize and seek out advertising. 98% of their revenue right now is advertising based, but they're still nascent, kind of in that journey of using advertising. They didn't use it for a very long time. They weren't monetizing any of the content for a long time. They say that that total addressable market is in the trillions, alongside that of AI, alongside that of commerce. The latter two of those, they haven't yet to really fulfill in terms of their ability to, impact the top line, at least in 2023 numbers. That said, they do have that agreement with Google, so we should start to see some changes there in terms of that breakdown of their top line revenue. But again, this is a company that was founded in 2005, but really didn't start monetizing the site until recent years. Sarah.
I thought there was a really good deep dive on CNBC.com about the Redditors, the moderators, the users, and how they're trying to get them and inviting them to participate. And a lot of the people that our reporter spoke to didn't sound too hot on it, Leslie.
Yeah, no, it's interesting because as you think about pricing tonight, you have on one hand
Come on,
the
hold.
Redditors, the users, the moderators, friends and family who are getting 8% of this deal. But then on the sell side, you have employees. So as you think about pricing, you don't want to price it too low and risk upsetting your employees who are...
Jimmy's down $100 now on
in some
Intel.
cases, 19 years of holding equity in this company. But on the other hand, you don't want to price it too high that you upset your users and risk kind of an additional backlash if the stock were to trade down and they had bought in. So it's a kind of a difficult dynamic that they're grappling with today.
Yeah, and it's been a while since Wall Street Bets, and you had that on.
See, it breaks support, man. It just doesn't stop.
Every day.
If you want to sell it.
Leslie, thank you. Leslie Picker. Speaking of IPOs, next hour on Money Movers, don't miss the CEO of Astera Labs. That company going public today on the NASDAQ. We're going to talk to the CEO at 11 a.m. Eastern, not just a test of IPOs, but also AI-focused IPOs. There's a real AI story here, and it involves semiconductors as well. Still to come, shares of Gucci owner Kering dropping today on worries over sales in Asia, specifically China. We're going to head live to Beijing to get the pulse of the consumer. Plus, Apple's Tim Cook is in China amid growing fears about iPhone demand there. More on all of that after a break.
China. I'll be right back. Waiting. No, not going my way, but we'll see here. It's even 50-50 on the buys and the sells. I'm at 74 average, 75 on Intel. With about 1,500 in it. Hold. Can't lose the keys. Doo-doo-doo. My big trade ain't come in yet today. It will.
The big
Uh-oh.
impact has been
Spy
between
broke out.
prices and it's very typical inverse
Double
correlation
bottom.
with
Dadgummit.
real interest rates. And
There it is, right
that
there,
just Totally
man.
broke down 2 years ago. And
Shoot.
yeah,
I tell you what,
it's-
I gotta stick with the SPY and the SPX every
central
single
banks were
morning.
buying so much gold, and it just completely swamped the amount of
It's just so
gold
easy.
that ETF investors were selling.
Look at this. I mean, it's
Here
perfect
we're at all-time
setup.
highs. We're very close to all-time highs on
Pulled back to the previous high,
ETF
off the
holders
200.
sold
Boom!
250 tons of gold and continue to sell since
I should have been watching it.
March of 2022.
That's
a
perfect
tremendous
setup.
amount of gold, and it certainly would have led to lower gold prices if it was not for the
If you can count to 4, you
of gold to central
make a
bank.
little bit more. If you can count to 3, you can trade with me.
It's really a matter of
1, 2, 3, 4. 1, 2, 3. Boom!
Silver, kind of moving down the spectrum here, kind of towards
Roger that.
copper being the most kind of pure industrial, but some tank uses too.
It's
and,
disgusting.
silver somewhere in the middle. You guys have a silver ETF that I know you're talking about right now. It seems like you guys have a little bit of a cheaper
Man.
price in some
Jim,
areas.
you missed out on.
We do. It's you know, it's pretty attractively priced. One of the things that we're concentrating on silver with is, you know, we all hear about this kind of gold silver ratio, and I really
That really
think it's kind of
ticks
to
me
be
right
honest,
there.
Unless you can tie it to some sort of fundamental reason why there should be a connection. So if we think of silver as half of the
Go,
value of
baby.
silver comes from industry, from solar panels and medical technology and different industrial uses, then we see that gold is really driven typically by interest rates. So when do we get those kind of disconnects? We get those kind of disconnects in pricing between gold and silver at a time when the rates are either low or headed lower, and industrial demand is low.
Anybody trade this?
So, the low rates will make gold rise typically, and the low industrial activity will make gold fall. So even though we're at all-time highs here for gold, silver is trading at a 50% discount to its all-time high, which occurred in 2011. And so
Very good.
that that investors aren't appreciating really the strength of the Chinese economy or emerging markets economies. And what gives us some level of confidence in that is that we're seeing the same thing in
Very
industrial
good.
metals. We're seeing
Heck
the
of
same
it.
thing in growth
Both of them were great
market
setups.
equities and Chinese equities.
You see 'em, don't you?
Discounts to developed markets. So it tells us that this whole theme is really kind of broad-based, and you know we've heard for a number of months now, maybe even as long as a year, that China.
You shut up. I preach this every day. I'm still holding on. We're squeezing again here on the Intel. I might get out of it if I can get even. We'll see here. SPY. Watch this. There's my water. I'll be right back. One, two, three. Break out, pull back, boom. Man, why didn't I watch that? I knew I had to watch it today. Fomac. That was a really stupid move for me this morning. So I get a, oh gosh, another C. But this is what I teach. This is what I preach. When the money's within reach, I'm constantly in the breach. Boom, baby. I mean, 1, 2, 3. Breakout. Pull back to the 200. Boom. Oh. You stupid moron. Jim, as our mentor, you have been demoted 5 points. Instead of 5 notches, you are now 4. If we see any more of this recurrence, you will not be rewarded with your Christmas bonus to go to Mexico. One, two, three, breakout, pull back, boom. We're at 76 now. Jim's in the green. It's the prettiest thing that I've ever seen. If I call out poetry all day long, will you join me in a song? Woo! Damn, this really sucks being stuck in this one. I should have been trading that other. Get ready, we're pulling back to support. On the count of 3. The 200 SMA. Put the SPX or the SPY gem. Which one do you want to trade? We'll trade the SPY. Check out the SPX here. Okay. Oh, this looks good too. You ready? 1, 2, 3, breakout, boom. What was resistance now becomes support. 10-4. Rende. On the 5220s or the 5210, 5215 will let me in. Oh, it didn't hold. All right, this is going to be good. 5220s. Okay, Jimmy's getting ready. Three black crows standing in a row. SPX. Where's the X? Huh. There's my X. SPX. Lotto. strike. 52.20 at 3.60. Yeah, 360. That's what I take. Okay. 3 black crows just got caught smoking a bowl. And Intel, ooh. Ugh. Come on, man. Come on, man. It kind of broke support. I should have waited because I think we can hit the 200. I still think we can hit the 200. Tweezer bottom. Break it. 5178.16 cents needs to break. God, come on. It's too long. Spy says it's going up. Whoa, SPX is $4 there. Uh-oh. Ladies and gentlemen, we just broke resistance. The next resistance level will be right there at 5178.99. What's going on, baby?
To outperform, price target of 95, up from 85, but they said after meetings with Best Buy, they've increased their confidence in their business, showing signs of stabilization and improvement after 9 consecutive quarters of negative comps. So the replacement cycle, they believe, is kicking in, especially for products that were purchased in 2019 and 2020, and innovation is starting to gain traction. So they believe at this point, Best Buy is getting closer to at least a positive inflection on its comps and profits. And my goodness, you'd hope so. I mean, I think that we've been calling for the bottom in some of these hardware-like devices and like electronics in general for quite some time. You'd think they'd have to be a beneficiary of that, or like home ownership stabilization. They also have appliances. I mean, you'd have to think, given like the strong consumer, they should be a beneficiary of that. They haven't been.
Yeah, it's been kind of an awkward place to be. All the tech excitement has been focused on the enterprise side. You know, we're not buying the new Blackwell chips. So kind of the consumer electronics can be a little overlooked here. Chart-wise, KG, how's Best Buy shaping up?
I'm not buying it.
Well, the chart has actually been a little bit erratic, but it is in an upward trend here for now. So we have some key areas to really focus on. Point A, just showing that the stock has been in this ascending channel, which actually is bullish, but we are starting to see a little bit more volatility as of late. And that is actually leading us to some key areas. And I did some Fibonacci retracements from the
QQQ back down
of last year to the lows of November 9th of last year. Some key areas to look at: the 61.8% retracement level sitting at $76.41, and the 78.6%
Best Buy Fibonacci.
$8.11. We're going to bring that back up here in a little bit. But if we go to point B, which is going to be on that right hand side, we are starting to see the stock consolidate and then try to break up higher here. And it did that 2 times, and let's say in the last 3 months, 3.5 months or so. Are we now in a consolidation phase where it's going to try to retest those highs? That is going to be the biggest question here, Oliver. So one thing with
Oliver.
$76.41, once again, that Fibonacci retracement level.
Oh, that's funny.
Eye out on those particular levels. Last but not least, we have the MACD. Still bullish, but it does look like it is losing a little bit of momentum, potentially seeing the 12 EMA cross below the 26 EMA. That's not a good sign, but it is above the 0 line. I would say the stock is really cooling off before either breaking to the upside or
Intel's not going my way.
We're seeing the consolidations so close together, though. That's a little bit more bearish than bullish for this name.
All right, interesting. So arguably uptrending, but still pretty subdued. Kind of where we were a year ago, and erratic, as you put it. I like that phrase. Okay. The negative one this morning, Wells Fargo. What stock do you go to when there's too much positivity?
Wells Fargo.
Okay, but I will say though, even though we did get a downgrade from Citi, they did raise their price target to 63 from 57. What? So 63 would be a 3-year.
See, she looks good dressed up like that.
Well, right. I mean, to me, that is something that stood out, especially when you look at the way we haven't moved at all over the last 3 years in Wells Fargo. I mean, I know we have, but we're
WFC.
I feel like we've been stuck at this like $50, $60 level for quite some time. But they did say this has been one of their overall top picks among the local systemically important banks, given the potential for its EPS revisions, but that's now likely priced in. So they said they continue to see some tailwinds from the fixed asset repricing and growth across fee categories, but at this point just trading at a relative to some of its peers.
So it's the old take profit downgrade. They're like taking a victory lap here for being right on it.
Yeah.
And now they're saying, don't chase it.
But the average price target is $56 a share, which also implies no movement. I mean, we do have earnings, April 12th. I actually thought they were coming up closer, so that feels like an awfully long time away to have this earnings lull. But they do kick off the unofficial start to our next earnings season, April 12th.
Okay, all right. Chart's not looking terrible on the year. I mean, Kevin, is it trending up, Wells Fargo, in the big picture?
Yeah, I mean, if you're looking at the 1-year daily chart, you have to say Wells Fargo has been outperforming, to say the least. It's actually a really nice looking chart. Now, if you're looking at a longer time frame, yeah, you can kind of pick and choose, but relative strength right now does point to the upside here. I would say point A, we have that ascending channel. We continue to talk about that, but it's a very long basing channel, and I actually extended it here so we can actually highlight some areas to really focus on. We saw that this ascending channel basically was broken at the end of December, where we started seeing some relative highs.
It's a good looking chart.
With some very strong volume, very key area to focus on, but also
we've hit my last Fibonacci on the extension.
200-day SMA, which is in red, has been an area of resistance. Now that will flip into support. Point B, we see this stock actually consolidating between mid-December and February before trying to break out even higher here. Today, the stock is touching the 20-day SMA before consolidating. Now,
SPX is retesting.
Financial stock like this and this rapid move to the upside, actually over the last month and a half, we have not seen this type of.
I got this one at 360. We hit 370. We could have hit 360, but I didn't see
I
it.
think that does lead some credence that maybe we see a little bit of a.
Now we're going to find out.
Potentially hitting that 200-day SMA, and I'm also looking at
breakout
support sitting at the $51 level and then $47.75. Last but not least, RSI is hinging lower. That's not a good sign. That's actually a bearish flag right there. And
Where?
we also have a signal where the MACD actually did cross 12 below.
Is that bearish?
Bearish, but above the 0 line.
That's not bearish.
Once again, I think it does cool off here a little bit. That velocity in a financial
Maybe
stock is
this
something
down
that's
here
hard to
is.
maintain
Wow.
over the long term.
Yes.
Wells Fargo have been so good, it might be too hot for its
But
own
not
good. So I think
that.
the city note here is spot on.
Friend.
Saying, you know, it's going to hang out near these levels, but
Okay, we are now
the
at
trade might be done
$4.
to the upside for the moment. It sounds
on the
like
SPX.
their take of the analyst aligns pretty well with the chart.
And the Intel stock, I'm only at 68, so it don't look that bad yet.
And Jenny Horn coming up.
140.
We got market meetup, but
$120 down.
Stocks are perfectly unchanged. It's like the most boring first hour of trading we've seen in a long time. We'll give you an update on
Boring.
the IPO situation, though. Don't forget, we're looking for Reddit this week. Rita's going to take a look at the public markets next.
That's a beautiful chart on WFC.
I remember when I first started.
Oh, God, I remember when I first started dating
You would
Jim.
experience turbulence.
Man, he experienced turbulence on the airplane, and Jim said, honey, don't worry, I'll grab you. The safety belt won't hold you, but the door's about to swing open. And Jim, my boyfriend, when the turbulence happened and the door swung wide open, he flew out the window, and I never saw him again.
It's all fake news. It's phony stuff. It didn't happen.
Woo! Okay, we're at 410 on the SPX. Now this is a resistance level, and we hit it. You could make a business decision and be out with $50 a contract at 410, or you can hang out with Jimbo and take it on the chin. God, his poetry sucks. No, actually, Jim, that's some of the best poetry I've ever heard. I thought Karl Marx was good. Ain't that right, Jen? Yes, Jim, I do like your poetry. It makes my trading much better. Yoko, you can tell your wife about my poetry.
Or download the app.
Signet Jewelers slumping over 11% now on a weaker than expected Q4 sales number.
Sig.
6.3%. Also issuing revenue guidance that came in below the street estimates.
Jewelers.
Here to discuss in a CNBC exclusive is
No.
CEO Jenna Drossos. Welcome, Jenna. It's good to have you back on.
Hi, Sarah. It's great to be here.
So the profitability numbers look good, but it's those revenue numbers, and particularly the outlook when the street was expecting positive comps this year, and you still expect negative. I think that has people concerned. What is driving that?
Sarah, got a secret. You predicted 6 interest rate hikes. I haven't forgot yet. Remember when you had that orgasm that day on December the 30th?
Testament to the flexible operating model that we've put in place.
Oh, we're going to have 6 rate hikes. Oh, my God.
We saw through holiday and even through Valentine's Day is a reasonably weak customer, very value
6 rate cuts, excuse me.
We're seeing low price jewelry really do well. But on the positive side, we are predicting the return to engagements this year. All of the milestones that we track, and of course it's important for us.
It's important to know that this is irrational exuberance. And I got a beautiful 1, 2, 3 off the 200 SMA. So this thing will be shorted to $83. And I'm going to set an alert at $83.50. I'm going to set it off this wick. There you go, right there. If you got a problem with that, contact 1-314-866 shit, SHIT. Bam, right there. I'm gonna wait. SIG. So they ain't been selling any zirconians here lately. Mister is up $44. I will bring it to your attention what I said yesterday. That's right. The 21 EMA on the daily. Now I'm going to go back and look at my... Oh, we're at 420. Randy. Did anybody take this trade with Bobo? Or did I take it with someone else? 430. That's approximately $70 a contract. And I have plenty of them. 5. What about your Intel, Jim? It's not moving yet. Just give it time. The 21 is trying to attempt to cross right now. The 9 over the 21. I'll be right back. I'm going to go get some more coffee. She's trying to make up excuses here.
We're very excited about the Blue Nile acquisition. It is mostly an engagement ring business, very strong brand equity, distinct from our other banners, and so we would expect to be able to see growth on Blue Nile in the future.
And just on the profitability front, the margins obviously a bright spot. You have been embarking in cost cutting. I know you said that you have a good grip on the supply chain, which has helped insulate you from some of the cost increases. How much more is there to do on that front?
We think we've still got room to continue to grow our operating margin. We announced today a $350 million cost savings effort. This really builds on a muscle that we have already in our company to drive out costs that customers don't see or care about. We were pleased to see a significant operating margin expansion in the fourth quarter, driven by our gross margin improvements, and that's the kind of savings through sourcing, through our scale, through the contracts that we do, our ability to group those
go higher.
together. We're
double top today.
We see about 150 of that $350 million cost savings in the first year, so in our fiscal year 25.
And then you mentioned the return to growth and the improvement that you've seen, I think, since February. Any change in the promotional environment, which I know is pretty high in this category?
The promotional environment was very high last year and in the fourth quarter, driven primarily by independent jewelers. They didn't predict the trough in engagements as well as we did, and were over inventoried all year. And so they had significant price reductions over the holiday season, which we've seen continue into Q1. The great news for Signet is that with our newness and the high appeal of that, and with our ability to value engineer products to offer customers a great value without deep discounting, we were able to maintain our average transaction value in the fourth quarter, and we will continue to to really support the value of natural diamonds in the category. They're rare, they're special, and they signify love.
And what about the balance between e-commerce and traffic that you're seeing in stores, and how that's evolving in a post-COVID world?
Yeah, e-commerce has been a great story for us. We got, after digital and e-commerce, even before COVID, every jewelry consultant with an iPad, and that really allowed us to come through, otherwise difficult period pretty well and with some momentum. We have quadrupled our e-commerce business since the beginning of our transformation, but while still only about 20% of customers buy their jewelry products online, almost 80% search and browse online before they buy.
Got it. Jenna, thank you very much. It's really good color. Really appreciate you joining us here on the earnings.
Thank you, Sarah, and thanks to our team.
Jenna Drosos of Signet. Stock still down 11%.
Stock's not doing well.
It's a big mover on earnings, always.
You notice that. All right, a lot more of Sarah coming up in the next hour.
Also the CEO of Astera Labs.
NBC.
Good Wednesday morning. Welcome to Money Movers. I'm Sarah Eisen with Mike Santinelli today, live from Post 9 of the New York Stock Exchange. Former Fed Governor Randy Kroszner with us on what investors should be listening for this afternoon during the Fed decision and news conference.
Then Intel awarded $8.5 billion in CHIPS Act grants, with billions more in incentives. Stock off its early high. We're live on the ground in Arizona this hour.
Plus, some are calling it 2024's first AI IPO. Astera Labs making its public debut on the NASDAQ, the maker of data center components. Counts Intel as a backer and AMD and NVIDIA as customers. We're going to talk to the CEO in just a moment. First up, though, on the markets. Ahead of the Fed decision, we've turned positive on the S&P 500 after the S&P had a sharp rally yesterday and a nice little turnaround. NASDAQ is lagging today, but just barely. Not a lot of action going into the Fed meeting. Though buying of bonds, we saw that yesterday. We're seeing that continue today. Mike, I said last hour it feels a little bit hawkishly positioned, even though the stock market has been strong, because we've had some wobbles in recent weeks, and also yields have pushed higher. The dollar is stronger.
For sure.
Maybe the market is anticipating a change from 3 dots or cuts this year in projections to 2, and maybe a more hawkish tone from Powell.
I think there's no doubt the bond market is bracing for something like that. Just where yields have gone,
Go,
I've
baby.
seen a little buying the last couple of days in treasuries, almost as it kind of going a little more toward neutral ahead
Again.
of because you don't really know what you're going to get because it has been
We're at
huge
resistance.
jump in yields. If you just
Break
see
it.
the language analytics of
You
Fed,
get out.
it has been more hawkish. They have been emphasizing they're not going to be in a big hurry.
We got a
They want
flag.
to-
We're going to try to recognize
That
this
being
trade
said, I think
here.
The good news is
So we took
that
the
this has
snake.
not really been a Fed-driven
You shut
market
up.
principally.
I don't like your cockiness. Are you and Sarah married? Because you have that convincing kind of that I don't appreciate. He tries to make it simple, though. Oh, here we go. Okay, the crowd's going wild. We just poised a flag here. I'm going to point it out to the room. It's almost an ascending triangle, but to me, the deeper the steep, the bearish it is. So we have a, slow down please. Just a small little 2% steep there, and then we run it up here into the position. Now it's retesting. Magnificent. Did you give me a number today? Jimmy said double top. And I've got many people as my witness. You can't walk out of this one, man. Uh-oh. Uh-oh. You did it again, Jim. Now, if I can just get... Uh-oh, you tell Intel's almost doing it. Looky, looky. Jim's in the green almost. Oh, gosh. $4.50. If you can get 60, you get $100 a contract. But if you get up to the double top, you'll get an extra $85.20. So what do you think, Mike? How's it feel to hang out with a fat cat like me? $4.50. $2 for a piece of toast. Change that to $2 for a bar of lava soap. I ain't took a bath in 3 weeks, goddamn lava soap. Paying $3.80 a bar for this stuff. I remember back in the day where I paid 35 cents a bar for it. Last time I bought it was 65 cents, and now it's at $3.60. Damn, Jim. You got some major issues. Jimmy's about even on Intel. He was going to make a business decision and really go in big on it, and he decided not to. But I'm still in heavy. I mean, I'm in my limit. But I was going to double my limit. That would be 40 contracts. But I didn't do it. Because I'd be out now. I'm a whale. That's a better compliment. We're at 460 now, ladies and gentlemen. You can make a business decision on your SPX. I would really think about it sincerely and seriously. You're up $100 a contract. Think about what 100 times 5 means. Mike, should we go any higher? Mister's on my watch list. I think I made a business decision. Now let me show you a trick. Okay. Snake. I'm out of the trade. I'm out of the trade. I'm out of the trade. Here, let me see here. I'm out of the trade. I'm out of the trade. Mike, I think I got a song going on here. Okay. Snake, breakout, pullback, boom. Retested. Retested. Held support. Created a flag. We noticed the flag, it was bullish. Now I'm assuming this line right here, the less slant you have, the stronger it is. The flag. The less slant, like if it was down here with a complete 90-degree angle or whatever you want to call it, 90 degree, it would be maybe more bearish. And I've seen it many a times, but I'm just going to think about it more when I'm looking at a chart like this and it's not completely an ascending triangle. It could be an ascending triangle, but I'm using the body of the candles. If I didn't use the body of the candles, I think we would have an ascending triangle. So take that in your French press and cook it. Now the second thing I wanted to say, the bottom trend line of that flag, just follow it up and hope it still becomes support. Then you're still bullish, or you can set your stop. And then it can easily come back down and hit this next support, which was the resistance in that flag. But our target is a double top exit idea, because I want to get an A+, calling this trade out. We need a wow button. Like, wow. Or have Trish Regan there on the sidelines cheerleading me on. I do believe we're at 470 now. 480. I mean, really. Waiting for Pow Pow. Waiting for Pow Pow. Double top coming. We want $5 and 35 cents, 30 cents a contract. Waiting for Pow Pow. Damn, I really want to take profit here. You would tend to think the opposite. On an ascending triangle? Okay. We're going to put it to the test. My barometer just hit $4.80. Come on, give me 5. Give me some more cowbell. Ladies and gentlemen, I want that 5 so bad. I called it 2 down here. Would you stop it, please? You're too intense. Now this is a bear flag. This candle here. Shooting star. Give me 5. Come on. Magnificent. Go ahead and get that grade ready. If you're still in this trade by now, I mean, I'm on my toes here, biting my bottom tongue. If we break this support line, I'm out of the trade. I hope I made myself clear. Yes, you did, Jim. Might be worth more than an A+. Oh shit. I didn't think about that. You're thinking out of the box. Man, I think Magnificent needs a grade for thinking out of the box. Award. Come on, Jimmy. Please, don't fail. Okay. I'm out of the box. Not yet. God, I didn't tell. You weren't watching, you idiot. Oh my. I think I had a chance to get out of Intel. was I just doing? I can't remember. Oh, yeah. Oh boy. Okay, now we're out of the box. Your last support's right here, or it's a big drop. What the heck happened there? Interesting. We're still at 460. You can get out now because it has. I don't know. I like these three candles here. Maybe that's just the time. See how it's stair stepping? But this here kind of fell. Jim, what are you going to do? I'm going to hold on. I want my $5. I want my $5. We can drop hard today. Yes, we can, KU. All of a sudden, it won't take much. But I think it wants to reach the... Oh. I got to make a business decision. Okay, I think this is my second chance. Should stop. Okay. I say that we touched it, but we didn't, but we came close. And I'm going to go in and get my second cup of coffee. Oh, okay, here we go. Oh! Oh. That hurt. Think slightly bigger time frame? How dare you? Okay, 5 minute, I'm okay. Come on, you just having a hard time today. You see the inverse head and shoulders? On the 1 minute? There's that. There's the double bottom. And we're going to go with 5 minute. Oh, gotta watch my... Okay, 5 minute. Got a double top. They use the 9 as a support mechanism on the 5. And I don't have a 10 minute on here. Let's go 5 days. And 10 minute. Applied. That should say 5 minute. Okay. That would be hitting the 200 this week on the 10 minute. We're at 460 still. Perfect, right off that pre-market low right there. Beautiful shot. Head and shoulders. Make that 50. Yeah, I like that spot. Let me see here. yesterday's pivot point. You see Monday's opening, or wherever, Monday's opening low makes a beautiful inverse head and shoulders. Magnificent's about to make an important prediction. Well, you're a little late. Now he shows up to the game. Bases are loaded. We were wanting to see this hit a double top. I did not take profit. The devil made me hold. Now see the 9's crossed over the 21. It's telling me to get out, but I'm just going to wait. This is a bull flag. Jim, you just broke out of the flag. Hello, retail traders, may I help you? Yeah, Jim, that double top you called and it started pulling back, I'm in that trade, man. I'm down almost $17,000. All of a sudden, it started to pull a downward wedge, and I counted to 3, just like you taught me. 1, 2, 3, and you said 4, remember? 1, 2, 3, 4, and get a little more. Bam! She broke out of the flag. Unbelievable. He was right. My mentor, Mike, he taught me how to count to 4. Now I made a little bit more. I mean, it has to break out here. It has no, I mean, I want to make this perfectly clear now that I can count to 4. And I used to say it, but now it brings a lot more. We're above the 21. Let it be said. Make sure your old lady don't wet the bed. You predicted we'd have weather today and nailed it. Okay, does anybody want to pay up? Magnificent. Did I just say we're going to hit a double top and pull back hard? Did I not say that? That's exactly right. He's at all. He can't type. I don't blame him. You start a trade like that, you just kind of go, God, how do you do it? Now we're going to drop on down. But I do believe that's a double top that I called from the bottom down here. So I should get an outstanding grade for this one. It's like drinking blood. Would you like to join me? Ladies and gentlemen, I'm going to introduce you to the Three Black Crows. It's a band that I formed here in Missouri in the Ozarks. Three black, and I know it's racist. I know it's racist. There is white crows out there. I saw one. But white crows are bad luck. So we call it Three Black Crows. Jimmy said, look for a pattern. Here, I don't want to, I'll leave it like it is. It's just beautiful the way it is right there. I'm going to draw a snake. They got our attention. And the Three Black Crows. Now see, I didn't want to do that. We'll try again. Right there. That way. I can cut off the right. Channel. Right extension off. Okay. Dadgummit. Now it's starting to work okay. Let's get rid of this here line. Although I probably need that line for future reference, so I ain't gonna mess with it. Remove flag. It said wait for the flag. Come on. Extension right on, right extension off. Hit default. So we got our flag broke out. So we've got snake breakout into a flag. Pull back to support. Boom to a double top. Jimmy stayed in the trade, hoping he'd hit up here. But once we come back up again and retested the double top, Jimmy exited the trade. Magnificent. Snake, flag, breakout, pull back. Try to determine where that pullback is when you break out of the snake. Work on that next. So you have plenty of time. 3 black crows. Symmetrical flag. Pull back to the pivot point in the symmetrical flag. To resistance. And I mean, I was at 490. And I decided, and it went down to 440. And then back to 470. See? It has to break out. 1, 2, 3. 1, 2, 3, 4. You got 1, 2, 3. It comes down and does another 3. And then the sweet spot is right in here. If it does not hold or break that, then you're the target was the double top. But I mean, what I'm saying is, see, it got weaker, didn't it? And it got weaker, didn't it? And it can keep getting weaker till it finds another pattern of support, which could be this pivot point down here, right above the 200 SMA. So I'd watch it. I wouldn't buy a put here, but when Pow gets ready to come out, I bet you we bounce off the 200. We stay bullish, and we run it back up. What do you think about them cookies? Do you agree, Randy? Randy's getting ready to make a statement. Magnificent's not going to pay up. He's in awe. That's not what we're talking about. You know how to count to 3? Answer me. Because we're getting ready to count to 3 right now, buddy. Ooh. Little inverse head and shoulders here, huh? Man, we're at a serious pivot point. Let's look at the 5 minute. I'm gonna clean this up because I'm out of the trade. I do love this chart. I mean, I think I'm gonna put this in the trophy room. Oh, whoa, 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 whoa. I gotta type in exit. He still ain't gave me a grade on this call yet. Did you get up on the right side of the bed this morning? You didn't wet the bed last night, did you? Woo! That's a good one, Jim. SPX. XPXZ. Oh, you said it was worth more than A+. Oh, I did. Thinking out of the box. Now I remember. Well, I want you to tell this to Mike. I'm trying to educate him. 1, 2, 3. I know what he's thinking. Or what about that wick, Jim? Don't that count? Here we come. I'm not in it yet because I want to go into the kitchen and get some coffee. What's this one here go to? Put this on the 20-day 1 hour. Oh. Oh. $10-minute. $10 1, 2, 3. Until God, stock's killing me. Calm down, Jim. Just calm down. The SPX saved your life today. That's all that matters. Again, see, I just have, it's just a no-brainer anymore. They're trading a SPY in the SPX. You see what's going down? I'm going to clean this chart up. And I see one indicator on here that says buy. And I want to see if you see it. The first one that answers the question gets to buy Jim a trip to Mexico. Don't be shy. The first one that answers the question gets to buy Jim a trip to Mexico. I don't stutter. Okay, get ready. Are you ready? Everybody's closely watching the SPX. You want a great prize? Did you put the number? What are we going to hit here? Damn, he said both puts and calls are in play? How dare you? Hello, this is Retail Traders. May I help you? The red phone. Yeah, Brandon, I got a problem. Yeah, I got a guy in the trade room here. He's trying to out-trade me. Some kind of wise guy comes in here and buys a call, then it hits resistance, and then he buys a put. He probably got out of it right now because it just hit the 200 SMA. So I'm wondering if you could send Hunter over, take care of the issue. 20%. 10 goes to the big guy, 5 goes to Hunter, and 5 goes to me.
Or 18A, as we call it, so 2 nodes more advanced than what they're using today. Right. For that, so that makes it faster, smaller, cheaper. More performant capabilities. And
superior ability breeds superior ambition.
Oh, I took the extensions off. Whoa. We hit a double bottom. And I've got another double bottom right down here. So get ready, folks. We're getting down to the 1, 2 bits, and the last 3. And I will take this trade. Damn, Jim. Excellent call. One. But Jim, the wick hit the line. I'm not counting the wick. I'm counting the bodies. I could buy one position now, but we're bearish because we're under the 200. I'd rather just see if we can get down here. So I'm going to be patient. I'm going to walk into the kitchen, grab a shot of vodka and a Valium, and ask Johnny what's he doing in the bathroom with Nancy. So I'm going to set my alert here before I leave. Come on. Finally. Okay. I will be back. Or should I buy that? See, I should have bought it. $3.90. Now we're at 420. Grab one at least. That guy looks like Bruce Willis. Ladies and gentlemen, SMCI just pulled back to a double bottom on the intraday. SMCI just pulled back to a double bottom on the intraday. Goodbye. Oh. Shit. Let's see if it pulls back down to that one more time. And I just got a ding-a-ling just went off. The SPY is bearish, it says. Jimmy disagrees. Jimmy disagrees. We're above the VWAP. How can you say that? That's a double bottom, you idiot. Don't always agree with your alerts. Don't always agree with anybody. You must do your homework. Chart alert. 1 day, 1 minute chart for the SPY. My channel alert 6, yes, bearish trend. Now it's telling me it's bullish. Well, that's a bunch of crap. I mean, didn't even have time to think about it. I said it was bullish. I would have bought it when they said it was bearish. Let's put it that way. So I want an A+. Don't always believe what you hear. You've got to do your own homework. You should not be taking any of my calls. You should, okay, I see what Jim sees. I'm not taking his call because he mentioned it. I'm taking it because he said double bottom, and I see the double bottom. Last time he was down here and called it was the 3 black crows. So am I going to get the same kind of, or where's resistance at, Jim? Hello, this is Retail Traders. May I help you? Yeah, man, I saw that double bottom and I went ahead and took the trade off your alert because I noticed the double bottom, but I'm having a problem with the exit idea. Will you help me? Yes. You draw your trend line. Draw 2 of them. Draw one from here to here. Whoop. We got to look for patterns. So we're going to look for a 1, 2, 3. We're going to extend that out to the right. And we're going to customize this thing. So set the default. And where was I? Oh yeah. Take one from here to there, and it's the same thing. So that'll be number 4. So we got a head and shoulders with a 2-headed snake. Now here's your head and shoulder. Here's your left shoulder, the opening, pre-market high. So that's the next indicator that I see on the chart and I talked about this yesterday. I'm going to talk about it again. This opening high that we had right here is going to be our new resistance. We had it here at close. We had it here at open. And we're going to call that the hard resistance. 10-4. Does everybody agree? Am I going to play the speech on here? I didn't know there was one. Oh, yeah, if you give me the link. Mr. Pow Pow. Let's see, we hit it. I hear crickets. I want to know if anybody sees what I see. Mike, it's you that plastered this in my head. I already knew it, but you reinforced it. That's called a two-headed snake. Let's see it coming back down now. Right to the penny. Damn, Jim. Salute. I need the link to the speech. So I have an issue right now. The light placement in my room. I'm going to walk behind me and hit that overhead light. To the right of that, I have my meditation light. One, two, three. You can trade with me. I'm trying to figure out what song of the day is going to be today. I might play Boil That Wort Right by Washboardjim. Mike would love that. I know one thing, you know talent when you see it, Mike. You wouldn't be here if that wasn't for that. I bet you if I saw Mike in person, he'd have a haircut just like mine. Below 5:15:47, the Bears will take it, huh? Is that what you're thinking? 5:15:47. I agree. My number's a little lower. I have it at 39, but I'll take your 47. If we stay above the VWAP here, I think we'll go up to the and try to break resistance. We go to 515.31. I'm in between then. I'm in the middle. So everybody's leaning toward a pullback here, and then take the trade. Well, I'm going to tell you something. My 515.98 will stay as resistance. Don't you ever talk to me that way again, Jack. Anybody in the room think I'm scary? Yoko? I know you're a black belt. With a name like that.
Services. 2, 3, and 4, energy, financials, industrials. The broadening that people were looking for.
The broadening, you dummy.
You've got the Nikkei, you've got the UK, you've got Europe, you've got Taiwan. There's opportunities. I guess it's just human nature. I don't understand when you have a calm environment, why is it
you won't listen to me? I said it's broadening out. I'm sick and tired of it.
Are you in the consternation camp that Joe was just referencing just now, or do you see this as a very strong situation? And also, I want to ask, what are you expecting from the Fed?
Well, I think investors need to remember you always sound smarter when you
Everybody has a good opinion.
out, but history will tell you that the S&P, going back to the 50s, goes up 75% of the time. And I think what Joe laid out is that we do have a calm market. We have very
calm market. Okay. Honey, do you know what a megaphone pattern means? You have a lot of volatility. Do you understand?
think through is how relevant is this? And so in March, they come out with their new summary of economic projections in the dot plot. But going back in time, Frank, they've only been correct 47% of the time. And it's not, I'm not saying this as an indictment against the Fed. It's just we as humans are very terrible at predicting the future.
You.
I think if they were to come out
Speak
and
for
say,
yourself.
We're going to do 3, we're going to do 2.
Speak for yourself. My job is to predict the future. What are you talking about? I can't listen to this woman. She just cut me down. I'd have to fire her on the spot.
Observations. The first is Joe should moderate his coffee intake before coming
That
on the
upset
show.
me right there.
I'm just excited because you came in on set.
Yeah.
And you're not-
Predict the future. That's what charting's all about.
Very close to me.
Yeah, I heard
Usually
the-
somebody.
That's what this is all
I
about.
heard the applause at the stock exchange.
The market picks the future. I mean,
Okay, so for the Fed.
she's like contradicting everything that these guys say every day. The market predicts 6 months ahead. They're wrong. She is right. These guys have been wrong, but they were way behind me when it come to irrational exuberance. They were saying that all, a couple weeks ago. All of them. Like a chain reaction.
Strong?
And I listened to him this morning. I said, we got a lot more to go. We got another leg up in the market. And like I say, I think we're going to go sideways and have a channel and not go. We had our leg up. We already had it for the year. It's over. I'm sorry. We've already had our leg up. We got to go sideways. No lower than 50.47, 50.50. Sideways, pull back, whatever. Leg up. What the heck is he talking about? 5 months ago, 4,100, and we're at 51.89. I protest. I just love to see something like this. So bad. Jim Bow got in a fight with a guy on TV. And here's the Russian.
Less Fed easing in the system here. It has been a pretty good bet. I think what we're going to have today is a little bit of frozen in time. I'm really interested, Frank, and this is what I expect, that the Fed will hold on to this phrase in here from the last statement. I'm going to read it to you. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence inflation is moving sustainably towards 2%. If they repeat that from January, what does it tell you? It tells you they don't have the confidence yet. It tells you we still need several more months of data to get that confidence to cut rates. So there's really going to be no change at all. Obviously, we'll watch the projections. You guys were talking about that. Right. Some concern that they go from 3 expected rate cuts down to 2. But that's really where we're at. And to me is the unknowable question.
Oh.
Your guys around the table are more expert in answering than I am, which is, how much does the market really care? Better
It doesn't.
Growth, better earnings on this side versus less Fed easing and maybe some more stubborn inflation on the other side. It seems to have paid off so far to be Terra Nova chill. Just leave it there.
Terra Nova chill.
He's 100% right. It doesn't matter what's going to be said today. As long as the rates don't go up, we'll do jumping jacks and land on our tits. Boom, 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 boom. Jimmy's waiting for his 514, 515.40 area. We all are in consensus that that is going to be support level. We need one more leg down before this doofus gets ready to speak. And I'm looking at a strangle, sell the break, and add on to the put. Magnificent call, James. And we'll be looking at the SPY. Although the SPX I think would be a good one, but we're going to play it safe and sorry. April the 1st. Stringo or straddle. Straddle's 870. And a strangle is 772. I think that'd be a better one. Okay, I'm gonna go take my little lunch break. Are we having a good time? Retail traders, may I help you? Yeah, Jack. I got it all rigged out. People think that I don't talk to Pal in the morning. Pow. I woke up this morning with Pow. I say, hey, Jim's got a lot of riding on this today. So I told him to play the straddle and strangle. Or was that strangle and straddle? I think it was a strangle. So I'm gonna tell him to go ahead and really put in a lot of money on the call, especially if it's pulled back to the 1, 2, 3. You can see it. I'll show it to you here on the SPX. On 1 minute. Just be careful with me. We're right now at the bottom of the channel on the 10 minute. So we got a 1, 2, 3. We're getting ready to load up boat. I don't know. I don't like where that 517 doesn't have too many calls on it. I like that one better. Just get the call. Well, it can drop a little bit more, but this is it. 1, 2, 3, 4. So this has to bounce here. This is number 4. So the 518 strike call. Am I on the right call? No, I'm not on the right SPX. Whoa. Shit. Charting SPY. Measure twice, cut once. March 20th. Oh, God, they're so high. The 52.15 at right now at 460. Lotto 460 if it holds this support. Need to get something to eat. I'll be right back. SPX 52.15 at 460. A 1, 2, 3, 4. Back to 460. Yeah. I wonder how I do that. I'm not sure how to use that this fan. Looks kind of interesting though. According to it, the next resistance is past the 200. You can't go back down more. Doodah. I'll be back.
By AI. So
well, that's what I'm going to say to your point. And I remember you were here. We were talking about Dell after their earnings. You're talking about AI laptops. You hear other phone makers, including Best Buy on their call, talking about Samsung's AI phone. So I know you're saying there's other chip plays outside of AI, but doesn't that seem to be where the trends are going? And if Intel's not playing in there, aren't you concerned long term? I mean,
well, they are playing there from the foundry standpoint. Yeah. You know, that's where they are playing it, right? Like I own a lot of Taiwan Semi. That is a core position. Right? They're not developing their own AI chips. They're foundry. They're manufacturing for guess who? NVIDIA, AMD, everyone. Right? And that stock is very cheap.
Yeah. I think with Intel, from an earnings perspective, year over year, they lost 4 cents Q1 of 2023. Their earnings come out Q1 of 2024, they're looking to make 14 cents. So that's definitely moving in the right direction. But to me, on the last call, Pat was talking about, we're really excited about the laptop PCs. I think that's going to be marginal. This is a company that needs to execute, but I think that execution is going to come 1, 2, 3 years out. In the meantime, NVIDIA's earnings estimates are looking to be up 400% year over year. So I have $1 to spend in chips. I'm going to buy a Broadcom, an NVIDIA, or an AMD, and just step to the side on Intel because it's too early to me.
I don't blame her. I mean, look, it's not a cheap stock. Numbers, I've got higher numbers, you know, the consensus is higher. It's not cheap, but it's tough turning around companies. Look at what happened with GE, right? How many doubters there were, me being one of them, turning around. Now look at it.
That was quite a long turnaround story, though. I mean,
So is this.
I don't know if this is apples to apples, but just one quick point. Today's Broadcom event, we got to get to the break after this. It's about enabling AI and infrastructure. That's something Jensen Huang talked quite a lot about. He was excited not only about the chips, but the software and the infrastructure. I'm not saying Intel is totally on an island away from AI, but they're not talking infrastructure, they're not talking software. That seems to be what's getting investors very excited.
Investors are paying a premium for two things: having the exposure to generative AI and the subsequent revenue growth, and then just overall, universally, they want growth. Right. They want growth from a semiconductor name. And I don't know if you look at Intel where you could characterize that company as a growth company.
We got a small position. Coming up next, Chipotle pops and Bitcoin, it drops. The trades on these committee stocks and much, much more. We got much more halftime, much more conversation. Back in 2 minutes.
How dare you?
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app.
Come on,
Follow the
bounce.
Halftime Podcast
Break
now.
the 65-3. We want to break the 63 and the 50 right now. I'm watching. Yummy, yummy. Break it. Break it. We're waiting to break. We're right now in the scalping the lotto strike here, 51.15 for fun. We're in at 460. And we're wanting to break the 63 EMA. I think it's more powerful right now than the 25. I mean the 200. This is not going to be a big trade, but we're all excited. The QQQ has to break the 200 SMA right now for the market to turn. We're waiting for the Pow Pow speech. Right now he's just in one call. He's preparing. The SPY is now under the VWAP. The 200 might be crossing the VWAP. That could be a signal. Jim is now slurping on some coffee. Good evening, mannequin. Jim, seeing a chart on the measure move 61 what? 6100? Damn. Percy.
Feds.com.
I need you to shut up for 1 minute. We are now breaking the 200 SMA and the VWAP on the SPY. Yes, I'm in a trade. The SPX is now hit the 200 SMA and almost ready to break my resistance level on the fan. This is the pivot point, I take it. I'm not sure. I'm learning how to trade. Did anybody make a business decision with me? Magnificent. Stand up and make sure that your dress is zipped up. Come on. Oh, you're being so hard on me for. Jeez. Now, if we can break out and come up and hit this red line, that's going to be our target area of resistance. Actually, we do have another one right here. Let's draw that one out. Magnificent call, James. We did hit a resistance. The crowd wants to know, are we going to break this 1, 2, 3? Can we hold the 200? No. Dadgummit. I forgot to take my Valium. Boy, this is punishing. Intel. Ugh. I don't talk too highly of Intel at all. We're back at 460 and now we've hit 450. I'm not going to let it go much lower. We're at a head and shoulders. Let's hold that support. We couldn't do the 1, 2, 3. So now we pull back to a head and shoulders here. I might just sell it. I think I'll hold it. I'll be back. Oak. Oh, Jim, you're an old man. Okay, we got the 3. So we'll add 1 right here. It's important we hold this support level or we get very bearish. We got 1. Now I got 2. Okay. Wish me luck. Rubber duck. If you can count to 3, you can learn to trade with me. Jim, it's a huge risk you're taking right there. We're all rooting for you. Well, I'm rooting for me too. But we're going to go ahead and break out right here because we counted it to 3. Now, if things get bad, I'm going to be sad. Okay. Here's Fred Johnson. Fred Johnson. Come on, baby. I think you know what to do. Oh my. We're at 480 right now. I'm up $60. If you can count to 3, I'd make sure that you can trade with me. How'd you know that was the right 3, Jim? Because it was the last 3. Ah, I see now. Damn, Jim, go, Jim, go. Way to go, Jimbo, way to go. Way to go, Jimbo, way to go. This could be my turn. It is my turn. Ladies and gentlemen, we are approaching the 200 SMA, but I think we're going to try to get to a 1, 2, 3, and we will break that 200 SMA. But you could get out here, but it ain't really that much, $30. Ladies and gentlemen, we just now hit the 200 SMA. You hit landing in Jamaica. The 200 SMA. You could exercise your position at $5 and you'd be up a whopping $60 a contract. Pay attention. Exit idea. Here we go. If it breaks this resistance here, we'll automatically move up to the 1, 2, 3. You either get out now or hang out with a fat cat. Position 1, 2 bits. Okay, we just now hit 3. You're at an exit position. Come on. We just now hit 3. One, two, three. 1, 2, 3. Damn, Jim. Did it again. Yes. And if you can count to 4, you might get a little bit more. Man, I didn't even go get my coffee. Oh, it's going up. It's going up.
Initially priced at 36, we're seeing a lot of upside move when it comes to that. All right, coming up next, Mike Santoli joins us with...
Blanket. Big resistance. We're at 510. Let's take it to a higher level. Let Jimmy win. And he'll put on a big old grin. Winning. And then one day, he decided to go ahead and break out to a higher level. And someone knocked on the door and said, "Hey, Jim, That was a beautiful call off that bottom 1, 2, 3. I don't know how you make it so easy, but I love it. Now, we just broke your other 1, 2, 3. What was it trying to signal to us? Can you explain? Yes. Thank you for that question. A very good question. As a professor in the doctrine of numbers, we see the 200 SMA. So we're going to use that as a support level to keep us going in the trade. Now we broke the 1, 2, 3. So that 1, 2, 3 supports the 200 SMA. So as long as we stay above that line, we're okay. But if we go below it, we could knife back down here to the other and have 4. And we don't want that. We want to break up here and break this other resistance. That's the next pattern, would be the 1, 2, 3 triple top. So the option of it pulling back at support would be the 200 and hold. If it doesn't hold, we're going to drop more. That's where you want to get out of the trade if you're not out of it already. After you broke your triple top. The next one is definitely right here, and I think we are going to hit it today. Does that answer your question? Yes, Jim, I got another question. Now, you've been showing great excellence on pointing out the head and shoulders. Now, with my coordinations, we did hit a head and shoulders here, and that did cause some resistance. So do you believe if we stay above that shoulder line this time, that we will use that as a support level and break that resistance and break the 1, 2, 3 and go to a double top? That is possible. There's a lot of options, Jim. So basically you're saying if we stay above the 200, we're still bullish. Yes. And that's on the 1 minute. Or you get out of your position right now and go to Twitter and say, damn, Washboardjim did it again. Would you please refer to black olives just as olives in this room, please? That is racist. Olives come in different colors and shapes and genders and pronouns. You have your green ones, you have your red ones. You have your albinos and you have your black ones. You have your maroon ones. You have your bisexuals and your transsexuals. All the olives come in different shapes and sizes. Some come in big, some are small. Okay. So to answer your question on the head and shoulders, yes, that does become a resistance. But if you break it, oh my God, you're going to hit that 1, 2, 3. Because there's your head, your left shoulder, your right shoulder, and your right shoulder. I'm going to go into the kitchen and get my coffee. I want to see if my girl's on today. Oh, God.
We're going to be reporting this after to lose 24 cents a share.
Micron.
That's certainly better than last quarter, which was 95 cents of a loss, and even last year,
MU
$1.91. So
earnings.
The point is they're starting to decrease.
Uh-oh, we're breaking.
Effectively the losses per share on an adjusted basis.
Silence, old man. So Mike said he's going to volunteer and pay for my trip to New Mexico. We are now at 45.10. I would appreciate it if this thing would go higher and get another 30, 40 cents out of this contract. Green Machine, you think we can do it? Magnificent, 51, 81, 28. What did I say? 51, 81, 28. And I'll never get that number again. We'll make it 26. I should sell it right now and just be happy with $60 a contract. God darn you, Jim, you're good. Entry. You entered at the lowest possible level that you could today. Well, not. Oh, well, yeah, I did. No, I did not. I didn't trade it at open. Man, this would have been a good trade. That hurts. But this will make up for it. Who doesn't think this stock's going to break up here to this red line? Who's got the guts to say it ain't? Anybody in here? You Ocean. You got to go stand in the corner. I'll attend with you after class. Okay, get ready. We got 9 more minutes. 9 more minutes. Yeah, I should get out of my position because we're going to get volatile here. We could easily drop down to the 1 and have a double bottom and buy it. If it fails the 1, the day low, we got to look for another place. Right now we're past the pivot point, not much. The 200 is the pivot point right now on the 1 minute. Man, I'd just love to take this trade and run it all the way up and break that double top when that idiot starts speaking. Everybody seems bullish on these. I'm the only one that's saying we're going to go sideways. I'm not talking about today, but I'm talking about the trend. And we kind of are starting to. I can't believe how good I'm getting. There it is. Nailed it. Nailed it. God, what? This says 510. It's not 510. Jesus. My platform's ripping me off. Oh my God. I was wondering why it didn't go up. What the heck? No. What's going on here? This is a ripoff. Oh no. Oh! It's on the wrong thing. God darn you, Jim. You're so stupid. It's at 560 right now. I'm tempting to make a business decision because I hit my target. I called it. I mean, it don't get no better than that. Does anybody want to give me a grade? Here, I don't. Them numbers are in the way. I got to move this. Damn, it's a good trade, Jimmy. Duplicate. Oh, I know what I needed to do. I called this out. I'm going to write it in here. It's going higher. Damn it. It's going to go higher, I bet. Excellent, Jim. Excellent job. 1. 2 bits. 3. Nailed it. Turned down for what? Oh. Told you I was going to get my big trade of the day. Well, about my things wouldn't move. Well, when I have my platform, it's still a 460. I'm going, what? So I went to my other platform and it went correct. And I said, dang, I'm up $100 a contract. I'm getting out. 110. I hit my target, 1, 2, 3. It's so easy. Oh, hell, Pow Pow's getting ready to speak. I can't be playing music right now. It's so easy to fall in love. That's my sister. She's been married 6 times. Woo! She'll get me for that one. What are you doing? Telling people I've been married 6 times. Once you let the word out, everybody knows about it. I think 5. I over-exaggerated 1 year, one marriage. And she's still broke. You'd think a woman had been married 5 times would be rich. I wrote a song about it. Well, I wrote a song about marriage. I called it, She Took Me Hook, Line, and Sinker. Okay, we're at the 200 on the 1 minute SPX pullback. Jimmy exited his trade, 560. I really don't need to trade. I already did it. I mean, this was beautiful. So maybe if it comes back down here, I'll pick it up right here, right here, right here. 2-headed snake. Oh, yeah. I got it. Randy? I found support. It ain't the 200. We got the 2-headed rattlesnake. Right at 51.7631. Yep, I'm set. All I gotta do is wait for that ding-a-ling to go off. catch it down here on the right shoulder of this two-headed snake. What is a snake? A snake is referred to as a head. It's not something you'll see in a titty bar. It's something you'll see here on my charts. You got your left shoulder, your head, and your right shoulder. I'll be right back. AMD's got a knife. Intel, you make me sick. How dare you? It's almost getting too many lines on here and I gotta clean it up. Probably will after. I'm not trading right now. I'm gonna go and relax and get my coffee. Come back. Seems like the market kind of has him priced in already. Dadgum, look at that. What's it put? Oh, okay, never mind. So we're at the 200. That's our pivot point. That's our support. I'm going to wait. Wait for it to come back down here. That next fan. It's so easy, so doggone easy. It's so easy. It's so easy to fall in love. 51, 76, 67. Pull back to support the 1, 2, 3. Get ready. On the count of 1, 2, 3. Here we go, baby. 1, 2, 3. 1, 2, 3, 4. Back to support. Going easy. Easy. So easy to fall in love.
It's so easy to fall in love. It's so easy to fall in love. It's so easy to fall in love.
Here we go, get ready.
So easy to fall in love.
Perfect timing, man. This is the Spy. Oh, SPX. Whoa, shit. Okay. Almost bought the Spy. Get ready to get triggered. 51.15 or 52.15 at 490. There we just got rigged. There we just got triggered. And get ready. 480. Okay, here's the shoulder. Now's my first position at 480. It's so damn easy. How'd you do that? Well, I played It So Easy by, what is her name? Does anybody know? Anybody know this girl? Magnificent? YouTube? Who was that? Oh gosh, here we go. Drop a little bit more to my next support. You're right, that was Linda Ronstadt. We might go down to this other support and have to, oh, there we go. Okay, this is it. It can't go no lower or we're in trouble. I'm not going to add yet. I'll wait. But this is definitely the support level right here, 450. Be nice to add one here. Jim, 440. Ugh. Okay. Grab one. Okay, here 440. I'm gonna grab one right here. Yeah, if it lets me. There we go. Damn. That was nice of him. Taking a huge chance right here. Should have grabbed two more at 440, but I grabbed one. 480 and 440. 51.73. I'll grab 2 there. Shoot, I could have got 30. I think I could have. Come on, baby. 470. Well, wouldn't this be pretty if it just shot up there and made a number fall? Right there, 480. Nobody get FOMAC. This is a risky trade. Randy will testify to that. Well, Jim's in it, man. It's up. I'm going to jump in it and try to join him. Then all of a sudden you get in and he knifes on you. Timing. I'm telling you, everything's about timing.
Get 10% off during Hy-Vee's frozen food sack sale this Wednesday and Thursday.
Oh, I can't wait.
Get 10%.
Brother bought a coconut, he bought it for a dime. His sister had another one, she paid it for the lime. She put the lime in the coconut, she drank them both up. She put the lime in the coconut, she drank them both up. She put the lime in the coconut, she drank them both up. She put the lime in the coconut, she called the doctor, woke him up and said, Doctor, ain't there nothing I can take? I said, Doctor, to relieve this bellyache. I said, Doctor, ain't there nothing I can take? I said, Doctor, to relieve this bellyache. Now let me get this straight. You put the lime in the coconut, you drank them both up. Put the lime in the coconut, you drank them both up. Put the lime in the coconut, you drank them both up. Put the lime in the coconut, you called your doctor, woke him up and said, Doctor, ain't there nothing I can take? I said, Doctor, to
Breeze break resistance.
Doctor, ain't there nothing I can take? I said, Doctor, doctor, yes,
I can't see a thing when my glass is off.
put the lime in the coconut, you drink them both up. Put a lime in the coconut and drink them both together.
I had nowhere.
And you feel better. Put the lime in the coconut and drink them both down.
We're at 490.
And call me in the morning.
Break number 4.
Ain't there nothing I can take?
I see a hammer.
To relieve this bellyache, I said,
Hammer.
ain't there nothing I can take? I said, Doctor, doctor,
I see a hammer. AMD double bottom. AMD looking good here. If it holds. We're wanting to break out of the snake here. We got a nice little pattern right here that I'm liking. Hammer, hammer. 3 black white soldiers, and it's consolidating. We're kind of pulling back right now. We got one body candle outside. Oh, almost. We still do. If that body stays out of that trend line right there. This one kind of fell in it, but this one here, if it stays out of it, then we'll know if this ain't going to break out. But these here, that's pretty good solid. You got 3 black crows right there, and then you got 3 white soldiers with a hammer leading out. Put the lime in the coconut and shake it all up. God. Oh no. I'm going to make a business decision here real soon. I think I'm going to hold on to it because we're still outside of the snake. And that was support, so that's got to hold. No. Got to hold right there. Approximately 1 minute, the fat cats see that the snake is getting ready to break out. We had the pullback here. Now we're getting ready for the boom. It's a cheap-ass pullback breakout, but uh-oh. Jim's getting nervous, Randy. I'm going to go into the kitchen, French kiss Nancy Pelosi, and I'll be right back. When I come back, I want to see this green candle past that. I'm going to leave my thing right there, my mouse. Well, you can see it, 5176.31. We break that, we're off to the races to the 200, and I sell my positions. Snake breakout, pull back, higher low, boom. I said I wanted to see it break it. We're now 490. $5. Boom to 6. Hello, this is Washboardjim. Yes, Jim, great call. Snake breakout, pullback. Now you hit that resistant line. What's going to happen next? Well, I'll tell you, little fella. If we can just get a little bit more volume here at the 5176.31, I think we will break it, or we'll pull back to a 1, 2, 3, find support, and you could go ahead and take the trade from that position. 1, 2, 3, boom to the 200. But as of right now, I'm in the trade right here and right here. And we're waiting to break out. One, two, three. And that woman says humans can't tell the future. How dare her? I don't know what it is about CNBC, but they make me mad every time. She's going to rely on AI to make her decisions. Magnificent, do you see it squeezing? Randy? Yoko? What's going on here? Higher lows? Okay, get ready. This is it. 1, 2, 3. Now. This is it. This is it. No, truth or dare. Jim called it. She said I couldn't read the future. She can bite my ass. Because I just did. Now. We got to really, it's got to, it's do or die. It's do or die. I can't believe this is at only 460. This is good news. If we can hold this here. Jim's scared. Randy, I'm scared. scared. Okay. I'm definitely playing with fire right now. Still bullish as long as I stay up above that, but I'm a lot weaker than I was when I was up here. I'll tell you, I'll stay in trade until it hits the bottom of this wick. It has to hold here and I'll stay bullish, but if it here, I'll really start to worry. I could buy 2 more and I'd be, just too much money. I'm even right here at 460. Another hammer. So that's 2 hammers now. Snake. I called that the breakout because I have to. Pull back. There's no flag. Yeah, I don't know what to call that. Jim's worried. Snake breakout. 1, 2, 3. Oh, there's a flag. There's a flag. Oh, that's off that trend line. So that's pretty tight. I'm not too scared. I'm not scared. Randu, do you have a nightlight? Okay, get ready to break. Two, 4, 6, 8. Who do we appreciate? Resistance. Break it. Double top. Double top. This is looking good. The crowd does not believe it. They were all saying, God damn, he's got balls. I'm telling you, if you learn the strategy of the sneaky snake, you'll become filthy rich. Break it. darling.
My broker says that with 2 children to put through college, I should start investing in stocks. What does your broker say?
Well, Frank, my broker's E.F. Hutton. And E.F. Hutton says...
Shh. You hear crickets.
When E.F. Hutton talks, people listen.
Jimmy's back to his 460. It kind of teased me there a little bit. But you know what? I see something that you all don't see. This candle is higher than that one. When E.F. Hutton speaks, Jimmy listens. How dare you? You were looking so lean right there. I was really starting to get excited. And I just now realized 1, 2, 3, and I didn't see it. See? Dadgummit. If I'd noticed that, I would have probably got out of that trade. So, ooh, nasty. I don't think this is right. Let's come down. We're at a double bottom. Jim said this was his last support. I'm going to stay. It's only at 450. Yeah, I'm going to make 450. I could add 2 more right here and really double up on it, but now it's at 460. Too late. What do you think, Jim? Dang, man, I need another opinion. I'm scared. YouTube, what do you think? Should I hold? Or should I sell? Mannequin. I got to go to a bigger time frame. Oh God, I can't hardly read it. Time to clean it up. Okay, we just broke the 51. Let me see here. What was that on the 30 minute? And it's the 21 on the 30 minute. And this was the 30 minute. What the hell was it? Hour. Five minute. 5 minute can drop there. Easily can drop here. To the 5 minute. We could hit the 200 easily. Right on the 200. So if we dip any more, which would be today's low. Oh, I think we just went below today's low. Yeah, we can drop a lot more. So I'm going to play this smart here. $51.73.57 is what we got to get above, and we can drop. So look at the puts. If we go much lower, I'll get a put. We definitely dropped below support level. Get your low right there. 5157.6 5267. Charts are sometimes painted like, yep. Right now, I'm at a critical spot. $5172.67. 10-4. 5172.67. Jimmy says. I'm not down that much. $60. But I'm going to brag and it'll get worse. La 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 la. Come back to me. I want to see 460. I'm going to take a station break and walk away. Music hasn't worked. This is really not looking good. It's not looking good in my favor at all because I keep looking at that 200 and that blue trend line. Like it wants to go there. That's on the 5 minute. And I'm not accustomed to trading on the 5. So I'm going to run it to the 1. Yeah, that's just a guess. The 1 tells me, well, yeah, I don't know what the 1 tells me either. Pivot point area right around there. It tells me it could go to 516944. That's what it tells me. What are you looking at to get that number, Jim? This here. We got us a mega. What's a mega? Make America charts look again. Look great again. We could drop all the way to 5160 if it gets in a pissy mood. So I'm even right here. What should I do? Oh. Go in the kitchen and grab a Valium and a shot of vodka. I have the crossover working against me as well. Thanks a lot. You just had to say that. How dare you? It doesn't work. Hey, we're at 490. I'm getting some life back. Jim, you are magnificent. How you held through that pain. Do you see the 1, 2, 3 in the head and shoulders? Show us, Jim. Well, there's your shoulder. And here's your 1, 2, 3. So if we break this, now how's it work? Well, it's called a 1, 2, 3. We break out, hit the 63, pull back, retest, and boom, to the 51. And everybody comes over to my house and parties. Damn, Jim. How in the hell did you figure that out? You know what else? It's a falling wedge. Oh, hey. Magnificent. What happens when we lead out with 3 white soldiers? Jim, ooh, 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 ooh. That means you're bullish and we're going to consolidate and break the 63 and hit the 200. This crowd is going wild at the sports arena. Jimmy's up $80 a contract. 50. Now it's 60. Now it's 80. I mean, I love you, Falling Wedge. Snake was the original trade. Oh, this is so beautiful. How do you? God, it's getting so easy, man. Followed it all the way through. Now it's down. It stuck it out. I mean, this is really an interesting chart. I'll tell you, there's a few reasons why I would have held on to this trade, no matter what, to right here until I got a little nervous. Right there. But I'm going to show you why I would have held on to, okay, 550. Now, come on. Who's not going to sell this at 550? I just think that was so beautiful. So there's a couple interesting things about this chart that I really got to point out. How it talks to me, how I read it. And no, I'm not doing acid today. You know how to count to 3. You'll learn to trade with me. So basically, we called out the snake, the breakout, and I called the pullback right here and got in the trade. We dipped a little bit more and I bought more. We had a double bottom. That didn't work out too good. We did break out a little bit and then we pulled back. Well, this pattern right in here. So you see the wedge. You see the snake where we took the trade. So I'm sitting here looking at the snake. We called the snake out. I'm pretty excited. I got excited because we had these 3 black crows and a hammer. And I jumped in the trade and then bought more. And then it broke out and it pulled back. And then I'm going, damn. But here we go again with the mega. Make American great again. Make a megaphone great again. So we count to 3. And we count to 4. So we know we didn't break the triple top. But it came down for the 4th time. Right here, if you want to call that 1, 2, 3, 4. And produced 3 black crows, which made me happy again, and a hammer. So we had the 3 black crows and the hammer, and I had this resistance line, which was support, now become resistance, had to break. So we shot right out of the gate with these 3 white soldiers, and and this is great. This is great. I mean, this is really exciting, because this leads off to higher levels. These 4 candles. So here on the pullback was your opportunity to maybe jump in this trade off the 9. Now you could see that you won't see this on the 5-minute. That's what got me in the trade in the first place, was these 3 crows. I started singing about it, and that hammer. I was pretty excited. Then we opened up into a megaphone, which even gave me more excitement. And then we came back and we had 3 crows again. I said, okay, well, here we go again, round 3, or round 2. Created a head and shoulders. So if it does pull back, that'll be your entry to take the trade. Maybe even right here, if you want to call that your left shoulder. Target's the 200. So yeah, that was a beautiful trade. We're at 520 again. And I don't think I really started reading these charts until I left the room, the last trading room I was in, and said I'm about ready to go crazy. I had to come up with a new strategy. I'm liking this one a lot. You trade about anything with it, but this SPY and the SPX works the best. So on a 5-minute, okay, this would have been a trade for me. We got the 3 black crows. I would have probably took that, run it up and hit the 21, the 9 and got out of it probably. The 21 for sure. So we're getting ready to squeeze. That's the EMA. 5-minute on the SMA. I would have waited for the 200. I would have not took that trade. I would have not. No, I would have not took that trade on 5-minute. Maybe. I would have took this. Yeah, I'd have took this. Yeah, I would have. I took the double bottom off the 63 and run it up to a 123 and got out. So yeah, I would have took that. That's a no-brainer right there. Double bottom. Yep, I'd took that. For sure. Huh. So where is that entry at? I'm curious. I would have took that. Either one of them I would have took. I would have took that and added on to that. That's exactly how I would have took that trade. It's really not that bad looking of a chart either. So that's at 5175. Yeah, I would have definitely got in a lot earlier on this one. Huh. Now see, it's pulling back. It's too much. We're back to a shoulder line. This option now is at $5. I don't want to get in it at $5. $4.90. Golly, did I just see that? Oh my God! Oh, I was in it. Oh. 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 Oh my God. God. Jim. 550. No. God. Did you see that? I had 4 of them. I'm so mad. No. Oh. And I just got out of it. God, look at that. Now that I look at it, and I'm just going, you idiot. I told you the market wouldn't care. I should have. Oh. Puts. God. 5150s. 380. What? How'd that jump to 4? Wow, there you go, man. 380. The 5150 puts. This is a big hammer to the downside. Go to the 9. I can't believe that I let that go. This one ain't leaving my sight. Here, I gotta look at a bigger chart. Yeah, it's going down. Right there, support level. $51.86.74. That's right to the 9. Perfect. Got a double confirmation? No. Man, I was at 470. I should have got out of it. I don't know if I could have. Come on, don't know higher. Oh, God. No. What? Is he cutting rates or what? Do we got the thing in here? No, I just got spanked. Whatever he's saying, they're loving it. Three rate cuts. Well, the market will love it. Right now, the 9s jumped up a lot higher than where I thought we'd pull back to. Oh, I'm gonna put that water in the fridge. Man, I can't believe that. Calls I was in. They went to $11. Does anybody know what that means? $2,500. I'm back to even on these puts. Now see it, the 9 is where it is now. I don't like it. So I'm going to get out. Here we go. One more drop. Now. Oh, God. Not giving me much. Huh. One more weak candle, and that should do it. That hurts. I wasn't paying attention to the time, or I'd have stayed in that trade. Maybe. I don't know. But I wasn't paying attention to time, so I think, again, that's been my theme this week. Time. If it pulled back and hit that red line, 63, man, that'd be cool. We're 420, 40. Oh, here we go. Now. $440. I'm out of it. Thank God. Done. I'm done. Wow, look at the IWM. and the spy. And I just totally screwed up my calls on SPX. Can't believe I did that. Everybody's impressed at the sports arena but Jim. he's pretty beat up. Honey, I was in the SPX at $4.60. And I decided to go ahead and take some profit at $5.40. 6 minutes later, please, I got the iron skillet out in the shed. 6 minutes later, it went to 1100. I'm so sorry, but I did make enough money to buy a Big Mac. Well, we were going to number 4. It sucked. Oh. I drink beer. It makes me a jolly good feller. Ugh. That's so sad. It's $2,400 in 6 minutes. Oh my gosh. Not again. See? Look. It's going to go to the blue line. You watch. We did hit my first support. twice. 51.86.74. This time we hit it. So I am going to go into the kitchen and grab a shot of vodka and a Valium. And Tyler will be right back. Gosh, I just can't believe that. You told me to hold? Magnet. God. Can you imagine that? I called it perfect. Almost. You wouldn't believe who this is. Always Clean, may I help you? Hello?
My name is Amy Williams. How are you doing today?
All right.
Well, the purpose of this call is to let you know that state has recently approved new final expense whole life insurance plan that will gonna cover the cost of your burial, funeral, cremation.
Oh, man.
Obligations for medical bills that if anything happens to you.
You're talking about death.
More about it.
You're talking about death.
Let me ask you this. Are you between the age of 40 to 80?
Well, I plan on living to be about 105.
Can you please repeat that?
I plan on living to be about 105 years old. Do you know that the SPX is about ready to hit my support right here? 5181.25. Are you hear me? Hello? Hey, baby. Where'd you go? She hung up on me. It's hard to pick up call ladies anymore. Can't do it. She's talking about my funeral. How would you like to save money and buy you a burial plot? We have a casket made out of koa, found in Hawaii. We can get it to you half price.
Welcome back to Power Lunch, everybody. The Fed leaving interest rates unchanged as expected and sticking with an earlier forecast of 3 rate cuts by the end of the year. Here for his reaction is
Spy to the VWAP.
Lockhart, former Atlanta Fed president. Mr. Lockhart, good to have you back with us. I guess I don't see much in the statement or the action, which is a non-action, to suggest that the Fed is becoming more hawkish. I'd like to get your reaction to that. But I do sense that maybe they're just becoming more patient, which is not necessarily a bad thing.
Yeah, I think your conclusion is correct. I would say, however, if you look at the dot plot, you do see
dot plot.
Some movement in the dots. There were, I think, 4 at 4 dot.
Does anybody know anything about these dots?
All but one have moved into the 3 category. The consensus is pretty tight, around 3 moves this year, and I think that's the takeaway, that the consensus has tightened.
What about the...
Now, I know what knots are. I learned that from Jethro, but not the dots.
And is that sort of the Fed setting themselves up for saying, look, the economy is getting stronger, that's why we've got these 3 cuts planned?
Yeah, I think they're recognizing that the underlying demand in the economy, the underlying strength is pretty robust, and that's why I think they're sticking with 3 rate cuts, because they see that they have that strength of the economy to deal with.
Take us inside the meeting. Since the last meeting, we've had a couple of inflation numbers that have been, to some, a little bit worrisome. What is the discussion like about numbers that were above what Wall Street and economists were forecasting?
Well, they're not dismissed, but they're looked at in the context of being, just one report or one or two reports. So there's not generally not an overreaction to that. I think, as Jay Powell has said frequently, that there's no expectation that this disinflation will be linear and it just will come down in an even fashion month over month over month. So I think they reserve judgment, and I believe that the reports we've seen recently, to a small degree, reset the clock, because they need to look at another 2 or 3 months of inflation reports to be sure that what they're seeing is just a bump and not something that's signaling a real change of direction.
And that's sort of what I was going to ask, is how many reports do you need to see in a row to consider it a pattern for inflation, for instance? Obviously, inflation has sort of been this sticking point. And how do you know when it's just a bump or it is a new trend that the Fed should take appropriate action on?
I think different members of the committee might have different answers to that. I would personally say I would be looking for 3 to fully interpret what's gone on with the January and February reports. So it would be, past, in all likelihood, past the May meeting.
Is there an unemployment number? Rick Santelli just mentioned the idea that unemployment is about a half point higher than it was at this time a year ago. His prediction was that it may go above 4% on the next number that comes out in about 10 days. Is there an unemployment number that would cause the Fed to begin to worry about that? Because full employment is part of its mandate.
Well, first, there are good and bad reasons why unemployment numbers rise. When you have people coming into the workforce and increasing participation, that's a good reason for the unemployment rate to rise. So they would look within the numbers to see what the dynamic really is. But if you're seeing layoffs and you're seeing widespread downsizing of companies and so forth, beyond 4% would begin to, I think, get the attention of people on the committee.
How do you characterize the economy that you see? Atlanta Fed. The Atlanta Fed has typically been sort of one of the more ebullient forecasters of economic growth. What do you see around you?
I see a solid economy that is slowing from a very, very strong third quarter of 2023, somewhat less strong but still strong fourth quarter. And this quarter, if you believe GDP Now, the Atlanta Fed's tracker, is coming in around 2%. So that's a slowing top-line growth number. I see a very healthy labor market, and I see inflation going sideways at the moment. So there's a bit more ambiguity around the total picture, particularly the inflation picture, than we would have had 2 months ago, for example.
Mr. Lockhart, always a pleasure to have you with us. We thank you. Thank you. Dennis Lockhart.
We are just moments away from Fed Chair Powell's press conference. We will take you there live as soon as it happens. Been anticipating this all week. Power Lunch is back in 2.
Well, I just feel like, God, I wasted that. I can't believe that popped. I mean, jeez. Jimmy, what were you thinking? 6 minutes later, boom! Looking good.
NBC.
Let's get some final thoughts as we count down to Fed Chair Powell's press conference. David Kelly of JP Morgan Asset Management is still with us. David, it seems to me the risk is pretty low right now for the Fed to hold these rates unchanged, which is we know what they did. What is the risk, though, of cutting potentially too early? Is the bigger risk a chance of reigniting inflation?
No, I don't think the Fed's going to reignite inflation by cutting rates at all. I mean, there's a lot of talk about the neutral rate of interest, but the truth is I think interest rates have much more of an impact on financial markets than the real economy. We've seen all this tightening last year. It didn't do anything to slow down the economy. So what I'm interested to hear from Chairman Powell, apart from obviously quantitative tightening, I'd like to hear why they pushed up their estimate of economic growth this year, because it does seem that they're looking for a lot of employment growth powering this in an economy where the growth in the native-born population is pretty slow. So I'm wondering, is there an immigration component to this? I've been thinking we're getting a lot of immigrants maybe coming in a very chaotic fashion, but adding to the labor force, is that what's pushing up their growth targets? Is that why they think this economy is capable
Pulled back, hit my support
without actually pushing up inflation?
You mean growing to that 2.1%?
Bounce back up,
yes, exactly,
so you're at a
that's
resistance
above their
now.
long-term estimate of economic growth.
Shut up. You're at a little shoulder line resistance here. You can come back and here's your other resistance. Some would just go straight across with it. I think I would go like this and say, if that breaks, then we'll for sure double top.
Ample. So their view is, and Chairman Powell said this, is they want to stop before they reach ample. But since they don't know where ample is, they're likely to stop short. So that's actually good news for the bond market. It means there's a lot of support from the Treasury Department, from the Federal Reserve in holding down those long-term interest rates. So it's good for the bond market. I don't think it has much impact on the economy overall, though.
We're seeing a lot of the bank ETFs jump, so the KBE is higher by more than 1% here. Obviously, they do well in higher interest rates environments, but the Fed is still holding steady on the idea of 3 potential rate cuts. So what do you think, why do you think the market is so excited, at least in the financial bank sector, to see what we've heard so far?
Because what we've got is patience and predictability. The beauty of 3 rate cuts is you
Double
do it in
top.
June, you do it in September, you do it in December, you do it in one of these meetings where you release the summary of economic projections. People can kind of figure out what you're doing. If they'd gone to 2 rate cuts, and you
Waiting
there's a lot of
Powell's press
uncertainty. Is that
conference.
July? Is that September? Could this all vanish? So long as they are patient and consistent in what they
Now
do,
it's gonna come
that I
back
think helps
down.
financial markets in general. So do you see
And
3
fake us
cuts
out.
this year beginning in June, or what?
And go below
I
this
do. I think
trend
there's
line.
enough evidence in underlying core inflation coming down
by June to justify a first rate cut, because remember, we're very
Not
tight,
much.
and I think they can give us another rate cut in September, another one in December, and then we'll see about 2025. I think they can keep going for a while here, but I think
Not much at
just wait
all.
for the evidence. But I think they'll have enough evidence in June to start this process.
And as you say, you're not concerned about a rate cut reigniting.
Get ready to listen to Pow Pow.
No, because this economy is actually pretty good at growing at a solid pace without causing inflation. We've had inflation come all the way down from 9.1 to 3.2.
Idiot, if we didn't print $6 trillion, this market wouldn't be acting so foolishly.
In June of 2022. So this is a pretty impressive economy, and I think the Fed can kind of do its thing here, and that's, I think, good news for everybody.
All right, David Kelly, thank you very much for your time today. We don't have Chair Powell yet, but why don't we just take a look at where the markets stand right now. The Dow and the equity markets have basically gone from flat to what I would characterize as a very modest gain of about 0.4% for the Dow, a little more than that for the NASDAQ, and a little less than that for the S&P 500. The 10-year bond yield at 4.29%, and there you see it dipping earlier today, now back up 4.29%, 4.27 or thereabouts. Here is Chair Powell.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum
listen to every word he
employment
has to
and stable
say.
prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially, while the labor market has remained strong.
Bullshit.
And that is very good news. But inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.2%. For 2023 as a whole, GDP expanded 3.1%, bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have weighed on business fixed investment. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2% over the next 2 years. Participants generally revised up their growth projections since December, reflecting the strength of incoming data, including data on labor supply. The labor market remains relatively tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 265,000 jobs per month. The unemployment rate has edged up but remains low at 3.9%.
You shut your mouth.
Strong job creation has been accompanied by an increase in the supply of workers,
Okay,
reflecting
you ready?
increases in participation.
This robot has pulled it back to the 200 SMA. Washboardjim is now looking at the calls. He'll be looking at the 5200 or the 5210s. He's at the 5210. Get on your mark. Get set. There we go. 420, baby. Riding day. Jim called it. The 200 SMA. Man, I just come up with a new theme song. Hey, hey, get out of my way. It's time to break the 200 SMA. Hey, hey, I got a protest song. Hey, hey, whoa, whoa. Let me see. Hey, hey, say, let's break the 200 SMA. Boom, baby. What? Turned down for what? That was sweet. Hey, hey, get out of my way. I just hit the 200 SMA. Can we do it again? Oh, hell yes. God, look at that. 640. Randy? No. Torture. Oh. Do you see what I see? 7 frickin' 40. You know how much money that was? Okay, 740 cent. 40. Okay. 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 I get it. Oh my God. I'm telling you what, I'm getting robbed big time today. And I see it. It's there. 1, 2, 3. If you freaking know how to count to 3, Jim. 1, 2, 3. 1, 2, 3 to the 200 SMA. $880. 4 of them at 440. And almost 100% in what? 5 minutes? 4 minutes? That's just Jim. Okay. Okay. All you gotta do is count to 3, you idiot. To the 200 SM called. Exit idea. Okay. Magnificent. May I have a grade, please? I just got to stick to this is my goal this year, is to try to get as much as I can, because I've left so much on the table. I mean, a lot of money. More than you can imagine. Oh. That's 100%. There's no nothing. It is 100%. Damn. That's so upsetting. Okay. Yeah, I was curious if Magnificent was wanting to go ahead and give me some kudos for saying we were going to have higher highs today. And I wasn't afraid to say it first thing this morning. Ladies and gentlemen, I am going to shit my britches. Do you have 520 on the SPY? Oh. Okay. This is not the FOMAC day I wanted to have. So far, I've left over $4,400 on the table. That means $440 is not going to go to the big guy. He might come over and chop my fingers off. You don't know what he's like.
In 2019, which itself was modeled on the mid-cycle adjustment of 1995.
It's more, I would put it more in the context of what I said in my opening remarks, that the risks are really two-sided here. We're in a situation where, you know, if we ease too much or too soon, we could see inflation come back.
You don't have a clue what you're doing, you dingbat.
You know, people's working lives, and so, you know, we do see the risks as two-sided. So
you're behind the curve. Now you're hurting people because you're behind the curve. You feds for the last 30 years have printed trillions and trillions and trillions and trillions and won't stop. It all started with actually started with Bush.
So I would say the January number, which was very high, the January CPI and PCE numbers were quite high. there's reason to think that there could be seasonal effects there. But nonetheless, we don't want to be completely dismissive of it. The February number was higher than expectations, but we have it at currently well below 30 basis points core PCE, which is not terribly high. Woo! So it's not like the January number. But I take the two of them together, and I think they haven't really changed the overall story, which is that of inflation moving down gradually on a sometimes bumpy road toward 2%. I don't think that story has changed. I also don't think that those readings added to anyone's confidence that we're moving closer to that point. But we didn't. I'd last thing to say is we didn't excessively celebrate the good inflation as we got in the last 7 months of last year. We didn't take too much signal out of that. What you heard us saying was that we needed to see more.
He was my most trusted friend in here, Randy, at one time.
Months of data, nor are we going to ignore them.
Hi, yes, Chair Powell. Could you speak a little bit more about
Golly.
the timing? Is there enough data between now and, say, May to be able to get the kind of confidence that you say that you need, or by June, is there enough data for you? Just give us a sense of your thinking
1320.
So we make decisions meeting by meeting, and we didn't make any decisions about future meetings today. Those are going to depend on our ongoing assessment of the incoming data.
I don't like you. Larry. I waited to catch you all year, Larry. Larry. Okay. Well, you know what this means. It don't take much. I mean, they've been, well, I don't know how to say it. I think I've said it many times. They've been wrong about this market. The only thing they've been right about is that there's been no rate hikes. So any kind of news, they'll take any little word and make it a pot of gold. I can't find Larry. Hope I didn't erase it. Next time I find it, I'm going to type in Larry. Oh. Here's me and my dog.
What we've seen 2023 and so forth?
I think that higher year-end number reflects the data we've seen so far.
Muse. Do you got Muse? Do you love Muse? Give me smooch. Muse. Do you love Muse? Do you love Muse? Give me smooch.
Hmm.
Percent.
Gina Smilik, The New York Times. Thank you for taking our questions. Per your comment to Anne that a weakening in the labor market would be a reason to potentially cut rates, or at least a consideration in making a rate cut, would continued strength in the labor market be a reason to hold off on rate cuts? And just in general, if labor supply continued to rebound in 2024 the way it did in 2023,
I feel so
what
stupid.
would stronger hiring and possibly stronger growth mean for the path forward on policy?
Yeah, so if what we're getting is a lot of supply and a lot of demand, and that supply is actually feeding demand because workers are getting paid and they're spending, and that's, what you would have is potentially kind of what you had last year, which is a bigger economy where inflationary pressures are not increasing. In fact, they were decreasing. So you can have that if you have the continued supply side
10 A's
activity that we had last year with both with
that beats
supply
my
chains and
record.
also with
I ain't gonna let it happen.
the labor force.
But so strong hiring
get
in and of
3.
itself would not be a reason to hold off on rate cuts?
No, not all by itself, no. I mean, we saw, you saw last year, very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was
You have no sense.
supply side healing, particularly with growth in the labor force. So in and of itself,
440.
strong job growth is not
Let me
a
tell you
reason,
something, pal.
For us.
I was in them calls at 440. You understand? These things went to 1410.
I think there are many different financial conditions indicators, and you can kind of, see different answers to that question. But ultimately, we do think that financial conditions are weighing on economic activity, and we think you see that in a great place to see it is in the labor market, where you've seen demand cooling off a little bit from the extremely high levels. And there I would point to job openings, quits, surveys, the hiring rate. Things like that are really demand. There are also supply side things happening, but I think those are demand side things happening. We saw, that's been a question for a while. We did see progress on inflation last year, significant progress, despite, financial conditions sometimes being tighter, sometimes looser.
Michael McGee with Bloomberg Radio and Television. Can you give us more color on how the committee is thinking about inflation dynamics now? What we've seen at the beginning of the year, are they more one-off increases that will fade, or is there more of a secular turn with goods prices rising again and service prices staying sticky? And also, housing prices have been sort of the Godot of this cycle, in that you keep expecting them to go down and they don't. How does the committee see this playing out forward since you've raised your inflation forecast?
So I see the committees looking at the 2 months of data and asking the same question you're asking and saying we're just going to have to...
Don't be asking me that same question over and over again.
You can look at January.
I'll answer it once and only once. Do you understand me?
Many people did.
I am the Fed.
You got to be careful about dismissing the parts of the data that you don't like. So then February
don't push me in a corner ever again.
Higher. So the question is, what are we going to see? We tend to see a little bit stronger. This is in the data. A little bit stronger inflation in the first half of the year, a little bit less strong later in the year. We're going to let the data
The
show.
data.
I don't think we really know whether this is a bump.
You
on
don't
the
know
road
what
or
data
something
is.
more. We'll have to find out. In the meantime, the economy is strong, the labor market is strong, inflation has come way down, and that gives us the ability to approach this question carefully and feel more confident that inflation is moving down sustainably at 2% when we take that step to begin dialing back our restrictive policy.
Well, you've talked about the desire to have confidence that inflation is continually moving down. Has the recent numbers we've gotten for inflation data dented that confidence?
Yes.
It certainly hasn't improved our confidence. It hasn't raised anyone's confidence, but I would say that the story is really.
It doesn't improve. It was worse than what it was supposed to be, you dingbat.
I think that's what you still see. We've got 9 months of 2.5% inflation now, and we've had 2 months of kind of bumpy inflation. We were saying that it's going to be a bumpy ride. We consistently said that. Now here are some bumps, and the question is, are they more than bumps? And we can't know that. That's
well, nailed that pullback on Apple.
This question carefully. It's very important
today
for everyone that we serve that we do get inflation sustainably down. And I think the historical record.
We have 3 more minutes to Power Hour, and Pal's making me very mad.
Is that you need to approach that question carefully and try to get it right the first time and not have to come back and raise rates again.
And Congress has oversight over that. We received a letter from Senators Elizabeth Warren and Sheldon Whitehouse that said, calling on you to lower interest rates, to cut interest rates, because it says, quote, the potential that it may remain too high for too long has halted advances in deploying renewable energy technologies and delayed significant climate and economic benefits from these projects. So has higher interest rates caused that?
Have they? Well, first of all, I respect in our system of government, it is Congress that has oversight responsibility over the Fed. We place a tremendous amount of importance on our engagements with Congress and always treat them with great respect. In this case, I would say those are, our mandate. Our mandate is for maximum employment and price stability, and the other things that we do, and that's what we're trying to accomplish. We're trying to do that in a way that sustains the strong growth we're seeing, the strong labor market we're seeing, but allows us to make further progress with inflation. That's how we can best serve the public and leave the other issues, in many cases that are incredibly important, such as those you mentioned, leave those to the people who have responsibility for those.
There was another letter from 2 dozen lawmakers saying that the higher rates are squeezing the working people. How do these letters affect what you guys are doing policy-wise?
We receive these letters with respect, and we write careful responses and address concerns. We listen, again, because we're talking to the people who, in our system of government, have oversight over our activity. So but at the end of the day, we take that on board, but we have to make our judgments and we have to stick to our knitting, which is maximum employment, price stability, supervise and regulate the banks, work on the payment system, the things that we do.
Claire Jones, Financial Times. Thanks a lot for the opportunity to ask a question. As chair of the FOMC, would you want to see unanimity on the committee or something close to it, meaning no more than one dissent before you begin cutting rates? Thank you.
We're a very consensus-oriented organization, and we do try to achieve consensus and ideally unanimity. People do dissent. It's something that happens. Life goes on, and it's not a problem. We've always had dissents, and so you respect thoughtful dissents very much. It's like you may not agree with some arguments, but you really want to understand them. So you may read a book that takes a position that you have long opposed, just to understand that book. So I treat dissents with real respect as well.
Simon Rabinovich with The Economist.
Can you hear me?
Yes.
Okay, great. Obviously, inflation is some ways away from target. Unemployment, though, if you look at the projection for the full year, 4.0%. In February, we were already at 3.9%, so quite close to the median projection. Are you concerned at all that, notwithstanding the very strong jobs growth, that in fact there may be some cracks appearing in the employment market? You talked about a significant deterioration in the labor market being a condition for easing rates. What would constitute that in your books? Thank you.
So we, of course, monitor it's one of our 2 goal variables. We all monitor the labor market very, very carefully, and I don't see those cracks today. And we follow all the possible stories that are out there about there being cracks. But the overall picture really is strong labor market. The extreme imbalances that we saw in the early parts of the pandemic recovery have mostly been resolved. You're seeing high job growth.
AMD popping.
Big increases in supply. You're seeing strong wage growth, but wage growth is gradually
Jimmy called AMD out.
Sustainable levels. In many respects, the things are returning more to their state.
Look at that, baby.
2019, which we can think of as
Nailed it.
normal for this purpose. That's job openings and quits, and surveys of workers and businesses are always interesting on this. How tight is how easy is it to find a job? How easy it is to find a worker? Those surveys have both come down. So the labor market's in good shape.
NVIDIA double top.
You
From
do
that
see
bottom I
things like
called.
the low hiring rate, and people have made the argument that if layoffs were to increase, that
Spies getting ready to squeeze.
The net would be fairly quick increases in unemployment. So that's something we're watching, but we're not seeing it. Of course,
Knife to the VWAP would be
initial
nice.
trends are very, very low, and if anything, have tracked down a little bit. So watching it carefully, don't see it. And when I say something, I use the term unexpected weakening in the labor market. So, we do expect the unemployment rate to, the forecast is that it would move up, I think, closer to what we see as the longer run sustainable level. That's just people's forecast, individual forecasts. But we're talking about something that's unexpected. That's where I'll leave it, though.
Wow. Low blow.
Steve Matthews with Bloomberg. You mentioned at the beginning of the press conference that the committee felt it might be appropriate to slow the pace of asset runoff fairly soon. I'm wondering, when you say fairly soon, does that mean that the committee would meet about this again in May and a decision could be reached that soon? And I was wondering if you could also just describe the scope of what the committee is discussing here. You're at $95 billion of caps right now. Would that be cut about in half or something in that nature? Thank you.
So that is what we're discussing essentially is and we're not discussing all the many other balance sheet issues. We will discuss those in due course, but what we're really looking at is slowing the pace of runoff. There isn't much runoff among MBS right now, but there is in treasuries, and we're talking about going to a lower pace. I don't want to give you a specific number because we haven't had an agreement or a decision, but that's the idea, that's what we're looking at. And in terms of the timing, I said fairly soon. I wouldn't want to try to be more specific than that, but you get the idea. The idea is, and this is in our longer run plans, that we may actually be able to get to a lower level because we would avoid the kind of frictions that can happen. Liquidity is not evenly distributed in the system, and there can be times when, in the aggregate, reserves are ample or even abundant, but not in every part. And those parts where they're not ample, there can be stress, and that can cause you to prematurely stop the process to avoid the stress, and then it would be very hard to restart, we think. So as something like that happened in 19, perhaps. So that's what we're doing. We're looking at what would be a good time and what would be a good structure, and fairly soon is words that we use to mean fairly soon.
And will there be a discussion about returning to an all treasuries balance sheet at some point?
So that our longer run goal is to return to a balance sheet that is mostly treasuries. I do expect that once we're through this, we'll come back to the other issues about the composition and the maturity and revisit those issues. But it's not urgent right now. We want to get this decision made first, and then we can, when the time is right, come back to the other issues.
Hi, Victoria Guido with Politico. Also on the balance sheet, can you talk a little bit about how the outlook for the banking sector might impact your balance sheet plans? Do you worry that as deposits start to shrink that we could see more turbulence?
We'll be watching carefully, but one of the reasons we're slowing down, we will soon enough, fairly soon I should say, slow down, is that we want to avoid any kind of turbulence. I wasn't thinking particularly about banking sector turbulence, but
1410.
We had some indicators the last time. This is our
1470
doing this, and I think we're going to be paying a lot of attention to the things that started to happen and that foreshadowed what eventually happened at the end of that tightening cycle, where we wound up in a short reserve situation, and we don't want to do that again. And I think now we have a better sense of what are the indicators. It wasn't so much in the banking system as it was around, for example, where federal funds is trading relative to the administered rates, and where secured rates are relative to the administered rates, those sorts of things. We will always be watching the banking system for similar signs, though.
Well, is it also because you're not sure exactly how the reserve supply will react once the overnight reverse repo facility, drops nearer at zero?
I think we broadly think that once the overnight repo stabilizes either at zero or close to zero, that as the balance sheet shrinks, we should expect that reserves will decline pretty close to dollar for dollar with that. That's what we think.
God.
Jim
1550.
Young with M&I Market News. I wanted to ask also.
Hello, my name's James Howard. I'm with Washboardjim Retail Traders, and we're curious. Jim called the bottom here on the SPX while you were speaking, and right now he's having conniption fits, and he's just doesn't know what to do. He's bit his tongue twice, and he's pissed his pants. He had to go into the kitchen, grab a shot of vodka, and hit a volume. What would you ask? What would you tell Jim? What would you advise Jim to do right now? Well, I'm not a psychiatrist, but I would tell Jim not to worry, that we have his back. And then I got the message from the big guy this morning, and you should have been relayed the message, and I think you were. Why did you not trust me, Jim? I told you it was rigged. I said we were going to bounce. Today I could have really done it up. I want you to pay real close attention to what happened here today. I called it out. I said, hey, we got a double bottom here, man. I'm going to start loading up. And then it bounced up, and then it pulled back, and I started sweating. I added a little bit more, and then we got back up here to the top, and I said, okay, I'm out. 6 minutes later, my life was destroyed. Double bottom. I know double bottom when I see one. Yeah. $1,550. So that's $4,500 left on that trade. Actually, $4,000. $1,600 in it and $4,000. I could have got more out of it. So I'll just keep trying to bet at it. One of these days I'm going to be shocked. I'm going to say, God darn, man, I just made 120 grand. I feel so stupid with this. I knew it was coming. I wish I could go. I do have this recorded. I might go back and listen to me. Baidu's been holding 100 pretty well. Actually, we broke out that last time we were down here. I haven't looked at it in a while. We broke out. That's right, Jim. You're still the best trader I know. Hello, 520 on the SPY. Well, we got this idiot still talking.
Brendan Peterson with Punchbowl News. I wanted to ask you about central bank digital currency stuff. We've been hearing a lot from Republicans
That's a pretty good name.
in Congress about what the Fed is or isn't doing in a digital dollar. But folks, I know you have said to Congress that you are going to wait for.
He said Punchbowl News. I thought that was a pretty good
Folks
name.
like House Majority Whip Tom Emmer have said that the Fed is either actively researching or hiring personnel to study the implications of the CBDC. Can you give us any clarity on what the Fed is doing right now on a digital dollar?
Sure. So I think we've been pretty transparent on this, but I'll try harder.
I don't know why it's so hard for me to understand people that have hair all over their mouth.
That Congress consider legislation to authorize a digital dollar. And it would take legislation by Congress, signed by the president, to give us the ability to do what we think of as a CBDC, which is really a retail CBDC.
Jim, would you quit acting like a baby?
So we're just a long, long way from that. What we are doing, and I think what every major central bank is doing, is we're trying to stay in the frontiers of what's going on in digital finance. And it has many, many different areas. You know, it has applications.
Disney broke out today.
In the payment system. And so we need
out of the wedge.
The public, we need these issues have become very front burner in the last 5 or 6 years. We need to be knowledgeable about all that. So we actually do have people trying to understand.
I hope they fire your ass. I really do. I would love to sit down and have a beer with you. Jim, I gave you the trade. You knew to take it. The big guy said, go for it. and you sold it out from under us. I know it was rigged. I sat here before he spoke and I said, did Biden talked to him already and had this all rigged? And that the market was going to pop. How do you like my commentary so far? Tell me you're not showing this idiot.
Oh, right now, your biggest issue is you think they should have been moving already to provide relief to the economy. So what's up with stocks then? I mean, we're going to continue rallying with no cuts. I mean, are stocks that dumb? Do equities have no vision of the future that you're describing here? Because I would think if you're right, I mean, stocks would be going and freaking out.
Yeah, so it's interesting. The stock market is so volatile that the amount of movement that's due to kind of the true signals in the market, the fundamental characteristics, is diminished. And quite frankly, it seems like most people are reading this economy purely through a single lens, and that is, well, what's the Fed going to do? What happens to the dot plot? What about this word that changed? So instead of just looking at what the Fed is doing, go to that fundamental data. There's some data that is uncomfortable if you have a narrative of like a no landing narrative. So I do think that there's things that are so obvious to me. Like, why is it that the average savings rate in banks is less than 50 basis points, and with the too big to fail banks having 10 basis points or less a year in a savings account? That money is leaving the banking system, going into money market. That will have a lagged effect and slow down the economy later in 2024. You need to be looking forward. So stuff happens in real time, and it takes a while to work its way through the system.
Sure. Hey, based on your bond market sleuthing of the yield curve that we talk about all the time with you, Today we've got some steepening, a pretty good amount, 10s to 2s widening out. I know you look at other parts of the curve too with the 3-month, but generally there's steepening here because if they're not going to hike or if they're going to cut 3 times, short end drop, long end's opening up. This type of like a steepening, I mean, technically it's a bull steepening. Is that not one of the better ones, Campbell, for the message about the economy?
Yeah. So again, we need to be really careful. So my analysis shows that over the last 8 recessions, inverted yield curve preceded each recession without a false signal. What is less well known is that the yield curve uninverts before the start of each
It's
of
more
the last 4
closely
recessions.
tied to the actual
so
timing.
we need to come out of this, and that doesn't mean happy times ahead. If you look at the data, it's to the contrary. So we need to be careful on that. Now, the yield curve has been inverted for a long time, since November of 22. Does it mean that the indicator is not going to work this time? Well, there's a range of lead time. There was a lead time that was 22 months. So it's too early.
Oh, my name is Richard Nixon. I've come to realize this morning when I was counting to 3, I got that from Jim, he used to be my Secretary of Finance, and he once told me, he says, Jim, if you can, he said, Richard, if you could ever count to 3, you can trade with me. So I'm sitting here and I come in the morning and I say, 1, 2, 3, and I get out at the double top. 1, 2, 3. And then I sit back and I go in there and I have me some grape jam and toast with a little bit of butter, and I say, Richard, can you count to 3? And I say, yes, 1, 2, 3, boom, to the upside. One, two, three. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. Do, 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 do. this morning. This is funny. I just now thought of it. So this morning I'm walking out of my apartment. We got this big dog. I just heard him barking. Big dog. Huge bark. I mean, you could drop a pin and he'd bark. So this little girl comes, I mean, it's, what, 5 in the morning. She goes, little bitty poodle, little bitty dog. I mean, no bigger than a half a pound. And I heard that big barking. You know, she walked by that door, and I looked at her and turned my head and said, man, your dog, that's a loud bark. And she's young. I mean, she's like 10 or 11 years old. Oh, that's not my dog. You know, kind of scared, you know, out of her pants. She knows probably walking by that door at big. And I don't think she got my raw sense of humor there. Somebody have a birthday? Do you have a birthday? You're 26? Let everybody know how old you are. I dare you. I double dare you. Happy birthday to you. Happy birthday to you. Happy birthday, 1, 2, 3. Happy birthday to you. I figured you'd like that. If you can count to 3, you can trade with me. Jim, make that a capital T. You can trade with me. You can count to 3, you can trade with me.
We might end up moving these timelines, these goalposts further back into the year a little bit.
I do. I think that's the most likely result. Obviously, if the data get better by the time of the next meeting, that's what the Fed will be looking at. But I don't expect them. I don't expect them to.
Okay. Thanks for the insight, Randall. It was spring last year. You told us there were going to be no more hikes, so that was a good call then, and we'll take it into account now. Appreciate you very much. Thanks for your time, Randall.
Thank you.
Mr. Quarles is the chairman at Sino Share Group, former vice chair of the Federal Reserve of Supervision. All right, let's check in on where we're at with markets right now. I got Tom here with me in studio. I mean, Russell's up 2.5%. Anybody surprised? I mean, small caps. This is like a gift from the big man, Mr. Powell.
Yeah, the market.
The big guy. That's right.
Move from that 4.6% that they expect by the end of 2024. I was pretty surprised by that. I heard some of his commentary as far as jobs goes. If we start seeing further weakening data in there, remember the unemployment rate went up to 3.9%. If we start getting more layoffs, he mentioned it like 3 or 4 times. I know they asked him a couple questions about it. I think in the back of their minds that they think that the jobs market is really going to start to turn, to flip over here in the spring. He mentioned seasonality as far as the inflationary data. He mentioned that the start of the year is typically, we see more inflation during that period. So maybe it's seasonality. Then he kind of patted himself on the back and said, this is why we didn't make any cuts or say that we were going to make any cuts in late fall into the end of the fourth quarter. But watch that jobs data. I think that's the caveat to if they cut in June or July, because if the data remains the way that it is and the jobs market stays the way that it is, they don't need to cut in June or July, and then maybe they pivot to that only 2 cuts in 2024. So market's liking everything that he said. I wonder about the risk asset flows at this point, where everybody's going in with the S&P 500, Dow at record highs right now. That Russell getting up to a level that it's failed at a couple times. You have to start wondering that will valuations eventually come into play here, where hey, we're getting a little bit frothy here in the equity market. We're at most people's targets for the end of the year right now.
All right, well, we'll see how far we can push it. I mean, that Russell's got to contend with 21. That's where many times it's been rejected. Yeah. So you do have a couple options trades. I want to get into at least a couple of them here.
Yeah,
Boeing. Let's talk about that. It's at 3.5%. Let's just do Boeing. Well, you got the whole
What?
suite base. You got Boeing, and you got Spirit Aerosystems, and you got Delta.
Yeah, travel.
Boeing, though, let's do that, and then let's do Delta.
Yeah, a big turnaround this morning. Pre-market was down over 2% on this news that they're going to cut the gross profit margins. They're going to not deliver as many planes. They're not going to produce as many planes.
They put a price tag on it, basically.
And somebody comes out, guns a-blazing, and says, hey, I'm going to start buying some short-term calls in here because we saw some unusual option activity in the March 28th weekly cycle. Bought over 3,500 of the 195 strike calls. Now, these are really short-dated calls, only 8 days till expiration. They paid an average debit of 75 cents, so that break even of 195.75 over the next week is about 4.5% above the current share price in there. Call volume about double normal daily average volume that we've seen over the last week of trading, which has seen some heavy trading at this point. But this might have been, Oliver, that ripped the Band-Aid off, and I think option traders are positioning for that maybe we've seen the bottom below 180 on the stock for the near term. Anyway, bounced off that level about 175, 176 that had been support in October. So somebody betting for some more upside over the next week here.
Okay. Nice vote of hope and confidence by this person. How generous of them. Did you check to see if they did that from an account with the last name Hanks?
No, I don't believe that was Kevin.
Okay, I just want to make sure. All right, can never be too sure. All right, let's talk Delta.
Yeah.
Your chart's looking pretty good.
7-month highs today.
They don't have Boeing planes. Aren't they one of them don't have any?
They're getting most of their new orders from Airbus. That's true. They do have an order. They do have an order for Boeing planes right now. The Delta, Ed Bastian came out about a week ago during that industrials conference, gave an update. They were the one airline that didn't give a negative update. They kind of stayed in line with their previous outlook from the quarter earlier. So that actually has helped this. You see that, as I mentioned, at 7-month highs today. UBS came out with a note overnight, initiated coverage of it with a buy, $59 price target, bullish on Delta. They've got the best margins in the business. Even though crude oil prices are back above $80 a barrel, jet fuel prices starting to increase, but they've got the best margins also in this space. And we saw some call buyers in here. They've got earnings on the 11th of April, so that'll be a catalyst. We'll get some more clarity on bookings and their margins and the impact to higher jet fuel prices. But they bought 6,000 of the May 46 strike calls in here, paid an average debit of about $1.80. So that break even of 47.80 to the upside over the next 58 days, about 5% above the current share price in there. Call volume, a double normal daily average volume that we've seen over the last week. And you got that earnings event coming up in about 3 weeks.
All right, okay. Yeah, Delta, I mean, they've got the order that they're still waiting on. So I think their fleet is pretty Boeing light, especially, I mean, compared to like Southwest and some others.
Yeah, they pushed back delivery. They don't expect deliveries for like a year out from when they expected them previously. I believe they've got an order for 100 Boeing planes.
Spirit Aerosystems also was bullish, right?
Yeah.
Jump.
Really quick, March 28th weekly options. These are expire in 8 days. Traded about 13,000 of the 40 strike calls. Remember, this Boeing potential takeout, cash and stock might be taking place. But
I tell you, we're killing it. We're killing it. So guys, I want you to go to your wives, say, woman, you get in that kitchen and go in there and cook me up a dinner. Tonight I'm going to sit on the couch and have a beer. And then tomorrow tell me how that goes.
My dad.
Your dad screwed us over. Yes, when he put that window in, he didn't tell us that we had termites. They were there. So he scattered the nest. They went to all the windows after he left. Every new window that we put up, all the frames had to be replaced. All because of your dad. So don't be talking about your dad. By gosh. My dad's at the door. Oh boy. Yeah. Oh, SMCI pulled back to a pivot point right here. Looking real tasty, but still irrational exuberance. We'll be talking about this run for a couple of months, a couple of years. You remember that MSCI run? It ran from $200 all the way up to $1,200 in practically 2 months. Had a 600% increase in 2 months, and people were just loving it. I was the only one yelling, irrational exuberance. It can go down a lot more. Eight months ago, Jim said, when that NVIDIA came out, that people were ranting and raving about NVIDIA like it was the #1 chip ever. Last couple weeks, all of a sudden, we're hearing all kinds of good new news coming out. People building chips just as strong or better, cheaper. If I remember right, Jim said that when this bubble started to pump. So don't fall for it. They'll be bad-mouthing NVIDIA like they did anybody else that was successful in life.
So we've got about next week as we get some data points going into early April that could shift the dynamic.
17 more
but
minutes.
I do think that, given the current expectations that gold is in a position to break through 2,200 here and continue to maintain upward momentum. Also, silver moving up to the highest level since early December, so we're seeing a renewed strength there. And you're seeing the dollar coming under some pressure here, back to 103. So what you would expect to kind of unfold, given the dialogue and the narrative and the expectations going into this announcement today, is pretty much taking place here. You're really seeing it work its way through the equity markets, small caps bouncing back sharply. Some of the names that struggled here going into the announcement as far as selling pressure, not sure how the Chairman Powell was going to, again, enunciate the expectations moving forward, are benefiting from the tone change and certainly realizing some higher price action today.
All right. Gold, silver with it, up 2%. Palladium rocking. But crude oil, the commodity kind of left behind. Maybe it just got all of its strength worked through last week, taking a little breather here.
Yeah, that is an interesting dynamic, Oliver, as you pointed out, that it is backing off today, given what we're seeing unfold in other parts of the market. But it could be a bit of, the sense that the economy is going to continue to move along, that maybe we're not going to see the cut as soon as what the market anticipated. Maybe that was the catalyst for why crude is coming off a little bit, the consumer is plateauing a little bit here, still pretty strong, but I guess they're pushing the idea of cuts further out, even though the expectations are still for 3 cuts, might be one of the factors why we're seeing crude coming under some selling pressure, plus the fact that we are here pushing up to multi-month highs, so it's not surprising to see it give up a little ground, as it was pretty much on its multi-month highs going into this announcement.
Okay. All right, WTI having a little bit of a break today while we risk on into other places. Bitcoin moving too. I mean, it seems like we should expect the general recent leaders to lead still. You know, if we expect, and then we kind of just pepper on the Russell and stuff.
Yeah, it's a salt and pepper kind of market. That's right. I love it, Oliver. I like where you're going with that one. Yeah, push it real good. So it is definitely, yeah, we're seeing, you know, price appreciation here in several parts of the market that are continuing to realize, in many cases, all-time highs, or if not near all-time highs, and that's a result of really steady as she goes. Rates are still being priced in, but the economy and all things considered are still maintaining what would, I think, is equilibrium, as he pointed out. I mean, that's the one word I think that he used in his press conference, is that you're seeing the market, you know, certain parts of the economy coming back into balance.
All right. Good stuff. Thanks, Dan. Appreciate the comment. All right. Nice look here. Outside of stocks, what else is moving? Dan Demian, KKM Financial. Let's go back into the AI trade for a moment. Wow, this is the longest we've gone without talking about artificial intelligence in weeks. Rita Young with us, our senior markets correspondent for Developing Story. Check back in on that IPO that's got some AI connections.
Yeah, don't worry. We'll make up for the AI chatter right now. But right now, Wall Street's welcoming the newest member of the NASDAQ with open arms today. We're talking about Astera Labs, which debuted on the NASDAQ today, this afternoon, and shares are up more than 60% right now, more than 65%. They're trading at close to $60 a share, and that's significantly higher than its IPO price of $36 a share. And market cap now is above $9 million. And Astera had marketed shares between $32 and $34, and that was a boost.
Oh, I can't take it.
Now, this company develops those semiconductor-based connectivity solutions. It wants to be the go-between when it comes to building out that technology to connect and communicate with other aspects of the data center. They also want to make AI and machine learning in the cloud mainstream. So it's pretty cool to understand how these different systems, they play in the AI ecosystem. And also,
not bad IPO.
I want to mention those briefly because
20 million shares.
The company remains unprofitable.
I like that.
They posted a net loss in 2023, but that net loss was significantly better than the net loss in 2022. But they do have this huge concentration risk, Oliver. They said that somewhere around 70% of its revenue last year came from its top 3 customers, which is a significant risk. So they've got to diversify, find some other customers, and become profitable, obviously.
Yeah, a lot ahead of them, but I guess in theory the IPO, raise some cash, sell some shares, and get the R&D going, the sales going, get some new customers. And hey, adding it into the list of companies to watch now, connected to the hardware and the AI trade. Thanks, Renita. Solid little start here for Astera Labs, ALAB. When we come back, big picture discussion, taking us into the bell. How does the Fed set the stage for the Bank of England tomorrow? And more will be up for discussion when we come back. Stocks in great shape, heading into the last 10 minutes.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because
recent developers' confidence arise about Micron's ability to balance AI growth.
MU earnings.
Micron shares have risen in lockstep with NVIDIA over the last year since it's considered an AI play.
Get ready for a pop and a drop to the 200 on the 1 hour, 4 hour,
and that particular memory is used in AI systems. But the revenue, though, is still expected to be modest in the first half of this year, with much of the real contribution in Q4 or later. Micron is still exposed to cyclical businesses like PCs, smartphones, enterprise, cloud server markets. All of these markets are still trying to improve. Marvell and Broadcom earnings posted underwhelming outlooks just 2 weeks ago and saw their shares sell off when investors decided they weren't near-term AI plays because they were hit by that cyclical business. For all that AI confidence to remain, Micron investors will have to see that AI memory is a growing percentage of total revenue and a boost to gross margins.
Yeah, I mean, Christina, this is sort of reminiscent of even in past cycles before the AI obsession, where Micron kept trying to liberate itself from sort of the commodity memory chip, profile that they've had forever.
If I could say, almost every single chip maker out there and management loves to deny the cyclical nature of their business, and with AI right now, that's changing the narrative a little bit, but not really, because we're still seeing it with the analog makers, we're still seeing it within the auto sector, we're still seeing the enterprise market being hit, cloud less so. So it's just a matter of just admitting that there is a cyclical nature to this business, even with AI at play.
Right. Well, thanks very much, Christina. We'll see what the numbers give us. Diana, certainly home builders among the groups rallying on this sort of perceived dovish Fed. What about KB Home after the close?
Well, this is a tricky quarter because mortgage rates came down and then went back up again, and KB is focused on the entry-level buyer. They do this build-to-order product that tries to stay budget-friendly. So, you know, when you look at mortgage rates and the movements there, they're particularly sensitive. That said, all the builders have been buying down rates to get buyers in. The question is, how much is that hitting builder margins and how aggressive do they have to get? Now, we saw Lennar fairly aggressive in their earnings report last week in the buy downs. They're more of a move-up builder. Toll, being luxury, does much less of that. So KB will be on the other side of that. So that said, we also saw housing starts bump up significantly in February. So likely slower home deliveries in this past quarter, but improved new orders.
So I'm going to lead in with some of these spare
on current demand.
Hopefully,
we are going into this, actually in it already, the very important spring market.
Absolutely. Here we are. Thank you, Diana. So, Josh, you know, this group has been riding on the demographic and supply constraint story for a while. Yeah. Unclear if anything is going to kind of disturb that in the short term, although you have to believe existing home inventory is going to start to pick up at some point.
Yes. My friend Logan Motoshami had been telling me since 2021, the thing about housing is that borrowing costs will not overcome the fact that there just aren't enough houses, and it's one of the few things in the financial world the Fed can't influence even if it tries. They cannot get home builders to come rush into the breach when there aren't enough homes. They can't print houses, and that phenomenon remains with us. I don't see it changing anytime soon. The housing market doesn't move on a dime. It doesn't change course very often. And so if that's the situation that we're in, I think we're just going to continue to see the stickiness of inflation be in this shelter component. And it won't necessarily...
Well, I mentioned MU yesterday, and I look at it now, I just go, Jim, you knew earnings were going to be coming. Why?
Housing activity in general, curl up off the low. It's now a net contributor again. We had that recession. You know, Powell got a question in the press conference about, hey, you know, you're still waiting for home prices to come down? Because that's not, you know, you can't really use that lever. That doesn't exist.
Yeah, if you talk to financial advisors, you talk to people in wealth management, which is where I live, what our clients are doing right now is they are helping the next generation bear the burden of these higher shelter costs. They are literally making the down payments for their adult children. It's not
CCL.
It's that this is the environment we're in.
I mentioned that one yesterday.
In some of these cities in the Case-Shiller composite, some of these 20 major metropolitan areas, you just literally can't live if you're not getting some kind of help to buy that first home. Starter homes, they're unavailable. So again, it comes back to, is there money available? Yes, there is. That's what's supporting the housing market. The housing market is not reliant, fortunately, on current mortgage rates coming down.
Tons of cash buyers,
all over the place. So it's just the reality of the situation that we're in.
For now it is. Let's get to Leslie. Just looking ahead to the Reddit pricing. Of course, a totally different company, Astera Labs. Leslie, huge debut, up 69% after pricing last night.
Yeah, so hopefully, I mean, that doesn't hurt, right? Because if you have some of the buy side that feels good about, what happened with this technology IPO today, then, does that bode well for Reddit? It doesn't hurt. I am hearing, though, that Reddit is aiming to price at the higher end of the range it had been marketing, although nothing is official until the final pricing call after the bell. If so, that implies a fully diluted valuation of $6.4 billion, an offering size of $748 million. Pricing an IPO is always more of an art than a science, but this one may have a few competing interests that the company and its advisors need to balance. On the sell side, shares are held by employees and executives. That comprises about 30% of the amount sold in the offering, so that group would like to see the deal price higher, of course. But then 8% of the offering is reserved for eligible users and moderators on the platform and certain directors and friends and family of employees. So you wouldn't want to price too high and risk a day one flop that could upset that group. So definitely an interesting balance that they have to strike today.
Yeah, as you mentioned, always tricky. On the other hand, you also have the uphill battle of course, this is not a young company, hasn't been profitable as you've been pointing out, and also just anything that's in social media ad supported that is not basically Meta, Google, or maybe Amazon has been a tough sell for the stock market.
Yeah, and their top line growth on the ad side is, for revenue is similar to that of the big tech giants. However, they're operating in this space, social media in general. It comes with, regulatory concerns. There's also just the overall monetization backlash that we saw last year. That has some investors kind of wondering, how they strike that balance with regard to keeping users while making sure that they also generate money as a public company. So it'll be interesting to see kind of what happens. Of course, this is the first social media IPO that we've seen since 2019. So pre-pandemic, it's been a big change since then.
Yeah, plenty has happened. Leslie, thanks a lot. So Josh, kind of an oddball deal in some ways.
Yeah, this is going to be a fun one. This is going to be one of those where we're all going to put the ticker on our screens because you just know there's going to be drama. What sticks out to me here is just the fact that the IPO calendar is back to the point where we can do a Reddit. Whether you like it or not, 25 IPOs year to date, 14% ahead of where we were a year ago. This is a company that's lost money for 20 years, a cumulative 771 million or so. Got a CEO who paid himself 193 million last year. Of course, most of that is stock. So if the stock is a flop on the IPO, it won't exactly be that number. But it's going to be controversial. In their risk factors, they actually state Wall Street Bets, which is probably their most visible community, is one of their biggest risk factors. Normally, you wouldn't expect to see a company say their own users or customers are a big risk to them. But that's the nature of this thing, and I can't wait to see when it comes out how it's received.
Yeah, I mean, do advertisers want to interact with all that flow on Reddit? I mean, that's a bigger picture kind of.
It reminds me more of
Yeah, get on down. CCL yesterday, I mentioned it off the 21. Looking pretty good. They've really made a lot of changes, these cruising companies. Belch. Well, that's it. Not a bad day. Not a bad day. Agree? I'm going to leave you with Pablo. Pablo's going to be left alone with some spare ribs.
Goodbye, I'll be back in a minute. Have faith in Pablo. So I'm going to leave him with some of these spare ribs And hopefully, I'm going to leave the room hoping that he's going to leave them and wait for me to come back. So we're going to test it out. I just had something. It's crazy good, so I kind of don't blame him. But Pablo, you wait. Look, you wait, okay? I'm going to leave the room. You be a good boy. You wait. Goodbye. I'll be back in a minute. Come on, Pablo! No! I really thought you was gonna wait. No, stop. You're bad. You're bad. You've let me down. Got another technique. Pablo. Look, wait. No, get your paw down. You wait. No, get your paw down. Wait. Look. Luigi. Wait. Why are you like this? Honestly, why are you like this? I was gonna... Oh, you're rubbish.
You're rubbish, Pablo. Okay, everybody have a great day. This is Wishy Washy Washboard, the singing day trader. MU, great earnings. Knew they'd be. I'm gonna get on out of here.